relative to Ford. It briefly surpassed Ford. Keep in mind that Nikola has no products, has no revenue, and at this point, they're just going to show their first design for a pickup a little bit later on this month. To stop investors from piling into this stock, and again, the market cap just about to Ford's level, not quite there at this point. Speaking of Ford, today the company has finalized its agreement with Volkswagen when it comes to the development of autonomous and electric vehicles.
Really?
So Volkswagen and Ford, and they first announced the
Is
plans
ACR
to
down right now?
collaborate, form a partnership. This is not a merger, but this is a partnership. They first announced this a year ago. So what they're going to be doing is partnering on electric and commercial vehicles. By the time they're all done, they hope to build or work together on the production of 8 million vehicles over the product portfolio lifeline over the next several years. So a lot happening when it comes to electric vehicles. We're going to be talking about this.
There
Ford
is
COO
room for
Jim Farley. Do not want to
competition.
miss this exclusive. He's currently talking with analysts as part of an investor conference going on right now. As soon as he's done with that, he'll join us exclusively, and that's coming up in about a half an hour on Squawk on the Street. Guys, back to you.
Okay. Hey, thank you for that. Appreciate it. Meantime, when we return, we'll get Jim Cramer's first take on the trading day ahead. He may have some comments about Elon Musk as well.
Let's spell it out. If you do not think there's room for competition and growth for multiple companies in the industry, you're crazy. Like, straight up, bro.
For the first time ever. Stay tuned. Squawk returns.
Straight the fuck up, bro. Now, what was my plan over here? Check back in 30 minutes, maintenance. Got it. Till 9 a.m. Got it. That works. Fair enough. Understood, understood. Exit America's card room. Look at people already liking it. Like, you're fucking nuts. You know, I'd say that if competition have spine, let them in. What does that even mean, dude? English is not your first language, is it? No, it's not. Tokyo, got it. Expanse fan CTO of a small company in Tokyo. Small company in Tokyo. In Tokyo. We have a small company in Tokyo. What's on the notepad? Oh, shit. Scott coming in doing the deep dive right away. He's like, what's on that notepad, bruh? I did a lot of research on ETFs over the weekend and how we're going to keep this money that we've now made. You know what I mean? Like, I'm going to day trade with a percentage of it. I think we're going to do like 70% is going to go into these ETFs over here. 30% we're going to day trade with. You know what I mean? We chose 6 ETFs here. We searched what their holdings are on ETF.com. This is a great way to look at all the holdings of what ETFs have. So, like, momentum is Apple, Amazon, Microsoft, Johnson & Johnson, Nvidia. It's growth. It's momentum. It's these top 3 that say quarterly up here. These are growth ETFs. And these are cash flow ETFs. Monthly dividend payers for the bottom 3. These top 2 still, they're rated from most growth to least growth down here. So momentum, obviously MTUM, momentum. QQQ or VUG, what do you mean? MTUM, baby. MTUM, stream girl. How you doing this morning? MTUM, Dividend Grow, DGrow, and VV, these all kick the shit out of the SPY. You take the SPY, the general S&P 500, and you go, boom, and punt that bitch. Ow, I just kicked the chair over there, son of a bitch. Okay? And then for even slower dividend growth monthly pairs for that cash flow. You want VSDA, SPHD, and QYLD. And as we get older, as we age, we start moving from momentum to cash flow. But right now we're young. We need to be deep into that growth. You know what I'm saying? Dividend growth and dividends are mutually exclusive. So this one is, it follows dividend growers, which also has growth to it, which is interesting. Because anybody growing their dividend is most likely growing their sales. I think it cuts out the top, too. Like if you're growing your dividend too fast or something. I forget what it is. We could look it up over here if we wanted to. Morning, Rand. Your name is Rand, right? Yes, it is Rand. I don't care either. What's good? How you doing? How you doing this morning? L1s for twins out there? Let's go. Necron, let's out there. Damn. Shit is growing. Shit is growing. What do I have here? I have like 2 of these. Let me get rid of this one. Alright. I don't need 2 of these. I keep buying Apple. Nothing wrong with that. Keeping an eye on VRM. We got some VRM yesterday. No. Did all these quit working? What are you doing? Respond. We got some VRM yesterday. 8 shares. Just a little nibble here. Should have gotten more. We're up. We got it at close. What's your opinion on what's the account up to now? We hit 17,000, but right now we're just shy of 16,000 this morning with our losses this morning. Looking okay in pre-market. We need some help. We need Oxy and American Airlines to continue their run. I'm not really a fan of Macy's. I mean, retail stores are just taking it on the fucking chin right now. Isn't that? No, M is Is M Macy's? M is Macy's. I don't really want to be in any retail. I'm not a fan of retail stores. What is BILI up 1%? Wonder if the short squeeze are in. What is that? They're up 10%. They're gonna go up 10 to 15% if it does. M is just Robinhood buyers and HFTs. I'm out. BeLi, the Chinese YouTube, I'm super out. Did you see this Duo shit, dude? Yo, Duo to 130, then it closed, it fell back down to 50. Then this morning it opened up and hit 130, and we're back down to 60. Now, if this is some crazy China shit right here. This is some Chinese real estate company. Dude, it was at $10 yesterday. It went from $10 to 100 and what was it? 124. It literally went up 1,240%. Genus. You guys love the Genus. Huge fans of the Genus. I don't know anything about it. It seems like, isn't it some like kids online, like it's like Nickelodeon, only it's online or something like that? Are these Robinhood stock names? Robinhood is going deep on these. Like, I am fucking out. I am ouchia. I would like it though if I didn't get in at the top of the airlines. That would be kind of nice. Maybe I did. Don't talk in caps. What's good? All I know is the dude on the other stream seemed to like that they had options. Oh god. Like, I'm fine riding one of their buying frenzies and selling it, but I don't want to hold their number 1 picks. Hell no. Hell no. I agree with that. Energy financial sector lead June gains, huh? You gonna keep that up? Or we gonna keep that up? We need energy.
That's right, Joe. I mean, look, the market I would say at the index level, it is fully valued right now. I don't think there's a ton of upside in the near term at the index level. But what's more interesting to us is this rotation that's going on.
I'm selling pretty much everything up 30% year to date. Yeah.
Obviously, everybody knows that.
You think we're gonna take a fat nosedive here, huh?
Was probably the month of April.
You think this is the beginning of a long nosedive that we're about to have?
Bear markets end with recessions. That's what happened, and that's why we got more bullish. And if you think about, kind of what's gone on since then, we've gotten more visibility on
XLF, XLE, and OIH, XOP took it on the chin the last few days.
Those are all supportive factors.
Dude,
I'm horror. We still have this huge divergence between kind of late cycle defensively oriented securities.
What dates will the Fed inject the market? They're going to kick in tomorrow. Thursday, we'll have another jobless number. The Fed will turn on the printer. It's going to be tight. It's going to be super tight. Watch. Happy with my 30%. Don't want FOMO and lose everything.
I mean, I wonder what
I feel that.
looks like. And that, you guys never get to rest. You get 1 year end target, and sooner or later that year ends, and then you got another year end target. It seems like you just said, I think, the overall averages may be fully valued, or we're going to be looking for some backing and filling. Do you foresee good economic growth in 2021? Will we get back to something close to normal?
Fearless Patrick says, I'm deep in Oxy. So am I, bro. We have way too much American Airlines and Oxy. I keep doing this. I keep levering too hard into shit. Not giving up, just waiting. That includes 80% losses in 2021. 2001. Oh, shit. If I go back to turning 18, I'm up 5,888%. Holy shit. How about some Occidental Petroleum? Sir, your money's in there with us. Do you think oil price will rise? I was in Oxy at 19, got out at 20 like a dumbass. Really? We're about to see, dude. I hope this was like a just kind of a consolidation point after a huge run up on the way continuing.
Where are you for the S&P?
You think oil prices will rise? I definitely think they will. I mean, we're not just gonna not use very little forever. Like, it's the summertime now. People are gonna be driving more and shit. In the summer, we normally use more oil already.
Yeah, I mean, I think, look,
I accidentally held TQQ like 6 months by accident, thinking it was QQQ and got lucky. Holy shit. More AC, exactly. More gas.
And yes, I'm very much of the view we will get to 200 at some point. I don't think it'll be in 2021.
I think more AC, you use electricity. Heating in the winter, though, everybody uses oil.
What's the composition of those earnings?
Everybody uses gas.
Going to be very narrow, like it has been. And
the way shit has been, I'm ready for VRM to go to 100.
or is it going to be more broad?
More driving around for sure. I logged in, I was up 135% or something. I was like, what the fuck? That's not QQQ. Win some, you lose some. Holy shit.
I think it's more the latter. That's a healthier environment, quite frankly, for
5 things to know this morning.
And we got the Fed talking today, so it all depends on how long
Wall Street step for higher open ahead of Fed statement, Powell News Conference, NASDAQ Composites up there. Starbucks is off more than 2% after they said they lost a fuck ton of money.
That was a good call from down in the low 2000s on the S&P. Here we are.
I own my house, Sir Money. I mean, I have a mortgage, but I own it. You never really own your house. Even when your mortgage is paid off, you're renting from the government, dude. If you don't pay your property tax, they take your shit and kick you out of your rental land. You know? Let's not get it twisted or misconstrued. We know what the fuck this is. We know what time it is out here. Government run shit.
Usually we don't have time for that, but I skipped the rest of the futures just so we could.
Looks like a buying opportunity. I was thinking that.
Say see you tomorrow, and thank you.
Thinking that. Like, they're not going anywhere.
Rock on Street's coming up right now.
Anything with lots of outdoor seating is going to kick Starbucks ass, but can't you just order online and pick up your Starbucks? Like, if you want coffee, you're going to get your motherfucking coffee, right?
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer live from separate locations. Faber has the morning off.
I don't know about that. Like, if you want restaurants, I like fast food. Anything that delivers or drives through, dude, Wendy's. What is Chipotle?
Profile downgrades. Oil 38, 10-year 80 basis points, Jim. But
CXM or something? CMX?
whether it's medical, some of these
Chipotle
states
CMG,
hosting some of the highest
CMG,
case
Chipotle
loads
Mexican
since
Grill.
the pandemic began. But then again, optimism about the recovery at the same time.
Right. Look, I think they were all kind of thrown in. Governor
Yum Brands.
yesterday in New Jersey suddenly get the
You options on your opinion on Workhorse. What's Workhorse? I don't know what it is. I have no idea. 20 cars there today in town, less than 50K. Wait, what? 20 cars there today in town of less than 50K. What does that mean? Make the market decentralized. How many darn women go to DD? Dunkin' Donuts? Oh, dude. My fiance loves Dunkin' Donuts.
And the rest of the country seems like, I don't know.
And my mom.
Is it going to be Italy? Is it going to be Spain?
People love the Dunkin'.
I don't think it is. I think it's going to be better. But I got to tell you, Carl, the stuff that's being bought is not insane.
Dunkin's like known as like some old school like shitty donut shop to the market. They don't get it. Is anyone else holding Expo and crying this morning? Hell no. Why would anybody own that fucking pump and dump? I tried to tell you. I tried to tell people 1,000,000 times. I'm laughing. I'm laughing, Levi the Gazelle. I try to tell people 1,000,000 times that's the dumbest shit, dude. They're gonna do testing. Think of every Expo you've seen in a fucking airport, dude. They're in a retail space past security. They can't test you for COVID past security. It doesn't even work.
Even their marketing, Jim.
It doesn't even work. It was total pump and dump.
Young millennials to invest.
Total pump and dump.
It's not FOMO. The phrase they use is YOLO. You only live once.
Yeah, YOLO is
Expo.
that's not an investment strategy.
Get out of there. What's Expo? They're the spa. Like when you go to an airport, they're like the shitty massage parlor in the airport.
They traded 2 days ago, and they're only 140.
Take the L. Get out of it. Take the L. Move on to other growth.
Yesterday, there's a lot of people.
Yeah, like, I would never invest in that. I would also never, ever go to Expo. Stocks are low for a reason always, yeah. An airline massage parlor trying to do COVID testing.
I think that he is someone who throws in the towel.
The airports are like, yeah, just pay your fucking rent. Just pay your rent. Yeah, you could do COVID testing. Just pay your fucking rent.
In that article saying you buy stocks, they go up, and
imagine the people who shorted that news. Seriously, making bank. That's what I should have done. Should have shorted Express
he has a
Style.
great time. I love him on sports. He's enjoying himself. But remember, these are stocks. And stocks don't do exactly what you think they do, which is that the more enthusiasm you have does not mean they go up. It can mean they
Denver
go up.
Airport's a strange place. There's a lot of strange shit in the Denver Airport. I lived there for 5 years. I used to fly in and out of that airport every couple weeks.
Younger generation of investors.
Lots of interesting shit in the Denver Airport.
And Carl and yesterday, Jim, economic
It's the Illuminati.
joins Stan and says,
I don't know about that. It's just a regular working airport.
in a lot of ways.
Look, the Graybeards got you out.
It does have all of that, Stream Girl. It does have all of that. And some weird bucking bronco that's blue with red eyes.
Sees is he thought that Warren Buffett capitulated and sold the airlines at the bottom and created.
That was my conspiracy fuel when I was a kid. Dude, there are hella conspiracies about the Denver airport. Tons of fucking conspiracies about that airport. And let me tell you, I've spent so much fucking time around that airport, they're all fake. They're all fake. I've been through almost every inch of that motherfucking airport. I've spent hours upon hours upon hours in there. Trust. I've driven up and around it. I've fucking looped that bitch so many fucking times. I would listen to Art Bell and be like, aliens at DIA, yo. Yeah, but did you see the basement? Trust. Fuck, I missed Art Bell. I don't even know who Art Bell is. They tried to say they didn't need to build the airport and all that. Yeah, and it's on like this huge chunk of land out there, but it's actually working out really nicely, dude. Now they're developing all around it. They're making the airport a hub. Denver started to realize a decade ago now, over a decade ago, that airports were the hub of conventions. So they're building convention centers, hotels, office space right around the airport. They also extended the high-speed rail train from downtown all the way to the fucking airport. So now you don't need to rent a car to go downtown. You can literally fly into Denver
and then it's going to
hop on a fucking train and go straight to downtown. And soon that's going to take you all the way to Fort Collins, and down south. And I think they're trying to get it out to the mountains. But locals in Colorado fight the trains going to the mountains. Nobody wants public transportation to go to the mountains because they don't want to wait for, and this is kind of horrible to say, but they don't want to wait for the fucking homeless and drug addicts and like people like that to get up the hill to start begging like at Vail Resorts and shit like that. Because they don't want to pay to have to get them back, I guess? I don't know. Bro, you don't know who Art Bell is? I do not know who Art Bell is. Art Bell.
Tesla Semi to volume production.
Oh, Jesus. He's an American broadcast author. He's the founder of the original host of the Paranormal Theme radio program Coast to Coast AM.
In Robinhood. They're running. Running it means they're taking a stock from 5 to 7. It was not Ford's numbers. It was the game that people play.
Soul Reaper, what's good?
And liquidate them. You get in first. That's the bag. You gun. You say Ford's good, and then you liquidate into the people who were late. And BGL is an old style from 1980s, and BGL's back. And that Ford was going up. We may hear that Ford's doing better.
Federal Reserve and low interest rates to negative? I don't know about that. That'd be crazy. Smoke all night and talk about Bigfoot and the moon and whatever. Oh my god, I've probably listened to some of this shit. I used to manage a band, dude, and our keyboard player was a weird dude, and whenever it was his shift to drive the van, we would be up listening to the weirdest motherfucking shit about aliens and people calling in about aliens and fucking all types of just fucking conspiracy theory type shit, dude. That's Art Bell. Oh my god. It was on AM. It was on an AM radio station for sure. He would listen to this dude every time it was his time to drive, and we would get so fucking weak and make fun of whatever stories were on. Like, we would all just get so fucking weak in the van. Like, everybody would be asleep, but slowly, like, as one person woke up and, like, fucking heard this fucking raging ass story about getting abducted and aliens probing their ass or whatever the fuck it was, we would start, like, geeking. And then, like, another member would wake up and we would just be like, what the fuck are we listening to, Marty? Like, turn this shit off, Marty. Like, what is this? Poor Marty. Marty used to get the most of it. Most news say that Artie was an Art Bell fan. I'm about to call him right now on stream and be like, is Art Bell the dude we used to listen to in the fucking van all the time? Like, do you know who Art Bell is? He's gonna be like, yeah! I fucking loved Art Bell! Call him? You want me to fucking call him? Let's fucking call Marty, dude. Is that who the fuck we were listening to this whole fucking time? Oh, what's he saying about American Airlines?
That's what it takes. Because the government is absent.
Yeah, that's what we're trying to do right now, Jim. I mean, you mentioned airlines. Certainly, J.P. Morgan has a corresponding view when it comes to JetBlue and UAL downgrades today.
Your call has been forwarded to an automated voice messaging system.
He's not even up yet. He's probably at work. He's probably at work.
The cruise lines have taken on a huge amount of debt, but they haven't had a huge number of bookings at prices that they used to have. These planes are flying. There's a fantastic article in the New York Times about flying from Germany, being one of the few people on the plane. And yet they gun, when I say gun, remember, bag them, gun them, liquidated.
Pre-market doesn't look for me.
Or the people who are early, if you want to
Watching Art Bell episode pre-market.
Find that the game of musical chairs is over.
I'm not watching the fucking Art Bell in here. Marty's like, they're going to explain the invisible ray after the commercials. Dude, he's an engineer too. That's exactly. God damn it.
and they're not the only downgrades today either.
Fuck. Oh my god, that's definitely who we were
RBC
listening
takes it
to.
Sell. Micron today, Baird on Cisco.
I'd bet money
Do
on
you
it.
see this sort of gathering steam?
Yeah, but that downgrade was intriguing because what they were saying it's
In the middle of the
it's
fucking
obviously
night.
better than the rest. It's time to rotate into lesser
Best
names.
5G
I
stock?
disagree with that. I think
AMT?
Mike Wirth, the CEO of Chevron,
American
introduced
Tower?
the company as if it's
Verizon?
a Wildcat company.
VZ?
Compare that to the late end
Also
with
dividend
Fred
pairs.
Orban
Both of them
McClendon,
quality dividend pairs.
while he was
I never
actually
believe any of it,
more of
but
a
it was fun.
business type of
That
guy.
guy RJ, thank you for the
Church
follow.
expected the great Wildcat company, and
Really
that was
big and
it.
trying to beat out the rain again.
I
Good
thought the
luck.
Chevron
Let's go,
piece
L months
was,
for twins, man. Have a good one out there,
some
dude.
awesome
I
in the
appreciate you,
sense
brother.
that
You
don't
already
put out
know.
saying
My
you should
dude.
sell Chevron when it is
I'm
the
still holding
best
either way. It
oil
won't get worse than it
company.
is.
It also compared
Fearless
to some
Patrick.
international companies that was
You'll
Vail.
never hold these
Not
shitty
that
stocks,
good.
Rand.
I felt not that good.
I'm
didn't
fucking
that
holding
downgrade.
them.
I don't like to downgrade great stocks. And Chevron, I don't like this energy stocks. I think that their time is going away. The people ultimately from Robinhood will be running big money, and they won't buy Chevron. But right now, Chevron and oil are here to stay, and you don't sell that. That's the highest quality there is.
You don't sell Chevron.
All right, Chevron right at 100.
My favorite episode, some caller called in Art Belly was a senator in his timeline, and the Confederate States won the Civil War. Oh my god. I'm at good 5G and AI stock. I can't see you waiting 120 days for a dividend. No, it's hard. Same. Solar Reaper, I just have terrible self-control. Plus, it comes out of the stock price and you get taxed, so it's not the best necessarily. What's good, I'm around her? How you doing? I heard the stock market killed it yesterday. It did all right for everybody but me. I'm around her. Slow and steady, though. Slow and steady. Is ACR up now? We're gonna get destroyed today, aren't we? Or is Kramer scaring everybody out? It's not up yet. Is Kramer scaring everybody out of the airlines and oil stocks before they go up? Or am I fucked? Why you gotta do that to me, man? He spoke, dude, and killed it. We were on a tear. Kramer spoke and fucking killed it. That's like literally what just happened there. Oxy. Kramer spoke. We were on a fucking tear. Kramer opened his big fat fucking mouth, dude. I had to fuck it up. Do you smoke pure or with tobacco? Just cannabis. I don't mix with tobacco. You're not fucked, but it just might not start going up for a few days. The host on Bloomberg gives better advice than Kramer, just by the questions they ask. Kramer always goes against whatever the sentiment is. He's like an actor. He's like an actor. Sometimes he goes against, sometimes he goes for. Like, sometimes on down days, he's all like, meh, meh. You know, like, he, like, over-expresses everything. He'll just be like, is AAL really worth having X market cap when Sandoz has X market cap? And they're like, no. Like, totally different. Pure all the way. What's Oxy at now? Hard to smoke inside with tobacco. Yeah, hell no. No tobacco inside. I only switched to carts a few years ago. That's what's up. He is dangerous to... I love flour too much. He is dangerous to watch, in my opinion. Very true. You can tell he holds QQQ and has a hedge fund.
Project that is not a project, but something that will overhaul the system. I get infrastructure that allows for vocational training and technology.
Look at the shit he talked. Brought us back to 22. Shut your mouth, Kramer. You shut that mouth, sir.
That then helps me create more wealth, which goes into the community. So there are a number of tangible things that can occur that we can invest in.
City's Ray McGuire there, Jim. I know you tweeted
Stop
about it as he
that,
was on Squawk
Kramer. You
this morning.
fucking
And the key
stop
word there
that.
is tangible. In terms
Damn,
of
he
the
just shat on
solutions
the
that we're now hearing
airlines.
from some of these executives.
No.
Right. Ray's great friend of
No,
mine. He
not
was in
American
my,
Airlines. I don't
law
know if I
school
want
class.
to ride that down.
Candidly, the smartest kind of law school class, as far as I can tell. He was
God.
remember, he was
Oh
going
my
from
God, this is
he was
gonna
going
be
from law
painful,
to
isn't it?
JD. He was doing the JD MBA, which I always thought was about Glenn Hutchins too. He was on a lot, and he was just at a different level.
If you want stock picks from Kramer, just pay attention to what he doesn't diss. If something deserves to be down and he doesn't say anything, he likes that stock a lot.
And we got to change.
George Neri and Ian Plunter, who? Any thoughts on the new Tesla stock for battery-operated 18-wheelers? What do you mean the new Tesla stock? Do you want Tesla? Or do you want Nikola? They're two different companies.
I've heard it, and I say to myself,
Tesla?
okay, I've heard it.
NKLA. I like both. I mean, I don't like NKLA up here. We wrote it up, though, so.
Story about his family, and we got to get our act together.
No, long-term holds, I let them ride no matter what. Plus Slurpee, I'm here every day watching. I don't like putting in stop losses because you're setting an order that locks in losses. You know what I mean?
We will talk to the Ford COO about
And I pay attention, so there's no need for that.
VW and what that means for the auto industry on a very busy Wednesday with the Fed decision this afternoon.
Set alerts, not stops, exactly. He said he's ramping up, I mean, it's okay to own. I would rather own momentum. This ETF has Tesla in it. I'd rather own QQQ or something like that than directly buying into Tesla that doesn't pay a dividend. You know what I mean? Dude, don't do song requests that way. No, that shit just adds crap to chat. It's not even the right fucking video. I'll make an IPO named Elon and say, I'm taking pre-orders on electric planes. Think I will print. XD less than 3, you'll be a billionaire. Multiple billionaire. I'm not listening to that fucking episode, dude. We're past that now. I saw that duo is running again. Oh, Jesus. They have it marked closed at 47. NIO, the poor man's Tesla. Damn, this thing's raging. Why do you have to fucking murk me in American Airlines like that? That was some bullshit. It's like Jim Cramer watches the stream and said, I'm about to fucking just shit on Rand Corp. Watch this, dude. Watch this. I'm about to take a dump on Rand Corp. 1 to 3 cents ADR fees for a $4 stock. Yeah. Gotta close the stream for a bit, man. Gotta do some work. No worries. I don't care either. We appreciate you.
Morning, Phil.
Good morning, Carl.
Get that work done, baby.
Jim, lots to talk about, including this deal with Volkswagen that you guys finalized this morning. Let's start first off with the status check. How do things stand in terms of ramping up production?
Status check. Can we get a status check? Can we get a status check out here? Can we get a status check?
Good morning, Phil. Good morning, Phil. We're seeing great, very strong demand. We have for more than a month now. Actually, some of our model products on retail were up year over year, like F-150. So very strong demand. On production, we're adding second and third shifts now. We'll be.
Dude, if I can, I would love to get to the point where I can join you on stream. One day, dude. One day, dude. We're gonna do a meet and greet one day in Vegas. Trust. Or maybe at one of these Twitch cons or something like that. Let's go DPW. What is DPW?
All-electric Mustang coming out later this year. How
DPW Holdings. What the fuck is this?
In terms of your product portfolio.
Not much, but
What the fuck is DPW Holdings?
My Bronco shirt on today.
You people got all these fucking penny stocks to just tempt. You guys are like the fucking temptress. You know what I mean? Like, you are evil. Chat is the devil, dude. Just the devil temptress out there. Always tempting. Always fucking trying to hand you that apple. Always trying to, you know, try and fucking coax you in. Coax you in. You know what I'm saying? I just don't.
So we don't see any delays to the launch at all.
Who are looking at the top 10 pre-market movers? That's the #1 pre-market mover.
During the break, our engineers and supply team made really good.
People are like, "Oh hell yeah, let's ride the train.
The F-150.
Let's ride the train."
Bronco coming, as you said, and we also have a new
Until it
small
fucking doesn't end well.
utility
Just
coming.
buy the #1 mover every day.
So, Jim, when does the Ford restructuring take?
I mean, if you get up and do that at 5 a.m. right away,
We're
that
sitting there
might
saying,
work.
Ford's not moving fast enough. This seems
That'd
to
be
a
funny as
perpetual
hell.
restructuring that's been going on
Like,
for
if
the
you
last
got up
couple
at
of
5
years.
a.m.,
When
that
do we
might
see
work. You might have to
that
let it
payoff in
go
terms
before
of
market opens.
restructuring this company in a new direction?
Is engaged in design, manufacture, and sale of power system solutions for the applications in the medical, military,
That's the high leverage opportunity we've been waiting for.
telecom, and
For
industrial.
3 to 4 years to get this new lineup to market. We're going to have the freshest product
Is
lineup
Ford
in
about to
North
kill it?
America. It's our key market from a profit standpoint.
It's the
North
key
America
market.
is our key opportunity. But we're also working on costs. We have a new COO in North
Isn't that
America.
you?
Lisa Drake, she's been working on a
This
work
says
team
Ford
to
COO.
cost. Between the cost
Are you
progress
out?
and new vehicles, we have an unprecedented opportunity to really create a lot of shareholder value and also get a lot of new customers to the Ford brand with this brand new product lineup.
Jim, hey, it's great to see you. Jim Cramer.
Hi, Jim.
Hey, you know what? You've done a great job in America. You know, I bought the 350, the Super Duty, excuse me. It's an incredible truck. Just lasts forever. I think that that whole series is amazing. And I want to know, when I see Elon Musk,
I don't know.
that is, I don't know, kind of fanciful to me. And then I read that he's selling a tremendous number of.
It'll be -30 like oil.
And in China, I think, why in China is the F-150 not the biggest seller? And what happened in China? And why do you really need? Do you need VW, say, to get into China? They sell a lot there, because to me, I just don't get the disconnect. The 150 may be the greatest vehicle ever made, and I don't get why that isn't the biggest seller in China.
Occidental wants to rage.
So good question. Well, first of
Can't
all,
stop, won't stop.
Phil, I have to say,
Just,
you know, there's a lot of
Can you imagine if they let stocks trade negative? Oh my god.
Ford, in the next 24 months, will launch an all-electric F-150 and an all-electric Transit.
No longer do you have limited downside to zero. It's unlimited downside and unlimited upside. Run the math.
This is our chance. We are electrifying, and we're a brand.
Are we here? Are we not logged in
On
yet?
China, you know, our products got old, Phil, and we didn't invest in new products. Now we are. We're launching
Still
4 new
not up yet.
utilities, and the Transit is really strong. We've gained
The
retail
DeLorean's
share
the greatest vehicle ever made, Jim?
several years, the last 2 months. More than half our sales are Transit vans. We do offer pickup trucks through the JMC brand. But really, our version of the pickup truck in F-150 in China is the Transit van, and it is selling like hotcakes.
Ooh,
More than
that's gotta
48%
hurt.
of our sales last
HTZ.
month were Transit commercial vans. So the commercial industry is hot in China right now.
Damn, this dude's talking
and
Ford
it's
up
more-
like a
almost
boss
half of
right
our
now.
sales.
Wow. Okay,
He's getting rich as they speak.
That's news to me. So
Should I sell my VRM
say
and
what
just get some
something is rather
Ford?
than just yawn about it. That's terrific. It makes me think of one thing, Jim. What would happen tomorrow if you went into Ford, you went to Bill Ford, you say, look, we are really profitable in the following 4 markets.
I don't have any day trades.
And
I
put
don't
up
have
the
any day
numbers. What
trades,
would happen?
unfortunately, right now.
Well, we've been working through that, scenario. We have lots of unprofitable product lines in South America. We've stopped Focus and Fiesta. We've stopped the Fusion in the U.S. Hard decisions to get out of legacy nameplates that people love. But, we saw no future, no profitability. And, with the pandemic, Phil, we're looking at every part of our business. If we're not convinced it's going to be profitable in the long term, we're not going to allocate capital. We're going to restructure. We're going to do.
God, they were having so many problems
set
before.
the business on the right path.
They were already
We have
on the
doubled
downward
down on
slope.
our really profitable businesses now. That's the new nameplates, and we're growing in new places. We're the #1 cross-shop brand with Jeep, Key, contributor to the revenue and profit for FCA. They've had that market largely by themselves.
Does Ford own
They have a
Jeep?
whole new lineup of Broncos, and it's about time. But I would say Phil, basically, Jim, Bill would say.
How many options on CPE? No, I do not. What is CPE?
Hey, Jim, I hate to cut you off, but we're running up against the opening bell, so quick question, and if you could give us a quick answer. What do you think when you see a company like Nikola with no revenue,
Hell
no
no.
products,
No options
and yet
on
the market
CPE.
cap surpassed Ford's market cap in the last couple of days?
I think of an electric F-150 and electric transit. Customers are
Buying Tesla puts soon. Not a bad idea. We made a lot of Tesla puts the last time it did this. Here's the thing though, this is the second time it's touched 1,000, so it's not that same like first parabolic run up. You know what I mean?
Not shying away from the question when it comes to Nikola.
What do you think of Del Mar Farm? I don't even know what that is.
Stand with Ford as it restructures operations. Carl, we'll be watching to see what happens with Ford here over the next 2 months.
Puts on Ford would have been great.
Carl,
Look.
back to you.
You got that right, Phil. Thank you so much. Phil DeVoe.
You got that right, Phil. You hyped it up great before the market.
4 minutes as we are awaiting the Fed decision this afternoon. Don't go away.
Oh no, American Airlines is getting its ass kicked. No, American Airlines, why? Yeah, that's true too. You have to look at the whole sentiment of the market as kind of an update today. Cheers, 40. Y'all go watch a few ads for some free biddies to donate. Futures ripping, you're the best, man. I appreciate it. That's right. You can watch free ads to receive bits to donate to the stream, which helps us do this every day. You can also link your Amazon account. If you have Amazon Prime, you can link your Prime account with Twitch. Drop that free Prime. You get a free sub to give out to your favorite streamer every 30 days. Might use it on your boy. Who knows? How many subs do we have right now? You guys went ham on Monday, dude. We got 38 subscribers right now. Let's fucking go, Futures Ripping. Let's go, baby. Oh my god, American Airlines tanking? American Airlines is tanking. Are they going bankrupt? No. I should get out of this. No, this is gonna be so painful today. I can't take the pain. I can't take the pain. I told myself when it broke $18 I would fucking let go of it. Seabass with the sub, baby. Thank you so much, Seabass. I appreciate that. Thank you so much. Hoping for a bailout? I'm just hoping for fucking we just booked a flight. We're about to go on vacation at the end of the month. Like, this shit ain't over. People are going back on airplanes. Airplanes are not going away. Seabass, you the man. You the man. Kick his ass, Seabass. Like, airline travel is not going away. American Airlines, not going away. Do I want to hold it through all the pain? Most likely not. Kick his ass, Seabass, little Dumb and Dumber line. Oh my god, this is painful. Maybe we do want to just get rid of it. Yeah, I think I gotta just call it on American Airlines.
Welcome back. Opening bell in just a few moments on this Wednesday. It's a pretty busy one with the Fed decision coming up this afternoon, Jim. A lot of medical news. NIH sort of laying out a timeline for some phase 3 trials. Moderna in July, AstraZeneca in August, J&J in September, and then of course those comments from Fauci yesterday, Jim, saying the virus in general is his own worst nightmare, the way it sort of decimated the world in 4 months. But
maybe we get rid of all of Jim Cramer's selling. Maybe he convinced a lot of people to have sell orders at open.
We're going to get one.
I was with some guys to celebrate the reopening of New Jersey yesterday, and I was saying first quarter for the vaccine. There wasn't a soul who felt it was going to be that late.
I'm not doing it.
Q4 was going to change the country's
Diamond hands.
I don't know. I think it's too optimistic. But if Dr. Fauci's there and all these drug companies are saying it,
I should have bought
really
more.
risky to say it and then not deliver.
Should have bought more.
It would be amazing. And remember, it took 4 years to develop the mumps vaccine. That was the fastest ever. But we have AI now. We have
Oxy not dropping.
stuff when it comes to just to the genome, and we have what Jensen Wong told me from NVIDIA graphic user interface chips that are so fast that you can run out a lot of different things and discover what's not working. So maybe the
Tesla
idea
about to hit 1K.
does accelerate.
Do you take out a put at 1K?
It just would be incredible.
As we've said
Waiting
before,
for
Jim,
data. Hit 9999.
that he say this out loud. The fact that he's voluntarily talking about a Q4, Q1 timeline is interesting. There's another record high on the NASDAQ, Jim. I think that makes it 3 days in a row for an entry.
ADMA drops to $3 instantly.
Some of these moves in the majors now, they are acting like small cap. I mean, you know how hard it is to get Apple going like this, and that is not a bang and gun and liquidate them. That is just a group of people realize that, you know what, 5G's here, and 5G's going to be explosive. Very positive note about Ericsson this morning. NVIDIA winning some very big business that people are talking about. Winning some Apple business maybe with AMD. Everyone is speculating everybody's winning business.
Right.
And things are just better in the stock market than they are in the real world. But I guess if they think there's going to be a vaccine in Q4, the numbers for everything are too low.
Yeah, Jim. I mean, headlines like there's a couple in Chinese media this morning sort of speculating that the Chinese could limit Qualcomm chips, Apple chips in government agencies or in areas that are involved national security. Headlines like that just completely getting ignored right now. In fact, any discussion of Chinese tensions is getting ignored.
Look, a few weeks ago, we were worried that Taiwan Semi might be deeply hobbled by the Chinese.
I'm going to keep you shooting in the background. VRM looking good. Really, I didn't even look at it.
The rest of the semis.
Oh shit, nice.
We are in such bull market mode.
That's what's up, VRM.
In the history of the S&P oscillator, the most overbought.
Pen down, ADMA down. It's really
there's two overbought.
all about American Airlines and Oxy.
Hertz overbought a stock that might be worthless. But then there's the overbought of a Facebook. There's an article in Facebook saying that they're losing ads. So the stock's only up $1.50. Maybe it would be up 5 if they were not losing ads.
No.
Okay,
the
we
Times
need to
today
get out
talks
of
to some
American
advertisers and says that some find it morally impossible to advertise on the platform. But Jim, to your point, I mean, it's not just records; it's records on volume. It's 6 billion shares of the Nasdaq a day. Numbers that we went 10 years without getting 5 billion.
No, it's bewildering. But it's V. It's people believing in the V. It's a belief that, let's say the Fed talks today and they're not going to take the foot off the gas pedal because we still have 13% on.
We're out of American Airlines.
It's one of those moments where, because the numbers, aggregate numbers are so weak, the Fed feels that it's supposed to do step on the gas pedal. But if you look at
That was probably a good move. We lost a lot there.
What I find interesting is that the recession stocks are doing well, and the stocks that signify a dramatic increase in activity are
Not
doing
really.
well.
For how much we're up, who cares? You got to take an L sometime, right?
Group is supposed to be losing, but it's not, and so I'm baffled. Like
I think that's a
people,
controlled
but
loss
used to the
there.
idea that,
Oh, here's
if
Marty
JJ
right
goes
here.
up, then you have to.
What's up, brother?
Market's open, man.
Market's open. Are you at work?
Yeah, I'm at work. What should I do? Should I get out? Should I get in?
I don't know.
Oh.
I just took a fat loss on American Airlines, so don't listen to me today. I had a question for you. We were all joking around. You're live on stream, by the way. First time.
Awesome.
You're a first time, long time listener, first time caller, right?
Long time listener, first time caller. Love the show.
So we were discussing like conspiracy theories this morning for some reason.
Oh boy.
And this guy, Art Bell, came up.
Art Bell.
Do you know who Art Bell is?
It sounds familiar, but
All right.
maybe because I know a guy named Art.
Okay, well, do you know, like, when we were on, like, tours and shit in the van, and you would listen to, like, weird AM stations?
Yeah, that was a dark time in my life.
And they would be, like, about, like, alien, like, abductions and shit?
Yeah, that was like the 4 o'clock shows on the way home from gigs. They would, what was that called?
Was it Coast to Coast AM?
Coast to Coast AM, absolutely.
That's Art Bell.
That's Art, okay, yeah.
I was like, I swear to God, I know this shit for some reason. Oh my God, that's fucking great. That's classic.
Nice.
Alright, well, I just wanted to confirm that was Art Bell that you made us listen to so many hours.
That was, and then the other one was the Truck and Bozos show. That wasn't really aliens, that was just random truckers.
Alright. Enjoy your work day.
You too.
See you, brother. Oh my God. He had a dude call in once that was flying his plane into Area 51. Oh my God. Hello, caller east of the Rockies. What a converted video. I wear a tinfoil hat all the time. A rando chucker show. I don't know what we do with Oxy right now. Holy shit. I'm going to sell VRM too. Take my monies. Take my money where I can. Oxy. What do we do with Oxy? I told myself if it went below 20 is where I was going to sell it. So I think I'm going to hold it for now. Although it does seem to be cruising towards that $20 mark. Oh my God. Do I want to be a part of any of this? I don't think I do. I think I'm taking my L in all this shit. Take the L, dude. Be liquid. We're at 14.5. We don't need to ride that train. Why so quick? Because it didn't cost me a day trade. It made us money, and it was on its way back down. So might as well just take my profits while I'm taking L's elsewhere. And it's going back down. It hit a high of 59. It's meant to day trade. It doesn't pay a dividend, you know. It doesn't pay a dividend. I might as well lock in the profits where I can right now. Ford taking a shit. I think the whole market's taking a shit today, right? What's the SPY doing? Right. That's a rough day today. For all the good days we have, we definitely have bad days. D-King up? Do we lever into D-King? Is D-King gonna rage today? Looks like it's good that we got out of there. We're going to leave it up over here. Oxy. Leave the SPY over here. We got American Airlines over here still tanking. It's good we got out of this. DraftKings wants to fucking take off today, huh? Penn National Gaming is down. Are we fucking up in any of these yet? Jesus criminy, not the DraftKings one. What about Penn? We have to be up in this by now. Jesus.
for those two companies, but it would create obviously a global player or a larger global player in the delivery business. So that's kind of where we stand on that. We'll see whether Uber officially exits. Perhaps on this report they'll even see that they've been.
We took an L today, chat. We took a fat L today.
Engaged in talks with one of these European companies and appears to be getting close to a deal, guys. So just wanted to update on that.
Why is DraftKings raging?
You know, you asked me about this numerous times. Taubman and Simon Property. And I think I had said last week, the lawyers that I've spoken to always indicated to me how tight this contract was. But it does not appear to have given pause to Mr. Simon, who has decided to try to exit the deal. As we learned, a few moments ago, when they announced they're exercising their contractual rights to terminate. Now, of course, they can say they have those rights, Jim, and they seem to be taking sort of in a quick read here, kind of borrowing from a number of books, maybe the Advent Force Scout plan a little bit, but also the Sycamore L Brands plan, where they say that the company and Taubman did not.
We levered up super hard in DraftKings.
Make
Let it run, baby.
Capital expenditures, so failed to take steps to mitigate the impact of the pandemic. All I can tell you is, right now, this is going to be a war. It's interesting. It's a Michigan court as opposed to somewhere else.
Real hard. We levered up real hard in DraftKings.
Perhaps it should not have been unexpected, except that
oh shit.
Everybody I've spoken with seemed to be in their minds at least the reason.
We need to see if we have a day trade.
But you know what? You can always try. Dowd tried in Roman Hobbs, right? Now they closed on terms, but it was a war. When we can go through a lot of those wars that we've seen.
We do have day trades available. We do have day trades available.
Yes. When I look at the things that Simon's talking
Don't fuck
about,
with me.
the idea that perhaps
I got day trades, baby.
Did not do well and mismanaged its business during this period. It was disproportionately affected versus other malls. I think that's going to end up being a little subjective, David, but if I understand it, according to that February 9th agreement, that there was an out if Taubman did a poor job. I'm a little surprised, but then again, Simon's stock went from 55 5 days ago up to 90 momentarily. So I think people must have been thinking that perhaps they could get out of it. You know what? The mall business, I mean, how do you do a good job during the mall business? You're closed. I think everyone did equally split. But, David, you're right. It's going to be a war. But I do want to point out that David Simon is a businessman that people revere in this industry.
No.
He's paid out $33
we
billion
get at the top. Keep
dividends.
going.
He's
yes.
a good judge of who is a good operator and who isn't. But it is surprising. Why did he like Taubman's operation? And then when all malls are closed, not like Taubman's operation? And yeah, I think this is going to be one that we're going to be talking about a long time.
Yeah, it's going to be a lot of conversations with lawyers who have perhaps different opinions. I mean, you know, again, we'll come back to things like disproportionate, because the merger agreement, or at least according to the Simon side, says that they had the right to terminate in the event that the pandemic disproportionately hurt Taubman. Well, I'm not quite sure what that means. We pointed out that there was a carve-out in the material adverse effect clause that gave them the right, that you can't terminate because of a pandemic. Remember, the pandemic had already kind of begun a bit. It hadn't been termed a global pandemic yet. When they signed this
on OIS, what the fuck is that?
Not a stock deal in any way. Simon Properties has been responding very positively recently, although down now. But Jim, this is just going to be a war. David Simon is a tough guy. Again, not
down to 8%. What are you talking about?
But you know, they were getting closer and closer to having to close the thing. They were on the clock, so by the end of the month potentially. But still a shock in some ways.
Well, do you think it's been a shock that David's suing Gap stores?
I guess that should have been a sign, maybe, that he's willing to take anybody on. I don't know, but this is going to be ugly. It's yet another deal in a long and a quickly lengthening list of deals that we watched fall apart. Whether it be Advent, whether it be L Brands and Sycamore, add this one.
Damn, Simon Property Groups is fucked. I don't want to own any mall REITs. Fuck that. No retail REITs, no retail anything.
This comes back to contract. This comes back to to court, and in this case, Michigan courts apparently, not Delaware courts. But Jim, it's going to be a fight.
But I do want to emphasize again, David Simon, a revered figure in the industry, a person who's paid his shareholders a great deal, definitely a tough person, but a person that people feel is above reproach. And I think that is, now that may not matter in court, but I think our viewers need to know that this is man who's not a scoundrel. This is the best operator out there. Maybe Don Wood at Federal Realty, but wow, this is. I want to follow this one because everybody's been to one of their malls. Everybody, they just may not have known it.
Everybody's been to one of their malls.
Yeah, good. I'm looking forward to you following it, and I am as well. And
go back on vacation, will you? This is the hardest time on earth, and you're calling in. It's okay.
Maybe I'll just give up and come in tomorrow. You know, it's not that hard to turn the camera on and sit down on my case.
People, when your kid's going away to college, I hope.
We hope
this should be the time that
we hope to.
Do what you want.
We hope our kid leaves for college too.
I screwed up. I screwed up.
Thanks for the advice, old man. Right. Appreciate it. Yeah.
Thanks for the advice, old man.
I'll probably talk to you tomorrow.
I'll tell you, the news never stops, Jim, but there's always more news. So you can, it's like a city bus. You can take your day off because there's going to be more news when you get back.
Oh, never ends.
Never ends.
It never ends. Today was a day, by the way, where there really weren't that much earnings, but the analyst notes are really
There we go,
driving.
D King.
Look at all the down. A lot of
Just
those
wanted to
analysts
retest VWAP, that's fine.
Saying different things.
Check the disco.
Yeah, Micron, Cisco, Chevron, JetBlue, United, as we said, some of the downgrades today. And then Jeffries actually took the entire tech sector to market weight on a downgrade there. I know you talked about the Starbucks 8K with the small guys before the hour. Comps down 43 in May. They did say 90%.
Is VRM still raging? I should have held it, huh?
By June 1, and that's essentially what they did, Jim. But then the preliminary adjusted loss.
VRM, vroom, vroom, baby.
How does that match with what expectations were?
Vroom, vroom, baby.
When you hear that it's within the range, so to speak, it's not within the top of the range, and that's why they'll be selling. I do think, by the way, the second half's going to be stronger. They're going to open up a lot of stores. China will be open. They're going to take advantage of the vacant storefronts, move in, have bulk in Starbucks. But this is a fits and starts story. It wouldn't shock me if Starbucks was.
How do you get one VWAP line? I only have 3. You always have 3? I have no idea. I went to like studies, quick studies.
Starbucks is
volatility studies.
I say that because as you listen to us talk about David Simon Properties, not everybody who's in a mall,
where did I go?
everybody who is in brick and mortar is here to stay.
I don't even. I have no fucking idea.
A year from now, Starbucks will be.
Then IPOs.
Add a study, all studies.
Airbnb has resumed
VW, VWAP. There it was.
Snowflake eyeing $20 billion in valuation. That's according to the FT today. And then
Oh no, wait.
who we
What?
talked to on Squawk Alley yesterday. Take a listen to what the CEO said.
Yeah, but you can get rid of the bans somehow.
Of COVID, we were kind of evaluating.
Fuck, how did I get rid of the bans? Fuck, what did I just do?
Interesting momentum in our business through the later half of March and into April. And then we actually saw that there was a great opportunity for us to move the business forward.
God, I remember doing this now. I was like, I don't really want
the
these.
roadshow, and we're obviously well received.
Any argument, Jim? Windows open?
At the beginning of the IPO, one of these periods where we're going to have an IPO train coming through, the first cars they give away. You're going to make money. Put in with your broker right now for Snowflake, if you could have a broker does it, because Frank Slootman is the CEO. He built ServiceNow, which then right now it's run. Bill McDermott runs at SAP. And he's done a remarkable job. But Slootman is incredible. He's one of the toughest CEOs I've ever seen. When he retired, I remember him telling me, listen, he's sick of sleeping on a cot when he's trying to be in there building a company. Slootman's the real deal. He's toughest. He makes David Simon look like a real sweetheart. So bank with Slootman, get some Snowflake. You're not going to. The enterprise software sector is very, very hot, and Slootman's maybe the best. I mean, Mark Benioff would tell you that Slootman is someone to fear and respect. Snowflake.
Interesting.
Where's the spot? What is the
So we're
spot
holding
here?
3,200, holding NASDAQ 10K. We do want to check in with Rick Santelli, who brought us CPI a little over an hour ago. Morning, Rick.
Good morning, Carl. And yes, CPI roughly as expected, and they have any market-moving implications.
Look at American Airlines roaring out of it now.
But what is important today is how we continue to see yields come off after spiking on Unemployment Friday.
Vroom, vroom, baby.
Back to Friday, the 5th of June.
Damn, she's moving.
Two-year note yields. They spiked up to 23. That's the high water mark. They've been drifting. If you look at 10-year notes,
I
they
should
spiked
have held
up
it.
to 95. They're drifting a lot. Now under 80 basis points. And think about what this means. You know, the jobs report was, to many, just a mathematical calculation that if the worst is behind you, start turning things on, jobs are going to improve. And indeed, we saw the nervousness leading up to it. As every day leading up to the jobs report, we saw higher rates and higher equities. But the point is, once that was out of the way, and whether it was the last blast on Friday or
today is not the day for me.
Almost doesn't matter, because now the Fed, and we know Jay Powell is not enamored with the economy in many ways, thinks it's going to be a long slog. Well, the drift is lower. And this is quite important because maybe yield curve control is something they're going to talk about, heaven forbid, but it's out there in the venue.
It's true. I'm going to waste a day trade.
Since Friday's employment report spiked up to 72, it's lost a dozen basis points here. So if you are really thinking yield curve control, think about where two-year notes have been. Think about the long end. It's basically going to be just all about the long end. It's going to be all about the 10-year, because I can't imagine
the SPY is just getting wrecked right now
at this point. And finally, the dollar index. Today's a big day. Actually, yesterday was. Yesterday was the second day in all of 2020 the dollar index closed down on the year. The other one was March 9th. Well, it's down below 96.40 again today. We want to play close attention because just for the month of June, we've lost close to 3% on the dollar index. Carl and Jim, back to you.
All right, yeah, another one to watch, Rick. Thank you. So, market being.
I think I'm going to stay on the sidelines.
Buy energy, buy industrials, buy financials, and that's despite Apple, another record high above 350. We're back in a moment.
Yeah, that definitely sucks. We've made so much in D-King over the run-up, though. It's not that bad. But yeah, now we're looking at some serious losses today, and it's still growing. Pen's growing. I don't know where to go for safety. I'm thinking about shorting the SPY right now. This is the turnaround, isn't it? This is in 9 days. Crush Shirts calls out on top yesterday and then went the other way with puts crushing it. Damn, that's the move. I think we let the morning play out here a little bit. Damn, it did break 319. We're going down, aren't we?
Top two gainers Top two gainers on the NASDAQ 100 are Tesla and Zoom Video. Not a coincidence, those two names are the same names that have led the NASDAQ 100 since December 26th. That's the last time the NASDAQ hit 9K. Back in a minute.
We went ham on those. We went ham on those. We just went ham on spy puts. Can we call Marty back and see what he thinks of some good plays of the week? Seriously. Now we did use a day trader, right? Didn't we? We definitely did. Are we going to be on the wrong side of everything today? Hold on, I have to take a phone call.
It's time for Jim and Stop Trading.
Matthew Boss from JP Morgan does it again. It's talking about how Five Below.
Dude.
Bingo. Stock's up about 10% on 8% comp numbers. This is a company that most of the stores have been closed. It's a fun store for kids, and it's back, and I think you can.
I'm having a meltdown today, aren't I?
So don't think it's over when it's up 10. Boss really likes it. Says it goes much higher, 150.
Yeah. Interesting, you know, Jim, today on Long Island, it's phase 2 beginning today. Outdoor dining, hair salons, phone's going to be ringing off the hook at a lot of nail and hair salons.
I'm having a meltdown today.
Look, it is, I mean, I had guys over last night, people over for my house outside because it's been limited to 6. And look, we have no.
I need to probably just take a day off, don't I?
But it is nice to at least see people have kind of a normal life, as close to normal as you're going to get.
How about tonight, Jim? How about tonight?
Marriott Vacation Worldwide, that's timeshare. Interesting. People
Possibly time to take a day off.
It's different. And then I've got a little company called Cerus, C-E-R-U-S. It's blood. And remember, we're trying to figure out exactly what plasma means for people who have COVID.
Plasma.
So, some studies, Chinese studies says it doesn't matter. American studies say it do. Let's find out. I think the American studies are better.
Well, we'll see what happens today. I mean, your point about sort of the engine overheating is documented every day. Not that everybody's listening.
BGL, bag them, gun them, and liquidate them. Tough to see. Hate to see.
Yeah. All right, Jim, we'll see you tonight. Mad Money, 6 p.m. Eastern Time, as always, Jim. As always, thank you. Good morning, everybody. Welcome to Squawk on the Street. I'm Carl Quintanilla with Sarah Eisen and Mike Santoli in for David Faber on this Wednesday. Waiting for the Fed decision at 2 o'clock, the news conference at 2:30. Despite a slew of downgrades, NASDAQ's holding in at 10,010. And Mike, 3,200. So the levels, at least at this point, remaining intact, although traders on alert.
Yeah, the levels are intact. The big cap
I agree,
indexes are holding
fearmonger.
together
Don't
for
tilt
now.
it all
It's the
off.
second day in a row when most stocks are down, and actually down kind of appreciably. So it's a little bit of an unstable moment. I mean, I agree. Came into the week.
I think reality has finally hit the market. Do we go down?
Sentiment, and that's getting sorted out right now. And
Going up to touch VWAP at least. If we break 321, I might have to get out of this trade too. Just take the L again, and then I'm going to take a break for the day if that happens.
The indexes themselves get fatigued, and we have to have some kind of pullback, or we just flatten out. But you're right. So far, the S&P 500 has not really gone much below 3,200 each of these little pullback days.
I think the Fed is going to be key. Obviously, it's been key for this huge run-up that we've seen, the 45% run-up for the S&P since the March lows, and the unprecedented amount of stimulus. What we're looking for today...
How short are you? Not that much.
Language,
Not that much. Only about 3,000 out of the
any
account.
big
We still
action,
have a lot of money.
Will he still sound dovish? In other words, will he still talk about the great
You know what I need to do while I have this?
the risks that are out there, and say that the Fed is still strongly committed to using all available tools and even more action if necessary. That's something, for instance, that the market probably would like to hear. If he sounds any bit rosier, Mike, about the economy, about the surging stock market, I wonder if that could be negatively interpreted. Also about the lending facilities. You know, the Fed has stepped outside of its perhaps comfort zone or traditional zone in terms of lending to medium-sized companies, municipalities, corporations, including junk. And what will he say about that? And whether how effective it's been, and whether it deviates at all.
Not 100 shares, but we could definitely get 30 shares.
Assume that Chair Powell is going to acknowledge the improvement in things like the jobs number, but probably not extrapolate that out. Of course, recent comments of his have been all about the risks down the road. We don't know how this virus is going to go. We don't have our arms around all the implications, and he's in risk management mode. It would also be unusual.
Let's get the fucking.
To strike a tone that things are much better.
Let's get these ETFs we wanted.
So much in terms of the capacity of their existing programs have not even really gone into effect. There hasn't been all that money actually utilized yet. So you have to imagine, I would think that he's still going to be giving a
Let's go to safety. Let's go to safety.
How this is going to play out from here, Carl.
Right.
Finally,
and also the uncertainty factor.
We spent so much time this week talking about essentially an echo of the day trading phenomenon that we saw in the late 1990s. I know there's a bit of a parlor game on Twitter trying to ask the question, is it related to the population that would ordinarily be at work? And once those people go back to work, Mike, you've tweeted about this, does that activity subside? What do you think about that?
I think it's going to be a fun test to see that. I do think there's a chance of this. A lot of things, though, came together, as everybody has been talking about, including...
We want to see the SPY breakdown here.
Including brokers allowing you to trade in fractional shares, and including people being idle at home at a time when the overall market had this incredibly dramatic move to the downside, and one could plausibly say, hey, maybe this is a time to find a lot of completely obliterated stocks that are cheap, and I can buy them now. So a lot of very specific circumstances going on here. It's tough to say how it plays out from this moment on, but a pretty good test of whether this is going to be a new strain, a new driver of this market, or
yeah, we're headed back towards highs. We're headed back towards the highs.
I think the other interesting dynamic, Mike, is the fact that a lot of
I think it was like 330 before, 339 was the high before the crash. So it's kind of like, yeah.
Carl Icahn, Warren Buffett, you know, a number of the big name hedge fund managers that have been bearish, Jeffrey Gundlach and Paul Singer and Stan Druckenmiller, who have had to come out in some ways and capitulate.
And I think that's actually a very self-conscious part of the ethos of this trade, that we actually, you know...
Not quite, but it's crazy for it to hit all-time highs again, right?
An opportunity to make some hay here. One thing different from the late 90s, just in this last little round, aside from something like Nikola, but if you look at these bankrupt companies or very distressed companies, penny-type stocks going up, it's not like the late 90s where people were just kind of saying, this is the future, this company can go to the moon, I believe in the trends, I believe in the
We need
new
to smoke a
technology and
bowl,
innovation, and I'm just
slow down, let the SPY finally
ours.
break down
These
for a
guys maybe
day,
wanna
print us some
a
money.
little longer, and maybe the credit markets keep them afloat, or maybe it's just a complete lottery ticket on survival. That's a little bit of a different feel in terms of what, you know, at least the intellectual overlay on this activity, sir.
I think the other interesting story, Sarah, is
Let's
going to
continue
end up
the
being
conversation
M&A.
right now with our market panel. Joining us here at the top of the hour to talk about what to do next, Charles Schwab Investment Management's Omar Aguilar and Commonwealth Financial Network's
Dude, I'm fucking so sore, old Wisco. We need to pick another workout thing to do. Jesus criminy,
Well,
bro.
you know, it's interesting to see how the market is taking over the optimism for reopening, and clearly the support provided by central banks, I think, as was discussed earlier, you know, a lot of the focus has been on just you know, what the Fed language will be today. Most likely it continue to be accommodating, and I would probably say, you know, a lot of these activities related to the labor market. And I think any comments that had to do with the labor market will translate into what is the key part for the reopening and the support of the market, which is the consumer activity. And I think this consumer activity on how much the consumer spending and confidence starts to play out into the potential future earnings is what the market continues to hold on.
We did short the SPY today.
How would you interpret
Well, we
some of the
bought
retail
puts. We
activity
bought
we're seeing
puts.
in
We
the
didn't
market?
short it.
And the world isn't coming to an end. You know, I think this is a similar reflection of people going out, people shopping, people going out to clubs and casinos. There's a sense that we've been pent up, we've been locked down. And this is just one more way that's coming through. We saw the market come down, we saw the market come back, and people are voting with the dollars they have, so they're not spending it on other things. I do think this is a consequence of the shutdown, but that means it will probably fade when the shutdown opens and people have other stuff to spend their money on.
How are you looking, Brad, at the Federal Reserve today in terms of what it could dictate about the direction of
Shit's going down. Everything is going down.
There's only
today.
one way to go with the Fed. If Jacob Powell comes out and says we're pulling
What
back,
is going on with the QQQ
then
here?
all of a sudden, I think the market panics.
What is
But if
this
it more
fucking
likely,
stupid
Powell
line
comes
here?
out and says we're going to keep getting behind the market and pushing. You know, we're not pulling back. Then the party continues. We're not looking for it to for the Fed to knock the market off, but we're certainly alive to the possibility.
Omar, an investor who is maybe put off figuring out what to do with his or her portfolio till this point. We've had this basically a round trip since the start of the year in the S&P 500. If you had a balanced allocation, you're actually up a little bit on the year. Does that person have to do anything right now, or should they be thinking about taking any off the table or reallocating in other directions based on how different parts of the market have done?
Well, you know, our
Endo, what's good? Not so king today.
assess risk. I think what
New highs go higher, new lows go lower. Really?
Is being a
We're
great
fucked then.
example of how people
What's up with
need to
Tesla?
understand
I have
the
no
level of
idea.
risk tolerance they have. I think if you close
Did it
your
break
eyes
the
at the beginning
1,000?
of
It
the year,
did.
just open it right now. I think to your point, people will probably say,
Do we
like,
put
well,
our
that's not a
money in
big deal.
momentum and
But I
walk
don't think
away?
that was the case right at in March 23rd.
It was a good
when the
time
market
trading.
was down significantly, and even the subsequent
It was a
rally.
good try,
So I
huh?
think reevaluating the level of risk that people actually have taken is always a way for us to realize whether or not you have the right allocation,
No,
even if it's a
I've
balanced
not heard of
allocation.
Synovus.
The second point is related to rebalancing. Even though you may be already flat or slightly up for the year, given how the dynamics are, most likely your underlying allocations have actually been distorted. So I think going back to your
What about, like-
objectives and figure out what are the trades that you need to make to get back on track is always a good place. And right now is probably the best example as we continue to have some stability in markets. And lastly, it is probably the diversification. There is a lot of rotation of possibilities that probably we didn't have before that are started to open up as we start thinking about the potential recovery of the economy.
Brad, that idea of reallocating based on where we are in this emerging recovery cycle has been a big one. Obviously, a couple of weeks, very pronounced outperformance by value in cyclical areas. Now it's maybe a little more staticky in the last couple of days, but how would you treat that relationship?
Well, I'll tell you exactly what we've done. At Commonwealth, we manage a fair amount of money. And the whole thing, this whole past several weeks has been an absolute testament to the necessity to rebalance.
Comes Raleigh QQQ smoking weed.
Rebalance into equities very, very close to the bottom simply because we looked at the allocations. You know, a 60-40 portfolio is then, you know, closer to 50-50. And so we reallocated into equities, and just in the past week or so, we've actually reallocated to fixed income because, again, that 60-40 portfolio now looks a lot like a 70-30 portfolio. So if you just stick with your allocations, if you just rebalance on a regular basis, that's the purest form of, you know, selling high and buying low, and it's worked.
There we go, Spy. Breakdown. Breakdown, Spy.
Omar, do you think the market, whether it knows it or not, wants to hear from Congress, we've done enough, or wants to hear from Powell, we've done enough, because the recovery appears to be on track enough?
Well, I think the you know, the market seems to be very comfortable, you know, so far by thinking that the Fed, I would not necessarily say they think it's enough, but they certainly thought it was timely, and I would probably agree with that concept. The market has, you know, enjoyed the fact that the Fed did not hesitate and, you know, went and put the stimulus in place right off the bat. The market itself will continue to just look into what the future holds, and I think the opportunities and the tools that the Fed has.
There we go, baby. That's the red line we needed right there. That's the red line we needed right there.
The challenge will become
more red lines. More red lines. Let's get ugly now. Let's get ugly now.
You know, the market may take that as a need for further monetary stimulus. So I think
we should have bought more SPY puts.
To be evaluated going forward.
Omar, I mean, we haven't really mentioned the case numbers in the U.S. on COVID, which are ticking higher. And in economically important states, especially like Texas, the hospitalizations are back over 2,000. Actually, it's a record.
You always buy the SH ETF to short the SPY.
And that reopening might
Randy made SPY tank, bro. What the fuck? Stop it. No regrets. No regrets. That's true. That's true. We got 10 of them.
Well, you know,
we got 10 contracts. That's a lot of contracts.
Investors are right now, and this is a very typical behavioral finance aspect, which is called recency bias.
Plan your trade. It's true.
Looking at the last trends that
and it's fine.
Through and thinking about the actions that the Fed stability have provided.
Let it roll, baby. Let it ride.
That lineups against that theory, you know,
10, baby. 10.
Not to be up. You know, whether it's the number of cases,
10.
you know, I've always discussed the fact that this is a health crisis
I'm a
that
sicko.
hasn't been resolved. And we're not going to know the impact into the economy until we have a clear path for solution of the health crisis. And as to your point, it has not been there yet. We also have a number of bankruptcies continue to go up. The level of debt in the market continues to rise. The balance sheet of the Fed continues to grow, and et cetera, et cetera. There's enough things that the market continues to ignore in terms of the hard data that is affecting the economy, that is all going back to the liquidity and the program that is inputted by the central bank.
What contracts did I buy? I'm texting a
Fix
buddy
the
right
virus.
now,
I mean, Jay Powell will be
315.
the first to tell you that, and they can't create demand when economies are locked down, Brad. So how, as an investor, do you hedge yourself against the second wave, the reopening risks, the fact that cases are still rising in this country?
Well, I think, first of all, I want to first agree that cases are rising, but they're holding steady at about 20,000
nice.
a day, and actually that has gone up in the past couple of weeks. It has not gone up since we've reopened, and if you look at the case growth rate, it's ticked under 1% for the first time. So
we could hit 315 today. I bought 315 contracts for next June. We could be in the money by today.
You know, certain states are getting worse, but the Fed is saying we've bottomed out. We're not going to pull back.
And then how much is this fucking contract
worth? We're not going to
worth?
jump ahead and provide more support either, because the healing is actually going well. Now, that said, I mean, I think the market wants everything. They want the economy to recover, and they want the Fed at their back. And I think that's what they're going to get until we get a much better handle in the medical, because you're right, we're not out of the woods yet.
Brad Omar, we'll leave it there. Thank you both very much.
Thank you. Thank you.
Dallas Mall and restaurant owner Ray Washburn joins us next on how reopening is going in Texas. Don't go anywhere. We're back in just 2 minutes.
Look at the market trying. That's fucking cute. As VRM climbs, I'm bringing my stop with it. That's very, very smart. That's very, very smart. It's going to be tough for it to keep climbing with the market going down, though. I would probably just take my profits, to be honest. Yeah, I'm using my little TA skill right now. My stop is 54. There you go. There you go. If we move above 57, is that? That's my new stop. Damn. What stream girl say? Just cashed out my 401k to buy Y2050 put options on Bangladesh coastal real estate. What the fuck in the fuck in the fuck are Wall Street bets? Place is gonna flood. What are you laughing about? I'm fucking genius. Oh my god. Oh my god. Oh my god. You're lucky we got to 319.50, fearmonger. Yeah, right, buddy. Yeah, right. Today is a down day. You think we're just going to be down 0.3 today? I don't think so.
Our next guest is the owner of the Highland Park Village Shopping Center in Dallas, as well as over 4
I think this is fucked.
Dallas area, as Texas continues forward with its path to reopen. Ray Washburn is the chairman and CEO of our Charter Holdings, also the former CEO of the Overseas Private Investment Corporation. Ray, thanks for the time today. Appreciate it very much.
I think short term, this thing is going down. Look at it. Look at it.
Sort of paint a picture
Look at it. Would you look at that? Would you look at that?
Levels of demand. How does it feel when you arrive at the store?
Would you look at that? Look at that. A new low.
The case of the
new low.
95% of our stores
new low.
So it's about a 250,000 square foot shopping center.
These people have been screaming all week. The market's too high. The market's too high. Finally, it's time. Money swinging. The big money's swinging the other way, baby. We're swinging that money the other way. I was going to say something else, but I wanted to keep it a little bit closer to PG.
Meet you at the front door if you want to deliver to your car. They
cost 10 cents. I bet it won't go up 5% a year. I'd love to buy into that trade. Strangely, VRM is okay. Yeah, IPO. I don't know. People are trying to pile into the momentum that's there, probably.
It's open air, right? If I'm not mistaken. So you have some advantages on some other malls that are still waiting.
Yeah, no, we're an open air spot. Very little common areas. There's nowhere really to collect. It's parking.
SPY's breaking 319 now.
Right now on the board, and you see, and so
SPY's breaking 319. We're about to get all our fucking losses back in one fucking set of put options. Why is everything falling? The market's too high. The rent is too damn high.
Regional center in the sense of being.
Damn, we went from on a mental breakdown. We were about to have a mental breakdown at open, pulling it together, realizing what the market was doing, taking a little smoke break, adjusting.
Starting Friday, right? Restaurants can go to 75%.
Closed out VRM. Yeah.
You're really getting somewhere in terms of a semblance of normal.
Took a little smoke break, readjusted, and now look at us. I say put it all into Apple and subscribe to Apple News.
Attention really being paid to some of the caseloads that we're seeing in states like Texas.
Then once I sell you some.
Well, what we do at our restaurants is we follow CDC guidelines. Everyone has.
This is the top. I call the top.
The restaurants. We haven't had an issue whatsoever with any of our employees or our
Down we go. Even newer lows.
The city has been very helpful.
We're up
both
$500 on this
and,
bitch.
the suburbs on allowing
Yo, we're gonna print
pop-ups
thousands
in
of
your park.
dollars on these
So
shorts.
People feel very
This
comfortable
is
being
pretty
outside,
toppy.
and
Feels
so
pretty
we've
toppy
taken
to
over
me.
pieces
We
of
puttered
parking lots,
sideways all
brought
week.
tables in because
Look at this. We
outside
fucking
you got
tried to
people within 60 feet of
consolidate
each other. Inside
up
the
here.
restaurants,
And now where are we going? Are we going
to,
up?
as of Friday,
Are we going up?
75%.
Nah.
So
We're going the fuck
encouraged by
down.
that. You know, it's up over 100 degrees in Dallas already, so we need to get people back inside eating where it's nice and cool. But our business is back up to about 80%.
Look at
of
Amazon.
what it was, last year at the same time.
Amazon plus Apple.
Back up to about the same amount. And so we're very encouraged by that. During the pandemic, I mean,
Amazon and Apple are like,
we were
fuck
doing about
you.
10% of our
Fuck
sales
you.
to go. There's a fundamental shift in the business model in restaurants to where it went up to 50%. We're still around 30, 35%.
Oh, we gotta go retest something, Fearmonger. We gotta go retest something. We can't just keep going up here.
People last year. Each one had an individual.
Yeah, it's wild. That shit's wild.
Manufacturing operation.
I like that. I like that you showed me that. I was using it over the weekend. 2% today. If you bought both of those, you're fucking cranking it.
Ourselves, as well as every major restaurant or all restaurants.
Meanwhile, the spy's like, fuck you.
For a takeout model, we're about a third of your business versus today when before it was about 10%.
Yeah, you can. You can buy that way. You can.
Biggest news
You
in
can
your
buy
world
that.
today is that Simon, mall owner, terminated its deal.
I
to
love
buy
it.
Taubman.
I thought it was
Taubman
dope.
shares are tanking. A $3.6 billion deal that was just announced in February, raising all sorts of questions about just how much pain these retail landlords like yourself are facing and dealing with.
Can't do options like that, but you can buy the stocks. It's dope.
How do you react to that?
What's interesting about that is I saw Simon also sued Gap a couple days ago because Gap hadn't paid in their rent in any of their centers for the last 3 months. And so there is going to be a winners and losers out of all this. And I think open air centers like the Highland Park Village and others like ourselves.
Kind of like Pear Trader. No, definitely not.
People are going to be hesitant to go back.
Where to put your money now? Puts. Puts. Go the other way. Look at this thing tanking, dude.
Foot traffic has really declined.
Make me my money.
What happens on that merger?
Make
I
me
don't know.
my
I mean,
money.
we've had issues. Like, for example, it's well known that Starbucks sent a letter out trying to get 12 months free rent from
Make
tenants.
it back in one
They pay
trade.
a year in dividends, and
Stonks only go up. Short SPY, long NASDAQ seems like a good edge. It definitely does. I like these ETFs, man. I filled out my ETFs today. I'm happy that I did that. I'm super happy with that. I don't care if it goes down. I'll fucking add to it. I'm not even worried about it.
Is the PPP money. Business doesn't come back by August, September. I think you're going to see another hard fall for restaurants and really the smaller independents. The other thing in the restaurant business, there are really 3 silos in the restaurant business. The big public
ETFs
companies
definitely only go up.
have access to the public markets. You have the small independents.
I mean, they could go down right now, but I'm okay with it. Like, I'll start my position. I'm going to cost average into them anyway. Like, let's just get in there. And then the SPY short becomes my hedge, right? Then these SPY puts are that's just a hedge bet, technically, at this point.
Restaurant chains
Right?
that are heavily indebted. I don't know what they do come this fall because the banks aren't going to be loaning money, and it's going to be very hard to refinance that debt.
Tesla all-time high will go down.
Closure
Tesla
of
all-time high will go down in a few
primarily,
weeks.
I think the private equity backed ones this fall.
It's been there before, though.
I mean,
You
there's
know, it's
also
almost been there.
everything you talked about, the rents and the finances and the stimulus money running out. There's also this question of consumer behavior totally changing as a result of the pandemic and speeding up a lot of the trends that we had been seeing. People
I'm
buying
looking
clothing
at
and
options on
accessories and
SPY.
basics online, people cooking at home in a way that they hadn't been
So
doing.
this is
and
the SPY.
Wondering how much of that
These are
is
the
expected to be
options. You have to
permanent,
pick an
and therefore
expiration
shift
date
the
you
whole
want.
economics of mall
So you need to
centers
pick a
and
close one
places
so that
like
it's
yours.
cheap. You need to either pick this Friday, like June 17th, the weeklies, or the June 19th date. Next Friday is where I'm at. So now you have your expiration date. Now you need to pick your strike price that you think it'll get down to. And you want to be as close to the money as wherever it's at. Like, whatever you can afford, you know.
circle around your shopping center. The argument for that is you have somebody, let's say like a Williams-Sonoma, where no one really goes in there and buys 12 plates and takes them home. They pretty much go in there and look at them like
thank you
it's
for
a
cheering the
showroom.
bits. I'm sorry if I missed that.
Online, but the shopping center
Dips over back to the moon. All right, fearmonger.
Basically,
All right.
So higher end centers and centers that are strategically
That's what you said
located
here
or
too.
fortress-type centers,
You
I think
said
you're
that
gonna
right
see
there.
more
For those 3
than
minutes, you said it there
and
too.
what that means is we capture
And
all
here,
sales,
you said it there too.
online or held in a shopping center, because a lot of things you might
They can retire now, but they can't. They keep adding $1,000 every time the market goes down.
If you're in close proximity to the store, that's where you're going to go make your exchange. But the shopping center
People
gets
lose
some
money with their first 500, add 1,000, add 1,000. Eventually, they say they're a good trader from the get-go. It's true. Oh my god.
And as far as
I actually like the 3 lines. I kind of do too. I'm keeping
and the
them.
geofencing deal, the argument could be from a tenant.
I think I need to stay away from options till I know options very well. That's very true. Very, very true.
And you want to make a sale there versus being an independent building out there. You can be an independent building, but if you want to be in a community environment that a shopping center provides, I think that's going to be something.
We want to see this thing tank.
Like I said,
It was fighting for 320 over here. Look at it, how it fought.
Yeah, it's basically
320.
just offering protection to some businesses in some way. Hey, Ray, final
It's gonna
question.
do the same. It's gonna do the same for this.
Picture that we
For
paint
this fucking
when PPP money runs out
bullshit.
and so forth. When you say that it's going to be worrisome unless business comes back, when you say that, do you mean levels of activity holding here would be enough?
Take that.
Or do
It's
they
now
need
it's
to improve from here
$260
instead?
profit. It fluctuates too fast.
For example, in the restaurant business, we're back to 80% sales. We still aren't. We're basically break even. You make your money.
Nah,
on
dude, it's going down.
10%
That's gonna
of
be
your sales.
thousands of dollars in profit.
We're
It's a
at
hedge.
break even right now, and
Holding an option is like holding onto a pile of hot shit. I think it's a good hedge for my other direction. All the stocks, all the ETFs I just picked up, and everything else I own.
that's when the banks are going to show up. And how do you refinance your debt? How do you get expansion capital and things like that? The customer at 80%, I think we're going to see customers coming back. Who knows what happens this fall if this pandemic comes back? You get another shoe that drops for all of us. But I think this fall is going to be very, very challenging time for everyone.
Oh, it's a hedge. Yeah, new options trader won't have a clue if they're being squeezed by MM or institutional funds banks, or if the market is crashing, or the stock fundamentals are fucked up. They can't figure out the iron condor. No, it's true.
It's 24 weeks, but they've had no business come back. So that's another bomb that's going to blow.
Look, and down goes SPY, fearmonger. Look at it. It's beautiful. Look at it.
Well, the last point is I was
What? Iron condors on D-King? No way, no way, no way. Options traders playing hot potato. Absolutely they do.
And information for our viewers. Thanks very much, Ray Washington.
Fearmonger's like, no! Rand's printing. I love betting against Rand. I love watching him have a fucking mental breakdown on stream and lose almost $1,500 in fucking 1 hour.
Nvidia and Apple hitting record highs during today's session. We saw that yesterday as well.
Only buy Bitcoin.
Is the only
Head
notable
shares of fucking shocking. Oh my god.
another 2%. If you bought Apple 20 years ago and held on to the stock,
Damn, bro, none of that. Let's see how this goes. I bought a 311 put for 615. Oh my god. I wish I could iron condor ETC. How are we down 1,500 in an hour? Just making some bad trades this morning. Holding on to some dumb shit that wasn't going to continue going up. If you can if your name is Winklevoss. It's true. Uh-oh, here we go. Bye-bye, SPY. Oh, it's worth 420. We should sell right now just to get 420 for the memes. Bye-bye, SPY. Bye-bye, SPY. Bye-bye. Yes, closing contracts does count for a day trade, I believe. Wow, I sold SPY while it was up 0.2. I'm good. You are good. It's down today. I think this was the move. I call top. Remember, we bought our puts over here. We made a bunch of really bad trades within the first, like, 15 minutes to realize that we were on the wrong side of momentum and go the other way. Yes. Yes. Take the loss. Yeah. You're going to make a win. What are you talking about? He's going to win. He's going to make a win. Or change brokers. That's true too. I went from when Robinhood Day Trade banned me, I just started my TD Ameritrade account. I guess it's good. I only did one contract for $150. No, wait a minute here. I bought one contract for when? What did you buy? Which one did you buy? 311 for 615. Oh, Jesus. You mean 619? 311 might be okay, dude. Like, look at where this is going.
Welcome back and good morning.
The gang is going to eat you up. No, it's not, dude. We're going there today.
Some of the barriers near the White House are being removed.
We're going there right now, Stream Girl. Look at it.
Had said all the new fencing would be taken down by today as well. But the Secret Service says discussions on that fencing are still ongoing.
Robinhood sucks. Had 5 call options. Added 5 at a later date. Sold 5 on the same day. Sold the ones I purchased that day for the day trade strike. That happens everywhere. You can't buy and sell on the same day in the same spot.
In Georgia, one of several states,
I never get that data again. Made 15K off $400. Rand, do you know what will happen to the stocks that you hold if the company gets delisted? I have no idea what happens. I wouldn't be holding any stock that's getting delisted. Whoa.
Here you go. Colombian police
5 tons of cocaine.
The drug. It represents about 5% of that country's estimated annual cocaine production.
Damn.
You are up to date. I'll see you in an hour. Carl, I'll send it back to you.
5% of their annual production. Coke price is going up. Go long on cocaine. That's a lot of cocoa.
Stay with us.
That's wild as fuck. Buy stocks in Colombian police, they're gonna be rich. That's true, dude. That's true. Colombia's government just came on the come up, dude. That shit's still going now. So it's 59 ETFs with Coca-Cola, Consolidated Inc., Coke exposure. You know who you buy is Steppen Group. Steppen. What is it? SCL, Steppen Co. They import the coca and make the extract that Coca-Cola uses. Just saying. Just saying. 10:30, does the SPY turn around? Do we just go to VWAP at 320 and then go down? We've held the SPY level for 4 days now. Short USA police and all in on Colombia. Yes, if you buy an oil company, you're no longer a hippie. Confirmed. You have to cut your dreadlocks.
Welcome back. Dow's down just about 250 points. Let's get over to
We have held for one. We got up here for a day, held 1 day, held 2 days.
Yes, thank you, sir.
Now we're kind of going to the bottom of the range here.
Richard, thanks for joining me on this Fed Day.
Thank you, Rick, for having me.
All right, let's get right into it. Leading up to the big jobs report, many, including myself, thought it would be more optimistic than many of the surveys, more from a mathematical reversal than anything else. And indeed, that was the case. And yields moved up and equities moved up going into the number. Then afterwards, we have to look forward to, of course,
I don't do dreads anymore now. I farm out there for lots of love.
Debbie Downer with regard to what's going on in the economy.
All my positions are green except for SPDW. It's foreign, doesn't count. Late to meet bed means late to rise. If they wake a big baby when I open my eyes. Apple to 400 scene. That's probably true. I don't know. I think we could be at a top here.
Good sense of humor. I think we're looking for some clarification. Again, they're buying about $20 billion a week now. If you look at the amount of treasuries held over last year,
Amazon to 4,000, Facebook to 300, Microsoft to 350.
Punch through 7.2 trillion.
Then they all get regulated and drop.
There's a need to somehow get further along the curve of when he talks about the future and what we're going to do afterwards, as you put it. It would be a good thing to start talking about the afterward now. We'll see. There probably shall be some more coming out about the issue of forward guidance. There may
Market
be
belt up 2020.
I'm not sure how effective it would be. Somehow capping rates, which I'm not sure how that will work.
Apple has 50 billion for buybacks.
Realistic as possible.
Doesn't think those price targets out of it. No, those will be the prices in 2030.
Rather just conduct themselves like the only remaining adults in the world, and I expect that will continue.
I'm not against it, dude. We buy the momentum. We're in it. We're in it with these ETFs.
Communicate with the shortest
Red,
distance
dude. We are
between
super
where
red
capping
today.
rates be
Efficient. I made
yield curve
horrible day
control.
trades
Now,
at the
yield
start.
curve control, anybody's
We're
watching
trying to
yield
short
curve over
the
last
SPY right
several
now.
months, realize that pretty much all the action being on the long end is short rates, and the Fed, of course, zoomed down close
I bet
to
we
zero.
get there sooner. Rig markets only moon. Oh my god. Amazon may stop at 3,000, not be able to go overseas. That might be true.
Aren't all the benefits of a steeper curve
Got in DNR at 43 cents. I think I'm going to be rich. What is DNR?
placed there by the central bank?
I agree with you.
Denbury Res. What is that? Some oil company?
I don't personally feel that they can control further out in the yield curve. I mean, the markets are powerful.
Look at if we would have just told our Oxy. I don't know.
All the way down to less than
I'm scared. I'm scared. I'm a trader. I'm a momentum trader here. So if the momentum's not on my side.
The yield curve is steep now. It is doing what it's supposed to do. Rates have risen a tad bit, particularly the longer part, the 30-year bond, which is used for liability management principally. So I'm a skeptic as to whether or not the Fed can actually control the longer end of the yield curve. And I also think it will inhibit price discovery, which is important as we recover from the setbacks of the COVID-19.
1% of people own 80% of it.
You know, Richard, the
Can't
price
beat them,
discovery
join them. Rich people are getting richer off this than any of us.
Moved out of the station. Let's get to
Oh,
another
absolutely.
area
The rich are
that's a price
banking off of this
discovery
whole thing. They're
inhibitor,
like, I don't know
so
why
to speak.
everybody's
And that
broke. I'm
is,
sitting here printing
today,
hundreds of
I
thousands of
woke up
dollars
and
right
went to a
now.
lot of pre-Fed meetings
3,000
with
people in
stories about
70% of the
This
stock
particular
market.
story
Really?
took the
What?
St. Louis Fed research group and said, you know, there's a lot of positives with negative rates.
I don't
You
believe
have to
that's
stay
true.
there a
Everybody
while,
has like a
good
401k
things can
or
happen.
something out here that's invested in
Problem
the
I
stock
see is,
market.
I
That is
don't
not a
agree,
good.
but I see the
That is not a
ongoing
good
nudging
stat.
going on. There's stories coming out, whether it's within the Federal Reserve system of research or outside the system of research, the nudging continues. And whether you call it stimulus or
You're always yelling, we're printing money. It's true. It's so crazy
these
though.
transient issues. They tend to recalibrate markets. Markets learn, they grow over some of the changes, and they become permanent no matter what anybody says. It seems as though researchers kind of forget this one point. So once you recalibrate and think you're going to get the balance sheet down and remove some of these programs in any short order, just seems illogical.
Wow, this put lost all its money already. What the
For
fuck?
a while. A couple weeks ago, we were looking at what was happening very short term, and the markets were forecasting negative interest rates at the shortest end of the yield curve. I think the Fed's been very outspoken about this. There's always going to be research within the Fed that had different points of view. I'm not sure St. Louis is advocating for this, but the negatives outweigh the positives. cons outweigh the pros on negative interest rates. And I think Powell's been articulate on that. They don't want to go there. It didn't work in Europe. It didn't work in Japan. It has done nothing but crimp
It's just
the
going to
financial
touch
sector,
VWAP.
particularly the banking sector. And given our
Or am I going to lose a bunch of money?
market funds and other funds that
Could have
are
made
available
500.
here, plus our
Could have
powerful
cashed it out.
cannot make money
But instead,
on a
here we
negative
are
yield,
going the other motherfucking
environment.
direction.
I just don't believe they're ever going to go there. And I would firmly resist it were I at the table. But keep on the theme.
We're just about out of time.
We'll watch it.
I will. Give me a real short answer to the following. Everybody sees dollar weakness. It's been pervasive just in the last 10 trading days. I see it more as euro strength. Weigh in on it in 20 seconds for me.
Okay, you have to look at the whole index.
You bounce off 320, damn it. You bounce off that 320 level. It is resistance now. It is resistance now. It is resistance now. You fucking resist.
Seeing a lot of hoarding of dollars and treasuries from around the globe. As the situation changes here and as we've had some disturbances domestically and some weakness and the presidential election is approaching, I can see this continuing. Not forcefully, but gradually, as it has been over the last 10 trading days, or 10 of the last 12 weeks, if memory serves. So let's watch that, because that also should have an influence on the yield curve in terms of foreign demand for dollar liabilities or dollar holdings.
Excellent. Richard Fisher, it's always a pleasure to talk markets with you. Thank you for joining us today. Sarah, back to you.
All right, Rick, thanks. As we had to break, our own David Faber reporting earlier, Uber is likely to be pulling out of its merger talks with Grubhub.
Hurts
and
as
that will
fuck.
likely mean a merger with a European company for Grubhub. Netherlands-based Just Eat Takeaway confirming they're in advanced discussions with Grubhub over a merger. A deal could be announced as early as today, so we'll keep an eye on that. The stock trading in Europe down about 12.8%. Squawk on the Street will be right back.
Yeah, no 320 for you again, Spy. No 320 for you again. Red brick. Red brick. Uh-oh. Down we go. Turn red. Turn red. 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 Super red now. Now get grimy with it. Yeah. 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 Bloop, 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 bloop. Bloop, 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 bloop. Fuck is going on with the Hertz? I'm freaking out. They got it because their orders are too big. They got to iceberg it on a down day. I like when you talk dirty to the candles. Let's go, baby. Downward. Downward. Red candle. Red candle. Deep red candle. Big bar. Come on. Huge bar. Down to 318. Let's go. You know where you're headed. You're headed down. Bloop, 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 bloop. Bloop, 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 bloop. Probably day trading at Fearmonger. I might hold it overnight. If the market keeps going in the right direction, I'll probably hold it overnight. Just one night, though. You know what I mean? I don't know. I might sell it at close. Probably sell it close. That's probably the smarter thing to do. I have no day trades. What was I thinking? You're praying. You are really praying this goes down today. Like, you need a 1 to 2% down day. I don't care either.
This is This is a $100 billion company.
Nikola.
$100 billion company because it's solving the biggest problem, which is
Uncle Money, baby. What's good? How you doing? Thank you for the follow.
Honestly, that's the hardest thing to do. So the next $100 billion company is going to be this. It's going to be a capital-intensive energy company.
BILI. I'm squeezing, I think. Was it 36 before the squeeze?
It's like
Damn.
Amazon. Amazon is nothing without their logistics. Amazon is logistics. It's not retail. It's logistics, and that's really what Nikola is. It's a complete ecosystem.
Well, Nikola, along with Chesapeake, Hertz, others. You also have Tesla hitting $1,000 for the first time as well. Just moments ago, investors increasingly turning speculative as they look for value in this market. Brian Sullivan is here to talk about that. Actually, Brian, not clear if they're looking for value or just the price action.
Very good question. You know, I heard Nikola. I thought Ricola.
Ricola.
I don't know if we've been here before, Mike. All right, listen, it's a bull market in
It's a
bankruptcy.
3x inverse the Russell, which has led the market beast of a short.
Tier
Whoa.
1 imports, Whiting Petroleum, all of them are favorites right now of traders, particularly on the smaller platforms like Robinhood. Okay, let's
Damn,
focus
that's
on
raging
Hertz.
right
We're not
now.
going to pick on it. I'll get to Nikola in a second. Hertz up 650% off its lows of May 22nd, I think it was, despite the fact, not only that it's bankrupt, but it's got a delisting notice from the New York Stock Exchange. It will fight that, but it's got delisting notice. Now, if you're a bull on
That's within 180 days. This thing was at a 118. Holy fucking shit. That's how you short the fucking market. My God.
Junk bond ETF, so Hertz debt is in some of those ETFs. All right, forget about that. Mike, you're going to love this one, buddy. Have you been following FANG DD? FANG DD.
I'm not doing too hard right now because Tesla ramp up production on
duo,
semi-truck
DUO.
announcement.
It is not
Good thing we
bankrupt.
got out of
It's a
that
Chinese real
shit.
estate firm nobody had heard of.
It also had the
a couple of days
craziest
ago.
run-up
It
ever.
went up 1,100% in 4 hours.
Duo.
Yesterday.
Oh my God.
Yesterday. Ostensibly
Where's Duo?
because somebody thought it was a FANG stock. I don't know. It trades on the NASDAQ, FANG DD, and there you go. It's down now, 38%. It was halted. It's come back. And they say, guys, it's all about the Benjamins. It's all about the Georges. Check this out. Citadel Securities ran a research report, and they found that stocks trading under $1, like literally the price is under $1, the George Washington, had an average gain of 79% the 5 days coming into yesterday. So, Mike, it does appear that people are not just buying Nikola, but they're also buying stocks with, I mean, just cheap. I mean, just low prices. I guess you can buy more, right? I mean,
You can
you're the
buy
market
more.
guru. What do you think?
Zero commission. You have a very small account size. It's
Wow.
frictionless to do that. I think the big question is, is this just like the eruptions of cannabis speculation and crypto, or is this something that says something about the overall market?
Bye-bye, SPY. Everybody wave bye to the SPY. Oh my God, did the stream go out?
Piece for your next
Stream
piece,
go
Mike,
out?
which is we need the retail investor to get back
I
in the
just had to
market. We had
refresh.
JJ
Hopefully it's
Kinahan on
working for
Squawk
everybody.
Box.
Oh
He
my
and I
God.
kind of got into it a
No,
little bit.
you're
JJ's
on?
a great
Okay.
guy and a good friend. And, he made a good point. The retail investor, we always moaned, the retail investor is gone. Now the retail investor is back, and we're moaning that the retail investor is back. I'm just saying, under bankruptcy, remember, folks, equity can often be zero, not always, but zero, because it's in the hands of the courts.
That's right. Most lessons, learn the hard way, Brian. We'll see how that
Damn, most lessons learned the hard way.
Next hour, how to regulate social media.
We're shorting the SPY.
Tom Rogers joins Squawk Alley to explain his latest op-ed and what comes next for the likes of Mark Zuckerberg and Jack Dorsey. Stay with us. We'll be back in just a minute.
They're talking about Hertz and CHK, aren't they? Yes, they absolutely were. Shareholders are last to get paid. Fuck, you get zero. Imagine being a worker and being told, sorry, we got to pay Robinhood shareholders. That's a good point. Yeah, exactly. That's a great point. What about employees that hold stock in the company? Like you work for the company, but you also bet on your own company, then what happens? Are you just fucked? They lose their stock, but they keep their job? No fucking way. That would suck. ACR still down? About an hour, okay. Look at Delta, they only fired like 50 people out of 45K, now they employ 75K, both bankruptcy. Bankruptcy is good for workers, bad for bond stockholders. That's how it goes. That's fair. That's fair. That's how it should be go. That's how it should go. The owners of the company should run it better.
Again.
Take a look at shares of Tesla. On March 18th, this stock was $350. Today, it's $1,009. From $350 to $1,000 in less than 90 days, as Musk comments to employees.
From 350 to 1,000. Dude, what the fuck? Yeah, especially when you borrowed money to do stock buybacks. Yeah, that's for sure. They will still lay off workers. We'll all lose the jobs if liquidated. No, dude, those companies will still run. They will just change ownership. Like the assets and things will still be there running with the employees. They will just change ownership. Swiss Diamond Club, what's good? Swiss Diamond Clubbed I Marty. Or it's a reorg to sell off the assets to someone else. Yes. Date to pay off creditors, stakeholders, etc. who want to cash out. I dropped 8% of my profits today. Tell me it'll be okay, Cat Savage. I'm even worse. You're going to be totally fine. I'm way worse, bro. I'm down a G today. Yo, SPY is moving. SPY is moving. Down hard. Down hard. Is it really? Is it really? Where's Fearmonger at? Out here trying to fearmonger me into selling my shit. Where you at, Fearmonger? Did you go crawl back under the bridge while this is happening? Get all the accounts blew up because of Genos. It could be worse. Oh my god, is that fucked? Genos, we sell shit to your kids. Yeah, oh god. Yeah, I'm out. Genos, we're creepy as fuck. Are you creepy as fuck? Invest with us. Creepy as fuck club. Genos. All these cons buying Hertz con stock going to hold the bag. Oh, they're fucked. They're so fucked. Look at this market tanking. Isn't that what it is? Genos is creepy, dude. That's a creepy company. Genos, we love kids. Winky face. Oh my god.
Our next guest has long worked with communities
oh my god, fucking
A. And help provide equal opportunities to all, regardless of race or gender. Joining us now is
Hop in the van, This is Streamer.
Jackson. Thank you for joining us. John, obviously there's a lot of attention being paid right now to the inequalities and inequities in our
It's
society.
Netflix for kids, but it's free. It has potential just not right now. Fuck that. Netflix and Disney are gonna fucking murder them. And Comcast and NBC, fucking all that shit. You think anybody's gonna subscribe to fucking Genos when they have those 10 other fucking subscriptions in their house? It's already crazy with subscriptions. Ain't nobody fucking getting no Genos motherfucking subscription. You know what your kid gets? Disney. And you know what the dad gets when he gets Disney? ES motherfucking PN, baby.
opportunity for
You
urban,
know what I mean?
suburban, and rural children and families. So what we saw in COVID gripped
HBO Max. Think about that shit.
on the inequities that exist. Inequities
I just
around
use
health,
HBO.
inequities around
Wow, they need to step it up. Isn't that AT&T?
regarding livable wages. And in 2018, the Schott Foundation
YouTube TV is legit. See, look at all that.
Loving Cities report. And in that report, we highlighted the need for local cities
$500
and states
gains. We
to
don't
begin
lose
to
over
address
here. We
the
don't
support that are
fucking lose
necessary
over here,
for
chat.
students to have an
We don't
opportunity
fucking
to learn.
lose over here.
Soon thereafter, because of the significant
Quality, speed controls, unlimited DVR, ad block works. I love Disney.
Response Fund and made grants to families.
We don't fucking lose over here, chat.
In 17 states and
No L's, dude. No L's. We ain't taking no L's today. Money Mac, what's good? What's good out there, brother?
John, here on CNBC Business Channel, we talk to CEOs all the time and share a lot of the corporate statements that have come out.
What is mine?
Pledging change.
I did the 315. Okay.
For instance, changing their hiring practices and wanting to add more diversity to their management.
Oh, is that a new low? Is that even more low? We just even going even lower? Really? Really, Spy? Really? Where's Fearmonger at? Where's Fearmonger up in this bitch? Trying to scare me out of my fucking trade. Where the fuck you at? Where the fuck you at, Fearmonger? Show your motherfucking face in this chat. Bruh.
our economy. We have over 30 million people unemployed.
Why did I do this with no day trades? Because you're gonna get paid.
Individuals who are working.
History admits you did. And we got 10 of these motherfuckers too, baby.
Businesses who were devastated by COVID. 41%, recent study, 41% of those businesses may not open.
315.
And last month we saw the unemployment rate increase for whites.
Do you need help?
Increase for whites at 12.4%, but it rose.
Keep going, new lows, baby.
16.8%. So this means
is it a SPY put you want out of? Me? Hell no. Oh, I don't care. Yeah, I think I don't care as a SPY put. He's going to be good. You should be printing right now. I don't care. Like, we're good.
That plays a significant role in our ability.
You're going to wake up tomorrow and be fine. Be totally fine.
Our economy to grow. And while I think it's good that we have companies like Jordan Brand that made.
Can you explain the notepad over here? These are the ETFs that we just bought today. This is our long-term holding money that we're not going to touch. We don't touch this money. It just sits there, it prints dividends, and it grows. These top three up here, Momentum's our #1 growth. Because we're young, we want to be heavy weighted into growth. As we get older, we transfer down into these are cash flow monthly dividend payers with less growth down here. So we have 3 monthly dividend payers, slow growth meant for cash flow, 3 meant for growth.
That lists 10 imperatives for philanthropic foundations in addressing this particular moment. And those imperatives
and we just bought a bunch of those today.
The moment for corporate America.
And we're going to hold those for as long as we can. As long as we can. Never let go. Never let go.
Gave up his board seat on Reddit, a $3 billion company that he founded, makes an impact. If you don't think so, think back when Vernon Jordan joined the board of Xerox and American Express. Soon thereafter, we saw black CEOs in both of those companies. And it's surprising today that we only have 4 African American CEOs in Fortune 500.
What press conference?
Having Marvin Ellison at Lowe's.
I need some fucking
made an impact before
crack
COVID,
in my lip. I need some fucking chapstick.
In this moment, after COVID, and in this social justice moment, Ken Frazier at Merck and Roger Ferguson.
Oh yeah, the NY.
The fact that we can name.
Or isn't the fucking Fed speaking today or something? Does anybody have a link for the Fed they can DM me? What are we doing here?
In diversity and inclusion, to use a term that your viewers I'm sure understand, they've made investments, but they don't have a lot of equity in the space because those investments have been too shallow or too sporadic in response to damage control. And when black communities look at the leadership of those companies and they look in the boardrooms, they don't see individuals that look like them. And in fact, these corporations too often are not investing in the very communities and the grassroots organizations.
C-SPAN looks like Stream Girl maybe got us. Damn.
And led us to the
Oh yeah,
moment
that's at
that many of them are
2:30.
responding
Okay,
to.
okay.
And that has to change.
We got that over here.
John Jackson, thank you for joining us and raising awareness on this issue.
Is it live right now? It's live now. What?
Market's losing a bit of steam here, Carl. Dow down about 300, even though the Nasdaq stays positive. Over to you.
Yeah, about a 2-day low on the S&P, Sarah. We'll see you this afternoon. Good morning, everybody. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan and John Ford coming to you live from separate locations on this Wednesday. We got to start with the sentiment that we're seeing today across technology. Nasdaq continues to touch new highs, was above 10K a moment ago. For the first
We went
time
from
ever
having a
yesterday,
meltdown and
coming up
taking
at 18
massive
record
losses
lows
to
of the year.
fucking
Names like Apple, Tesla leading
turning
the
it
way,
around,
making
baby.
$1,000 for the first time today. Is it too late to join the rally, or is there still time to get in? We've got a power panel to break it down for you this morning. Graycroft founder and renowned tech investor Alan Patrickoff is with us, as well as Steve Wesley, a former Tesla board member and founder of the Wesley Group. Morning, guys. Good to see you.
Good morning. Good morning.
Being here. Alan, let's start with you, because you've seen chapters like this over and over again. How does this one feel? Is it sustainable? Is it worrisome? Or is it just another era in which it's easy to make money on names you wouldn't have expected?
I think we're going through a period of, I hate to use that cliche, irrational exuberance. I think people want to just get back in the market, and they're being, I mean,
Damn.
Nicola, which you obviously have featured highly for the last couple of days, people are just anxious to put money work. There's a lot of money on the sidelines, and I personally think that we should be concerned about what's ahead for the economy the rest of the summer and into the fall. I mean, I think we're living in an artificial dream world at the moment. I think unemployment is going to increase. I think that businesses are not going to come back to work as fast as they have. On the other hand, and I'm going to be selfish, we have companies that are doing well in this environment, but they are
God, watching The Spy every minute will fucking kill you.
Going to increase, and probably, certainly, a company like Facebook and Apple and several of the others you mentioned are beneficiaries of this times we're living in. The delivery companies, as you mentioned many times. But I just think I'd be very cautious. You know, it's interesting.
Try watching TV.
Optimus
Oh my
Ride,
God.
which is private, which is a autonomous vehicle, which has specialized in, you know, small units in controlled environments, and the big application is all of a sudden breaking out.
Good sell on American Airlines. Good sell on Oxy.
Senior facilities, any enclosed facility where you need to deliver to have a driverless car. And the attention is all, you know, focused on these exciting names that appear out of no place. Any company that goes public after it doubles after it goes public in one day concerns me.
Talking Nicola.
Steve, how about you? I mean, on the one hand, artificial dream world is...
They threw it up. Oh, shit.
Words. On the other hand, you're talking about big
Should we
secular
short
changes
Nicola?
In driving and mobility that we've been talking about for a couple of years that, again, with each incremental chapter, show real promise.
Why is my stock buying power
Look,
negative?
I largely agree with Alan. We have a firm like Nikola, and I think they're going to build some great trucks with a $28 billion market cap, with no product and no revenues. I'd be thinking twice about that one. Having served on the board of Tesla, I can tell you it's damn hard to build a successful auto company. However, having said that, I think this COVID crisis, showing that we can all work from home, new technologies are going to be at the forefront. They're changing our lives. It's clearer to me by the day that firms like Amazon, Microsoft, Apple, Google, and Tesla are going to be an increasingly big part of our lives. And, you know, Tesla touched 1,000 points today for a brief period of time, 180 billion.
Ah,
I think that's
okay,
really
okay.
frothy too.
So that'll clear on the settlements.
Don't forget, Tesla has redefined what it means to be a car. It is single-handedly pulling the global auto industry into an electric world. They've redefined a car from simply being a smart box to being a connected vehicle, and perhaps the predominant connected product in your life. So there's some extraordinary things happening. I think the short answer is I agree with Alan. Be a little careful. Look at earnings, growth rates, but don't make any mistake about the fact that technology is leading us into a new world.
Yeah. Hey, Alan. It's John Fort. Good morning. So, do you expect a bucket of cold water then, perhaps, for the market? Is there something that perhaps jolts the market out of this? Well, if you think the market's in a daze, and how do you think investors should guard against that eventuality?
Jesus, what is this market doing?
I certainly would not be 100% in equities at the moment. I would have a good reserve in case I am right and there is a setback. I think people are looking towards, second quarter results, but more importantly, third quarter results when they're assuming the economy is going to be back in full steam. And I don't see that happening because of these exigent forces that are out there that are the reality. I mean, the world is not going to go back to normal that quickly, and there's a lot of extra capacity, and there's still a lot of people who are going to be unemployed, and so I would be cautious. I think it's interesting to see Steve. I haven't seen him in a long time. We knew each other a long time ago, and it's nice to indirectly see a friend on the screen. But we've seen this happen, of these wild times.
Why are they all trying to fight?
I think Nikola is a very good reflection of the market. The market is excited about a car that will not be here until 22 or 23, and has no factory, no revenues, and the market's paying $28 billion. So it's buying the future, and there is you do apply a discount to futures, and I don't know whether 28 billion is the right number, but the market's saying it is, and I think it's being fueled by a lot of capital on the ground. I think also something to keep in mind. This was a combination with Nikola is a combination with a SPAC, which I don't want to go into the whole definition of SPACs, but it's money that's sitting there waiting to get employed, and this was evidently a natural getting together. I think there seems to be you mentioned earlier today in the program, these penny stocks, low-priced stocks that are going up extraordinary amounts in a matter of days or weeks, which tells me that people are looking for micro.
Yeah, I don't think, dude, technology like cell phones is not going away. People are attached to their cell phone.
A bargain, and they're going to the major names, which you can't fight that. I mean, those are great companies that you put on the screen before.
Yeah, I'm glad we can reunite you two here on cable television. Steve, to that point, and I guess I'll just sort of like flip it the other way. Is this a good time for some of these companies that have been waiting in the wings to go public? I mean, the 8 companies that completed IPOs in the past week all raised more money than originally planned. It's the first time we've seen that dynamic in the last 2 years.
Holding fearmonger, get out of here.
Get
the fuck out of here, bro. This shit is breaking down. Look at it. What are you talking about, fearmonger? Look at you. You're only here on green bars. Where were you on all these red bars? Where were you?
So, do you expect that we're going to see more companies and more companies
Where were you?
themselves as tech companies?
No, we're not. Look at this. What the fuck are you talking about?
But I think there's 4 points here. First, there's a lot of exuberance.
How far out do you want me to zoom for this to look like we found the top?
Go out because there is an opportunity and there's an appetite.
Look at that.
But why is there that
We're going back down to here, dude. We're testing 300 again. You're fucking crazy. Holding what channel? We're not holding any fucking channel.
Sugar hit, if you will. So I'd be very, very careful about that.
This is the 4-hour candle.
As you look at investing in the future,
what are you fucking smoking?
The laws of economics have no more been suspended than the laws of physics.
What type of fucking meth are you smoking? There's 2 sides to every trade. Yeah, there's the right side and there's the wrong side, and you're on the wrong side, sir.
I joined the board when there were 29 people at the warehouse in San Carlos, California. They're now on track to doing $26 billion They've been profitable for 3 quarters in a row. The market is and should reward real growth and real margins. That's why Tesla's doing well. Maybe it shouldn't be at 1,000, but that is a real company. It's growing, and investors should be looking for new technologies that are transforming the world. Electric
Down we
vehicles
go.
are transforming the world.
Down we go.
That is a long bet. It has quite a ways to be proven, and I'm happy to go into detail.
I want to get your take now, not exactly on hydrogen.
QQQ pig. Is that a bull? Spy bear, yeah.
How politics are going to affect the market, how you expect that to happen for the rest of the year. Not looking for a political opinion, but we're heading into conventions, we're heading into a big presidential election, and the market is already, I mean, it's on a high. So
tech is the shit,
how do
for
you
sure.
expect the headlines around politics, if at all, to impact the market?
John, I apologize. Can I just cut in one thing? I want to just for a second cover this IPO. I think we are in an IPO potential window. We're seeing it by this exuberance. I can tell you, even as our firm,
Nicholas
we had a meeting
just
this week to
tanking.
talk about what could possibly be brought out in this market, and I think a lot of people are having that conversation. There've been a lot of companies around that are sitting there on the sidelines, waiting at the starting gate to get out. And I think
Should have held
we're
our
gonna
puts
see
on Nikola.
a flood of IPOs coming out, and there's obviously a lot of money around. Now go to politics. Obviously I'm a known Biden supporter, so I have to qualify my comments. I think that politics always takes over the headlines as you get closer and closer to election time, and you've got still primaries to go. I think that the president is certainly going to do everything he can to build this economy and to promote on the back of making America great again.
How do you not own any XLK? Super liquid tech ETF. Check the holdings under analyzed. My mutual funds are up 5% this year. I'm sure it overlaps with what I have.
He had something to do with the
That's probably why. XLK.
Joe has come out with
M-Tone.
great positions. He's in the right side of
Not that much overlap there.
The polls would indicate
Tech.
that he certainly is the front
Does
runner.
it overlap
Let's
VV?
not count our blessing. We always see
Not that much overlap there.
Donald Trump proved it. I think that the market will respond to how the economy responds, and they'll be concerned. They'll try to paint Joe with liberal tendencies, and
It's not
the Wall Street crowd.
What does it hold?
Tell you how it's not good, or Donald Trump will tell you how it's not good for Wall Street. I think Joe will be just as good as Donald will be and more so in building the economy back up again.
Well, yeah, you're on the record many times as being a Biden supporter.
Everybody's like, "Fuck you, bro. Fuck you."
Finally, Steve, if we're correct in assuming that there is a bit of a fiscal cliff on the economy once the PPP money runs out, once some of these companies are free to lay off workers, does the market reflect that, or is it going to look forward through all of that the way it's looking forward the business model at Nikola?
Well, look, I think the market and investors are going to look for a number of things. First, will there be continuing government stimulus? And I think there will be. But as you can see, there's a wrestling match between President Trump, who wants to get as much money into the economy as possible, and Mrs. Pelosi is saying, hey, I'm willing to put money into the economy, but I want to government, social services, preserve the nation's safety net. Mr. Trump wants to get...
I think it's very much like...
Wall Street friends. And so that's the dichotomy. I have a feeling a compromise will get split. You may see infrastructure investments, so on and so on, support for federal, state and local governments. I think the big question is, how quickly do people go back to work? And we got a little bit of a surprise in the numbers last week. We may see that in the future. But the other thing to remember is we're in a new technology-driven world. It's not about manufacturing as much anymore. It's certainly not about mineral extraction. The simple fact is, when I was a kid, and Alan was a kid, of the 10
a lot of it's growing in here. Man, I might add it, though.
6 oil companies, 3 U.S. auto companies, and either U.S. Steel or General Electric. If you're an American, you felt pretty good about that. Today, in the top 10, you've got 8 technology companies. 5 American ones, Amazon,
XLK.
Microsoft, Facebook, Apple, and and so on in 3 Chinese companies. It is a whole different world. So I think one of the underlying tenets is the market's going to go up and down, but you should look for the technology.
It's 11 a.m. Let me
leaders.
grab a cup
Just
of
make
coffee.
sure
I will be right back.
leading technology. I'm not certain hydrogen is, in the case of Nikola, in companies with real fundamentals. Do they have growth? Do they have increasing margins? When you see that line up like you do with an Apple, Amazon, or Facebook, it's probably a good bet.
Steve Allen, thank you guys. Even as we're talking, Mnuchin's on the tape talking about further economic aid probably going to be needed. We'll see you guys soon. Thanks.
And when we return, several companies have put out statements attacking racism, supporting social change. Will they make changes in the executive ranks and the boardroom? We'll ask one of the few black CEOs in the S&P, Eaton CEO Craig Arnold, about that next. Stay with us.
Did Spy try to pump while I was gone? Silly ass Spy. Fearmonger loves to comment on green. You love it, dude. Take the L, dude. You're gonna take the L today, sir. Apple, is Apple going insane? Nvidia up 5%. Jesus. All the ETF stuff does well.
Welcome back to Squawk Alley. Over 75% of board directors in the S&P 500 are white, despite growing evidence that diversity in the boardroom does also drive profits. Seema Modi breaks down the bias. Seema.
Morgan, recent events across the nation have ignited a conversation around
touch VWAP again, and down we go.
In the boardroom. Now, research from Spencer Stewart shows just under 1 in 4 new S&P 500 directors are minorities. And despite growing evidence that diversity does increase a company's return on investment, in fact, companies lagging.
Are you surviving? We are surviving. Options new.
Likely to achieve above
barely though.
Profitability. An analysis of the big tech firms shows they've been hiring more people of color, but in most cases that decreases at the leadership level. According to company diversity reports, Black and African American employees make up 26% of Amazon's workforce, but only 8% of managers. At Apple, 9% of its employees are Black. At the leadership level, just 3%. And that's why diversity coaches say companies need to unveil advancement and mentorship programs for minorities. Head of ESG at a private equity firm telling CNBC that they're also looking at how to plug diversity into their model when sourcing future deals, while other companies are rolling out programs like unconscious bias training to tackle and break down.
I drew the channel I see in my brain, Randall, but I don't know shit. Oh my god. I think we're breaking down. We're getting further and further away
Perfect
here.
place to start with our next guest, who joins us now, Eaton CEO Craig Arnold. Thanks for being on with us this morning.
Eaton.
Welcome to the show.
Pleasure to be here.
So at a time where we are having these conversations here on CNBC, and particularly from the business standpoint around discussions, dynamics involving...
You gotta DM me a link. You have to DM me the
the
link.
ways companies are trying, or perhaps
Or
in
put
some
it in the
cases
Discord.
not trying to employ more
One
of
of the
it
two.
within their ranks. Certainly you have been very busy at Eaton. When I see numbers like 50% of the board of directors are women or minorities, 50% of global leadership team U.S. minorities. How long have you been working on this? What are some of the plans and some of the protocols you've put into place? And how long
Ooh, if it breaks 318 is when it breaks your channel? Is that what you're telling me? When we break 318
as a company, we've always been what we
is
call
when we're gonna break this channel right here?
very much throughout our history.
And then what happens?
Sandy Cutler, the company has always
Whoa, I like it.
first, and certainly for Eaton, as we think about what we stand for as an organization, we talk about, why do we do what we do? We talk about as a company, we want to improve the quality of life and the environment through the work that we do as a power.
Right now, you like the risk reward to the upside,
We
huh?
have a number of what we call aspirational goals, and one of those aspirational goals is that we want to be a
VIX is tanking right now.
of inclusion and diversity. And so this is something that has been with our company for a very
Let's see what
long
VIX
time.
was
We
at,
are
though.
extremely proud of the fact that half our board is diverse, and we're extremely proud of the fact that half our leadership team is diverse. But it did take time.
And on the run up, we'll see what happens here. It's not really tanking. We did sell the AAL. Is it going up like crazy right now? Did we miss out hard? We did. Oh my god, we got scared out of it
And
this
so yes,
morning.
it's taken time, but we're absolutely thrilled with the
It
progress.
scared us out of it.
And I would say that as we think about corporations in general, I'd say corporations in general, I would acknowledge that they've made progress. I would tell you that progress for women has been the most substantial. Over the last 12 years, women, increased their diversity amongst boards by some 10 points.
They made him change his name. Oh gosh. Oh jeez. Yeah, I can see why. I didn't really realize. Please said that.
In fact, over that same period of time, some 12 years,
RSI is turning over on the SPY.
has only increased by about 2 points. And when you look at the African American community, the progress has been even more.
Like it's gonna go down? I don't care either. You think it's gonna go down?
Representation on boards has only increased by half a point over a 12-year period. And so clearly we have work to do as a society to continue to...
Who knows what duo is? Nobody knows what it is. That's what happened. That was clearly a pump and a dump. Oh my god.
We have more work to do.
Oh my
And
god.
I'm certainly proud to be here today, representing a CEO, one of 6 actually.
You know what happened to that?
U.S. companies. I know sometimes they're
Honey boy are seen.
the U.S. But clearly 6.
Our new brake pads are really cool. You're not even going to believe it. Like, let's say you're driving along the road with your family, and you're driving along, la-li-la, woo, then all of a sudden there's a truck tire in the middle of the road, and you hit the brakes.
Whew.
Whoa.
That was close. Now.
Now let's see what happens.
Now let's see what happens if you're using duo stock.
You're driving along, and all of a sudden the kids are yelling in the back seat, I gotta go to the bathroom, Daddy. Not now, damn it. Truck tire. I can't stop. There's a cliff. And your family's screaming,
Oh my god, we're burning alive. The young medic's puking at the back of the truck. The old medic's smoking a cigar. Oh my god.
and the medic gets out and says, oh my god. New guy's in the corner puking his guts out. All because you want to save a couple extra pennies. To me,
All because you wanted to make a couple extra pennies and do it.
No.
That was duo. That's duo. Do it, SPY. Breakdown from 320. That's the last time we see 320. Exited the VXX short, ready for the next wave. Okay. What are you doing? Like, you taking a VXX short out, like, at the bottom of all these, like, first green candle? And just riding each little wave? Ever hear about the inverse fix trader that lost $3.6 million and all of his friends' money? What? What? Oh my god. Oh, we can turn the ENCO back on.
It's part of the human condition. Families protect each other. Police officers support each other.
Yeah, like that's a thing?
It's also true that corporations will promote those they know and those that they feel comfortable.
Google XIV trader?
I would tell you that change has always come too late and out of price. The passage of the Civil Rights Act in 1965 when it occurred, but for blood that took place in 1965.
4 million, 3 years of hard work and other people's money.
Women have made
opportunity to bet against rising volatility, calm the markets, more profitable trade. Change, however, in the stock market began to seriously flame out last week. The ultimate gut shot landed on Monday when the Dow Jones Industrial Average was off. Smack of the red second retreat. The IX dropped 90% after hours, following a sell-off, leaving a trail of destruction in its wake. Nowhere was the pain more palpable than Reddit's Trader VIX group. Counts more than 1,800 members. One of them goes by cyber handle Kana, and he had to say it. A rough stretch would be huge of an understatement. I lost 4 million, 3 years worth of work, and other people's money, he wrote in a post, garnering lots of attention. Should I kill myself? Oh my god.
Some real momentum in the boardroom and really get much better representation numbers for women. But we really have to really think about this in the context of minorities and ask ourselves, why aren't we making the
Started with 50K for my time in the Army and a small inheritance, grew to 4 million in 3 years, which 1.5 million was capital I raised from investors who believed in me. Oh my god, those investors were friends and family. The amount of money I was making was ludicrous. Could talk out my folks and even extended family to dinners and stuff. Was planning to get a nice apartment, car, take parents on a holiday, but now it's all gone. Oh my god. Oh my god. Dude, this is horrible. Hey man, I know others have said it, but I'm here for you, man. Oh my fucking god. Jesus, dude, if you were able to turn 36K into 2.5 million, make back all that lost money and then some, you just have to learn from the lesson, give it time, you'll make it back in no time. Sounds cliche as fuck, but you know it's true. Oh my god. Oh my god. Oof. That's fucking rough. How do I do that, though? You stop being a green candle. You stop that. There we go. Downward momentum. It's designed to go to 0. Short TVIX anytime it goes up, really. Yeah, do your research later. Damn. It's designed to go to 0, but then it goes back up, right? Because people buy it. Like, so why didn't he just wait? Why did he sell and realize? Why did he realize all those losses? It lost so much money it stopped trading. Wait, but if he's short, doesn't he just... Isn't that the ultimate, like it went to zero? And you don't have to buy the shares back, right? That sucks. Sucks to be that guy. Sucks to be that guy. Never put it all on the line. Like in one bet. That's fucking all of it? 100% of the money you put on the line in one bet? What are you doing, dude? Tough spot. What's good this morning? Cheers, brother. Yeah, he needs to watch Rounders, seriously. Okay, we bounce off 320 again. Now where do we go? By the end of the day, it could get nasty for this buy. Wonder what that dude's up to now, seriously. I wonder if he's still alive. I hope he is. He probably has some story where he made a bunch of money back. That's the thing. If you're a CEO and you fail, you just work somewhere else. You don't become a worker. What happens when you fail as a trader? You just go broke. You're homeless. Why did you hold AAL for long? Didn't you? Why? Is it up like crazy now? Oh my god. I mean, we're still down, so... Still has a long way to go to even just break even. But my god, it scared me the fuck out of there. Doesn't matter though, we're about to make it all back in the SPY real quick. Seems tough, fearmonger. To profit every single day, very stressful. I spent like $3,500 on perfume before COVID and haven't been outside since. Because I can smell it. I'm thinking I'm from The Walking Dead. Oh my god. At least you smell good, yeah. As long as you enjoy it. Damn. SPY breakdown, dude. I would love this thing to break down into the 318 range. We sold Oxy. We sold it. We sold American Airlines. Yeah, I only have ADMA. It's holding this $3 level pretty well. Jesus, 320. It wants to hold 320 so bad on the SPY. I get that, though. It should be a battle. It should be a battle point. Right? Like, this is a fair battle point. Are we live over here?
Welcome back. Our next guest has decided to take on a Gordian knot of a question. How do you regulate social media when
there we go, SPY.
It's the title and subject of his latest op-ed for CNBC.com. Former TiVo CEO and WinView Executive Chairman Tom Rogers joins us now. Tom, good morning.
There we go.
John. Good to see you.
Good to see you, Tom. You propose a system where a panel of 3 outside arbitrators decides whether any given post violates rules on the major platform. And I believe if an account has 10 posts in violation, it gets suspended for a year. I'm trying to boil down your column into a couple of sentences. But why do you think that this is the way to do it? And are you worried about too much kind of panel regulation of speech?
Well, John, as you said, there's no good answer. And this is a better answer than what we heard out of Zuckerberg or heard out of Dorsey or heard out of Trump.
He's like, I'm giving you a better answer, so put me on TV.
Hey, not me. Social media platforms shouldn't be in the middle of this at all. Dorsey,
now if we're breaking down from 320, it's pretty clear we're not 320, so where do we go from here? We go down to like 310, right?
Basically trying to intimidate social media platforms to stay the hell out of the way. So the question is, what is the best answer? I basically propose a 4th way, which is who should be the arbiter of truth? Arbiter should be the arbiter of truth. And my basic premise is all views should be aired, but all views should also be subject to airing. And what I mean by that is airing, arbitration, independent review, and lay out a 12-element process. You summarize some of it, but the question is, what do we do to have some kind of sensible, independent system here where we don't have the wild west of social media with no accountability, but at the same time do not concentrate more power in the social media platform, letting them be the sole determiners of what's objectionable speech or not.
Now, Tom, you were kind enough to send me a draft of this, and I spent some time, looking through it, thinking about it. First, I thought, boy, a layer of regulation and people deciding stuff on speech. But then I thought, okay, well, companies have boards, and they're constituted a certain way, and there are rules that certain types of companies of a certain size have to have boards constituted in a certain way. And so, maybe this makes a lot of sense. Maybe we're in an era now where social media platforms have such power, and the speech of certain people on those platforms has such an effect that there needs to be a structure around it. Is that really where we are?
I think you've said that well. The premise here is Section 230, the Communications Decency Act, which got a lot of play last week, and that's the provision that gives a liability shield to social media platforms so that third-party speech on those platforms, they can't be held liable. And that's an incredibly valuable liability shield because it shelters them from what could be millions or even billions.
There might be a little bit of an echo, dude. We're waiting on an adapter to show up so we can put our headphones back on.
And my view is there's a precedent for this.
Sorry.
Broadcasters got exclusive.
There should be a little bit of an echo, though.
When there were very few ways to
You're
get
not
news
crazy.
out electronically. But in return for that, they had certain public interest obligations, including a fairness doctrine, which basically set up a process whereby it made it possible to challenge
2,500% on Apple calls. Holy fucking
now, you had as
shit.
big a chance of getting held accountable under the fairness doctrine as you did being hit by a meteor in your backyard. But the existence of the process itself brought some degree of accountability
Apple
to broadcasters
raging.
who got that exclusive valuable license. Well, here social media platforms are getting a very valuable liability shield. And the question is, should they have some kind of process in the public interest so we can police objectionable speech on those platforms. You have to pay for that, and there's another precedent, which is spectrum auctions or spectrum fees, where today valuable spectrum is paid for by the recipients of that spectrum. I propose some kind of tax or fee on the largest social media platforms to pay for this arbitration process. But this isn't unprecedented. It's a way to keep the government out of deciding what is objectionable speech, but in return for something the government conveys, having to have some kind of public interest process that you're responsible for.
Yeah, and of course, as one of the pioneers of cable news, Tom, you certainly know that precedent very, very well. I was just going to ask you who's going to pay for this. I guess my other question for you, though, is going to be, have you already started to have conversations, whether it's with lawmakers or with companies or others themselves, about this possibility and what it would take to actually institute it?
Well, I haven't yet. I used to be one of those lawmakers when I was senior counsel to the House Telecommunications Committee, trying to wrestle with these issues. And back then, when I was there, it was, geez, how are we going to create more electronic voices out there? And it was in the early days of cable and needed to create a way for more voices to develop, which helped generate cable television program services and cable news. We got more voices out there. We got a lot more voices out there. Now the issue isn't so much how do you get more voices? Billions of people have access to social media and can speak. The question is, how do we create some kind of independent mechanism so that the speech can take place in a way where people know there's recourse and accountability for totally irresponsible speech? My guess is we're going to need a change of administration and a change of Congress for something like this to get some momentum. So hopefully the proposal can be alive come
this is killing me.
Next January.
Hey, Tom, it's Carl. I thought the Snapchat move was interesting, in which Evan Spiegel said they would no longer promote the president's snaps. I wonder if you think that's equally clumsy, or whether the president or anybody deserves or has the right to amplification, and if that's a target right for regulation as well.
Well, I don't think you should limit speech. I don't, unless it is grossly irresponsible. And the issue here is any one social media platform's management or CEO taking it upon themselves to put them in a position of hiding or limiting speech without there being some kind of independent process, I think does concentrate more power in the social media platform. Zuckerberg professes, look, the social media platform shouldn't be in the middle of it. This proposal avoids the social media platforms being in the middle of it. Dorsey's view is, hey, this should have social media platforms need to hold speech accountable. Well, this
yes, I'm in spy puts right now.
Concentrating more power in the social media platform itself by having an independent process. Trump says you better not have any conservative bias, and this is intended to make sure that an arbitration,
we need the spy to go down to 315.
Picks an arbiter, and the two arbiters pick a third arbiter. The way all arbitration works assures that you don't have built-in anti-conservative bias. So what they each profess they want by way of a system, this approach is
dude, the airlines are going crazy now.
Do it in a way that avoids the pitfalls.
All I had to do was wait.
Three of them propose.
I got a head scratcher for you to close out, Tom, and that is, would an account be equally accountable for what it retweets or shares, or just what it actually states? Because there are all kinds of issues around the messages that end up getting amplified sometimes by these popular accounts.
Well, there are many sub-issues here, including the fact you can't possibly have an arbitration over every single tweet or Facebook post. So you have to have some filtering mechanism with an independent board that you talked about, where it rises to a level that would be worthy of that. And you have billions of people using it, so it's really only people with huge followings or tweets or retweets that become truly newsworthy that would arise to the level of this being a meaningful process. The liability shield, of course, allows them social media platforms to avoid liability for tweets and retweets and the amplification, no matter how many times it is out there. But the fact that that amplification exists creates a world where we can't simply allow totally irresponsible speech as the Facebook employees that revolted against Zuckerberg said, from being able to exist without some kind of recourse. This is not, there's no great answer. As
Breakdown, Spy. Breakdown.
Yeah, this is
there we go.
Thorough attempt at tackling this that I've seen. Tom, thank you.
Thank you for having me. Appreciate it.
Coming up later on today, Larry Kudlow is going to join Kelly Evans on the exchange, 1 p.m. Eastern time this afternoon, as Mnuchin, in testimony today, says, I definitely think we are going to need another bipartisan legislation to put more money into the economy.
Which we're not going to get. We're going to put a bunch of fucking stress on with this Fed meeting and shit. Please go down. Ah! We're gambling hard, chat. We're gambling so hard. Breakdown. They announced stimulus, it's gonna moon, it's true. I don't think they are, though, dude. The market's running up so high. We're, like, reopening and shit. They're going to be like, all right, everybody back to work. What the fuck? Who would pay more? Who would make large buys and pay more for it? Cash, you know. What does that even mean? They are off-market exchanges. My rounds has been full tilt since April, though. It's true. How do you see these dark pools? I don't trust that. I don't trust that anybody would pay more than what the price is. Like, nobody's paying $3.22 right now when you can get it on the open market for $3.19.
We've mentioned it earlier this hour, but take a look again at shares.
Vroom.
Vroom. We spoke to the CEO around this time yesterday as the company went public over at the NASDAQ. The stock surged nearly 120% to close its first trading day yesterday. As you can see there, shares are slightly lower, down about 1.5%, but still more than doubled from that IPO price. Squawk Alley, the home of IPOs, returns in just a moment.
When we first got the early days of COVID, we were kind of evaluating. Obviously, that didn't seem to be the right time.
I agree.
We saw some
I agree. I don't care either. I totally agree. We're in a downtrend right now.
March and into April, and then we actually saw that there was a great opportunity for us to move the business forward. So we got into testing the waters, got into the roadshow, and we're obviously.
Woot woot, booked a profit on Vroom before the dump. Yeah, we did. That was nice. That was nice. 58. Damn, you did get near the top. Right? We need just the SPY to go down. Where do we start the music YouTube at today? I kind of want to start somewhere old. Do we want a little Sir Clay in the background? I actually like the idea of that. That one yesterday was dope. Little FKJ. As we watch the spy tank, little FKJ, to help us with our day. Need the spy to eat shit. Spy eat shit.
It's not just expanded 20%, but when people look at the list of investors that are...
Does he have no t-shirt on? Open chested for the IPO in 2010? Is that what that was? The open chested Tesla IPO? He's like, I'm a billionaire. I don't have to wear your tie. I'm selling my shares to the common man to make some money. Might go buy a house, maybe a private island. Fuck it, let's shoot shit into space with your money. I'm gonna blow shit up. Maybe send a couple guys to the space station. Don't stop, Red. This is beautiful. Are you still selling options? Every now and then, yeah. Right now, we bought options today. We bought put options on the SPY. We are the sucker today. We are the sucker today. Collapse. We need you. There's literally an ETF for everything there is. 2x Tesla, 3x Microsoft. What? Ready for the wave up here then, Moon? That would suck. It is going back above VWAP again. Scary. Go to the park when I get back. We'll do some legs. Oh shit. Yeah, streamer girl, that's super crazy. What the fuck was that? There was a bar. I had to remove the bar so I could look at the chart. American Airlines is just fucking great. Oxy. We should have just held. Down spy. God, it's teasing the fuck out of me. Not taking advantage of the swings. Adjusting that this week, really? You just go into studies, adjust studies, and then you would just remove it. Hold on. Back the ball. I went into studies, edit studies. Chris, C-R-I-S. Ship it, what's good? I like going all in Baba. Oh my god, Captain H, that's crazy. Spy breakdown. Please break down, Spy. Come on. I do trade on one monitor right now, Fearmonger. We have a standing desk that's supposed to ship here shortly. When that gets here, the next maneuver is to get more monitors for sure. It's so hard. We can't see enough charts. We can't see enough charts well enough right now. I have two monitors, but one gets used for the stream. One's got like overlay and chat and all that shit on it, you know what I mean? Keep this peaceful shit on in the background when we're trading. Yeah, like 6 monitors, you can't even look at all that anyway. Like, but having a couple monitors just to keep a lot of charts up is really good. Stream down, stream should not be down. Poker Chef Jeff says printing. It's good this morning, Poker Chef Jeff. West Coast waking up. I'm one. ACR. Sign up to play on ACR with us too. Although ACR is down right now. Going on a long walk this morning before the grind. That's what's up. I think America's card room's down anyway, Poker Chef Jeff, so. Oh no, is it up now? Are we up and running? We seem to be up and running.
go back home. I don't wanna go back alone. I don't wanna go back home. I don't wanna go back alone.
ACL's the only one the turns up. It just got up. Yeah, dude, I'm down to play a little Tarkov today.
I don't wanna go back home. I don't wanna go back alone.
Six back. The best thing we can play is the 1250 2-hour late reg here. 360. We just won a tournament into the million yesterday, the 265 million. We won a seat in for $8.80 yesterday. Global does have soft players. They all have bots, and I think they're doing the most to fight bots, Fearmonger. Yeah, no synchronized brakes on global. That is annoying. Wow, Spy's raging up here. Doesn't want to stop. Can't stop. Won't stop. Oh no, I completed too many round trips on accident. No. It wasn't showing this morning. It wasn't showing this morning. Oh my god. Back third. Be back third for the year already. Son of a fucking biscuit Yeah, it's only 90 days, but I don't want to deal with that for 90 days. 90 days of locking up my money? Fuck that. Yeah, you can still close what you have. I am. I'm definitely going to call them and be like, it was not showing this morning. What did I get a day trade on? Just one day trade on D King is it, right? That's it. I'm never gonna financially recover from this. Mayberry41, thank you very much for the follow. I appreciate it. You're gonna head to Vegas for the WSOP. Damn, that's what's up. I might make the move. I might go try and hit some of it up for sure. Buy the right nano caps, you make 1,000x easy. What? God, breaking 319.43 would be really nice here. Trade ready for third, plus 240. What is going on here? Why can't I day trade? We're headed away from 320 fast now. Break this, break this. Break to 319.45. Yeah, it's true. Trading off the 5 minute. I like that. I like looking at that better. I agree with that, Fearmonger. 1 minute, it's just like too volatile. There it goes. It broke that 345 number. From the 1 minute chart all the way to the monthly, it's nuts, yeah. Larger trends and setups and forums. Yeah, now I'm back to 5 minutes for intraday trading. That makes sense. That makes sense. We'll see. It's definitely fighting to hold 320 all morning. So if today ends up being the first sign of weakness, though, we might dump into the close. Or we might consolidate and go up at the close if we just consolidate right here all day. Maybe grab lunch, hit the bong, and reassess. Totally possible. I wish I would have never left American Airlines, I know that. You know what made me do that? An accidental getting out of fucking Delta Airlines. I was like, oh, I still want airline fucking exposure. Dude, if the SPY's not worth 320, it's got to go test 315, doesn't it? If we're fighting for 320, we got to go test 315 again. Airlines and Boeing are starting to dump now. If they start to drag the market back down, this is going to be great. Everything was going up and the SPY was just kind of hanging at 320. If everything starts going down now to finish the day, this is going to be fucking a good play. Look at the airlines taking a dump. Oxy's taking a dump. SPY is fighting for every cent. American Airlines is taking a shit. If you guys are still in American Airlines and Oxy, now's a good opportunity to cash out, bro. That was a nice little run up all morning from a dump back to where it opened and then down again. Now all that weight begins to start to drag on the SPY, baby. Just out of curiosity, like, what is the SPY's biggest holding? All that tech that people go into for safety, so that's actually kind of scary. Keeping that little trend there. Crayons, baby, crayons. It is coiling up, it's not good. Seems to immediately get pushed right back down. No, you can't lose more than you spend on an option. Not if you're a buyer, yeah. Making moves for something. Going up. These lines mean absolutely nothing. Let's bring this up a bit. Let that be its last hurrah. Above 320. Shoots way back up. Yeah, FedEx Kinko's. Just yesterday we shipped a ticket into the 265. The 265 milli for Sunday. $8.88 satellite. Who the fuck is Vero, that YOLO CHK? What? Ship that milli, please. Please let us ship the milli. Day trade and we were up $500. We locked our account anyway. No, I've never played with that fearmonger. Interesting. Turn around. Spy at 322. No. No. These guys are like techs closing at a record high.
You've trimmed some of Twilio, okay? You trimmed Home Depot, a new all-time high today. You trimmed Home Depot. You don't sound overly negative on the market, but you are taking some profits in some of the higher flyers in your book.
Sure. Well, I think that's the role of a portfolio manager. These are long-term holdings for us. Our job is to maximize, we call it the real estate of our portfolio. And if we have names that we bought like Twilio that just had that enormous 100% move quickly, then I think it's prudent to move that down from a pretty big weight.
Your bet becomes a day trade, then it becomes speculation, then it becomes an investment. That's the rule.
It's just more reasonable. There's risk. Whenever there are high prices, as Joe attests to, people take profits, and people start to see that there are other places to put their money, and they also have further to fall if there's any bad news. So I think that it's the wise thing to do, to take some money off the table where you've hit price targets. Investors should do that, and then you look for other places to put the money. I mean, we own Remax and Booking Holdings, to Tom's point, that these are the type of names that will do well when people start to travel and they move and they buy houses. So you have to have some of the other side.
Let's do the math. The options are priced in the house advantage based on Black-Scholes. There isn't a better model publicly available. And they're beating you every time, so you might as well you gotta just fucking fire and pray, baby.
26 and a half minutes ago, and we said that you had sold Amazon. We did see on an intraday basis that stock give up some of its gains. That's how long it took to get them back. You see that V on your screen right there? You have a return. I mean that is just indicative. That's indicative though about where stocks are, where the mentality is right now. There is no great appetite to sell stocks.
That is just incredibly foolish if anyone is selling Amazon based on me saying that I'm ringing the register. Scott, I don't know if we have
options are priced by Black-Scholes, so it makes sense to use a reference point for prices.
I don't have that time.
The only good reason for buying options should be to protect yourself against making a taxable transaction that you'd like to avoid. Really?
All right, that's fun strats. Tom Lee.
Definitely, I'm definitely speculating.
Now, guys. Coming up next. Well, Weiss talked about his selling the airlines, but we're going to tease that anyway. And we do have a big call today from a #1 airline analyst. We're going to debate that in our call today. We're back in 2 minutes.
Options are trading volatility. General buying options is a sucker play 100% of the time. This is true. There's gambling, betting, and speculation, and then investing, and they're different. I'm doing all that. I'm doing all that shit on this stream. We do all that here on the Rand Corp channel. We fucking gamble, we bet, we speculate, and we invest. If you're willing to lose money on the option to protect an investment from paying 30% taxes, otherwise the math doesn't work out. How do we get this thing to go down? How do we get the SPY to go down? What is everything else doing? Like, what is Bank of America doing? What is JPM doing? What is P&G doing? J&J. Microsoft is just raging. Amazon is Apple raging. Facebook's meh. So why is the SPY up? Apple and Microsoft is a huge part of SPY, that's true.
right, let's go to Phil LeBeau now. Has a news alert for us on Boeing. Hey, Phil.
Scott, we have confirmed through multiple sources that Boeing is in fact targeting a recertification flight or flights for the 737 MAX by the end of the month. So that means Boeing has less than 3 weeks for this to happen, if in fact it does make it before the end of the month. We have reached out to Boeing for a comment. The company says it is not saying anything officially regarding these reports or what we've learned through sources. We have also reached out to the FAA. It says that the FAA is in regular contact with Boeing as the company continues its work on the 737
They're like, we're in contact, their shit's fucked.
Compliance with all certification standards. The aircraft will be cleared for return to passenger service only after the FAA is satisfied with all safety-related issues.
Traders out getting sandwiches, no joke. People eating a lot of exchanges shut down for an hour or two to have lunch.
Officially, it is not commenting on potential timing for a certification flight or recertification flight. Just so you know how this works, Scott, Boeing has drawn up flight plans. It would then use those flight plans in the recertification flight, which I'm told may not just be one, it may be a couple of them over a day or two. And the pilot is an FAA test pilot. It is not a Boeing test pilot. A Boeing test pilot is in the co-pilot seat. And
More movies. Yeah, they are up. They're at all-time highs, Skills Patrick. Yeah, like higher than the all-time high? What do you mean?
Software for the flight controls of the 737 MAX can handle a number of different scenarios. So again, what we are told is that Boeing is targeting doing a recertification flight or flights by the end of the month.
With that follow out there, tapping.
Nobody knows this business, this industry better than you.
Right?
Nobody knows
Thank
what
you
these
for the
companies
follow.
are going through better than you because
You trade mostly. We trade everything.
When you look
We
at
trade everything. Stocks.
In Boeing,
fucking trade pork bellies and soy meal. Oh my god, know that. And high taxes, options, all types of shit.
Or United up 55, or Southwest up 31. What do you think?
Two different things. One, when you look at Boeing, keep in mind that it has a backlog. Even though the backlog has come down, its backlog is 4,744 planes. This is a company that's not going away. It has secured enough financing so that it can ride out this storm. So I understand the investors looking at shares of Boeing and saying, look, eventually its business will come back. Let's move it higher. Whether or not it should have moved as much as it has over the last 3 weeks, that's a separate question. When you look at the airlines, that one's more baffling.
I'm paying higher taxes. Do you make more than 6 things a year? No. What's your net worth down to the penny? Social Security number. Oh my god.
To 40 million to 40 million instead of 50 million.
Versus 50. That said, Scott, people are they're taking these little pieces of good news in terms of more people flying, and they're immediately extrapolating or pushing these stocks higher, saying, well, they're going back to where they were pre-coronavirus. That's not happening. There's not a single person in the airline industry who expects these companies to be back to the same levels of passengers that they were pre-coronavirus, at least until 2022, late 2022.
Damn, how do you learn to trade bonds? There's a bunch of info out there for bonds. I don't know anything about bonds.
So when you see these
I think you buy and hold bonds, right? I don't know if bonds are meant for trading. Which virus, man? Don't trade bonds. Yeah, I don't think you're meant to trade them.
And long, because they can't be thinking about the short run, right? There's no justification for it, as you said. But as Tom Lee told us before you came on, you have to have a much longer view and vision if you think that these so-called epicenter or reopening stocks are going to be the ones you want to put your money into. Phil, I appreciate it as always. Thank you.
You bet.
That's Phil LeBeau. Oh, by the way, the #1 airline analyst on Wall Street from JP Morgan, Jamie Baker, makes a couple of interesting calls today. Steve Weiss, so JP Morgan downgraded JetBlue and United Airlines, okay? United gets to neutral. JetBlue goes to sell from neutral. You want to take those two? They revised some price targets as well. But you told us earlier that you sold out of United. So I suppose you agree with
Shit's getting wrecked now.
I do. I sold out of Delta as well. So on yesterday's show, I mentioned I sold half my United position and the calls and sold the remainder. I do agree. They're way ahead of themselves. And equity investors are essentially
the whole market's way ahead of itself.
If you dissolve these companies today, there'd be no equity value because everything is collateralized against the debt. So I think it does take a long time to come back. It took 3 years to come back after September 11th. the companies are going to have greater costs to handle the passengers, and the burn rates aren't going away anytime soon. So Phil's said what I said. You're basically taking a chart of the fundamentals, and it's going from the
My
bottom
dad's
left
trading
to
success
the
involves
upper right.
Singaporean
However, it's not gonna
jet
keep
fuel
going to that
futures.
corner.
What
It's
the
gonna stop,
fuck?
I think,
So that
if
is
the
oddly
stocks go down.
specific.
So they're way ahead of themselves.
It
I'd
has
rather
to
wait
go.
to get
It's
back in.
destiny.
Trades,
They're still listed
stay
in
away
TOS,
from
really.
They can go a little higher, but eventually reality's going to set in.
Yeah. Well, look, it's like anything else.
Take
right?
us down,
mar-
baby.
markets
Take
can
us
remain
down.
Irrational. Just because they're irrational doesn't mean they need to go down. Right? They stay irrational for a long time. If you believe they're irrational, some don't. Tom Lee doesn't. A lot of our viewers don't. Right? Greenspan said irrational exuberance. The stock market went up for like 4 years after that.
Right, and I agree, but I think it's much less irrational in the tech stocks. We've been talking about FANGs for 15 years in terms of the outperformance. That will continue. I agree with John.
All right, let's get to Sue Herrera with the headlines for us again today. Hi, Sue.
Hello, Scott. Hello, everyone. Here's what's happening at this
Sue,
hour.
what's happening?
The Minneapolis Police Department is pulling out of police union contract negotiations. Chief Arredondo says that the contract needs to be restructured to provide more transparency and
Sue's a nice
flexibility
lady.
for true
She's a
police
nice
reform.
lady. She's trying to bring a
Dr.
little bit of the
Anthony Fauci
regular
says
news
the
onto
World Health
CNBC, you
Organization
know?
was, quote, not correct when it said asymptomatic transmission of the virus is rare.
We give her like a couple minutes every couple hours. Like, no big deal.
And now say they're trying to be clear about the developing research on COVID-19.
Singapore bogus
Treasury
97
Secretary
jet
Steve
fuel
Mnuchin says he
Platts
definitely
futures or something
believes
bizarre.
another
Oh my
stimulus
god.
bill is needed. He said this round of aid, though, should be
How
more
is he
targeted.
trading that shit?
And PGA Tour golf starts
Breaking
back up
320
tomorrow
again.
with the Charles Schwab Challenge in Fort Worth, Texas. Fans, though, will have to watch on
They just
TV.
wanted to scare us.
They
I
won't
don't
be
care
allowed at
either.
Tournaments until mid-July. You can go to CNBC.com for more on the sports return. Well, at least you can watch it on TV. That's the news update. Scotty, back to you.
Yep, looking forward to that, Sue. Thanks so much. Ahead on halftime, John Najarian has unusual activity. And we're answering your questions in Ask Halftime. Still have time to reach us, too. Go to cnbc.com/halftime. You can tweet us as well. We're back right after this.
Now I have to be super crazy. You can call me Chris if you remember that. I think I'll be on here enough. That's what's up, Chris. That's what's up. I don't care either. It's Chris. I might forget. I'm fucking horrible with that shit, but I'll try to remember for sure. I'm glad I bought D King Weekly Open, PGA Golf Tourneys. Really? We tried to do the D King play. It didn't work today. Didn't work for us today. My best bud has won 30K multiple times on DraftKings with PGA. He's a sicko. What? That'd be crazy. I want to know Marty's plays today. I don't know what his plays are. King Anne. Break 320. Breakdown. Let's have a rough afternoon. Super rough, starting at 1 o'clock. You want me to text Marty? I text him. I said, you have to give us your ticker.
Welcome back. The protests around inequality have shined a light again on the need for more diversity in business. Today, our Seema Modi looking at corporate boardrooms. Seema, what'd you find?
Scott, companies with a higher proportion of ethnically diverse executives in decision-making roles can lead to higher profits. That's according to research from McKinsey. Yet,
break below
320.
Do it.
Are non-minorities. 10% are black, 5% are Hispanic, and 4% are Asian. Now, diversity reports issued by big tech companies shows companies like Amazon, Apple, Google, and Facebook are hiring people of color. But as you climb the corporate ladder, the number of senior roles in many cases decreases for black employees. Blacks make up 9% of Apple's workforce and 3% at the leadership level. Yale's Jeff Sonnenfeld telling me that's pushed more companies to do some serious soul searching and look inward around staffing, training, mentorship programs to help minorities advance their careers and get to those senior positions. MasterCard telling us it's defining inclusion as a leadership skill. In other words, measuring how leaders are able to successfully build diverse teams. Goldman Sachs earlier this year saying it refuses to take a company public unless it has at least one woman or non-white board member. And starting in 2021, the state of Illinois requiring companies to begin disclosing the number of women and minority board members, all seen as steps in the right direction, Scott, because clearly more needs to be done on the policy side, but also in corporate America.
Yeah, absolutely. And that's what we're hearing from everybody who's been on the network over the past few weeks. Seema, thank you for that. That's Seema Modi. Up next, a major development in the race for a COVID-19 vaccine. New at noon, our Meg Terrell has J&J's Chief Scientific Officer.
No.
It's a big interview. You do not want to miss it. We're back right after this. That's stock.
No. They're going to be like, we've got a vaccine. The world's back open. Break it. What do you mean what number it kills your option? Like how high is gone? It matters by expiration. Your option will always be worth something until expiration. It'll be worth a penny if it's fucked. Fuck.
Welcome back to the halftime report. The Dow down today. However, J&J is up. Let's get to Meg Terrell right now. She has new developments in the race for a coronavirus vaccine. Meg, take it away.
Scott, thanks so much. And joining us now is Johnson & Johnson Chief Scientific Officer, Dr. Paul Stoffels. Dr. Stoffels, great to have you here. The news today, you've accelerated the planned start of human clinical trials for your COVID vaccine by at least a month, now planning to start at the second half of July. Previously, you'd said September. How have you been able to accelerate these timelines so much?
Thank you, Meg, for having me. Yes, we have been able to accelerate because we came quickly to the selection of the final candidate faster than we expected based on very strong animal data. The non-human primate data showed very good results, and that's where we selected our final candidate. We could accelerate then time to the clinical material for the phase 1 clinical trials, as well as we worked with the regulatory authorities, FDA and in Europe, to accelerate the time to phase 1, and that is now planned for the second half of July.
Unless I get out before with that profit, no, I can't fear. I think we could still see 311. I think we could still see it go down too. I think it's fighting 320 really hard here. Naturally, it should. But I think once it really breaks down here, it's going to break.
As soon as September. Does that timeline look right to you? And how are you forecasting how much infection we might be seeing in the United States at that time and whether efficacy can be proven quickly?
Marty
goes, pick what? A ticker? I'm like, yes, a ticker.
On the phase 1, how the outcome is, and the discussion with the regulator then to start phase 3. But we are going to start. We are going to study a single.
My expiration is next Friday, Cashew Nut. Next Friday. 3:15 by next Friday.
Then to a mid-September, late September start of efficacy. We start planning now for efficacy studies starting mid-September. Answering on the question on where is the epidemic at that moment and the incidence, we don't know.
I paid $387.
That there might be a second wave in the second part of the year in the U.S. And together
so
with
we need
the
311
NIH,
basically.
we are looking into how can we make flexible arrangements to go north, south, east, or west in the U.S. and see where the highest incidence at that moment is to start a clinical trial. In addition to that, we also look in international, whether it's South America and Europe or even in Africa, to see, if needed, where can we recruit the number of people to be vaccinated to have enough people in the study to get to efficacy signals fast.
Well, I also want to ask you about safety, moving at these unprecedented speeds. You know, Zeke Emanuel and Paul Offit wrote in the New York Times in an op-ed just a couple days ago that, quote, if only 20,000 people get the vaccine in trials, serious but rare side effects might be missed. How do you ensure safety moving at these speeds and with this size of trial?
Yeah, first we have already vaccinated with the same vector more than 65,000 people. That gives us already a lot of comfort that and it's very well tolerated, extremely well tolerated in other vaccinations. Such
we need this thing to break below 320. Do it.
We will go and study at least 30,000 people, but probably depending on the incidence, if that's lower, we go up to several 10,000 more. So somewhere between 30 and 100,000 people will be evaluated. But let's reassure you, Mac, we will not take undue risk here. We want to have a safe and effective vaccine, and we will do whatever is needed. We'll also
break it. Break it.
People as well as in younger.
Break
so
it.
All parts of society participate in phase 1 and into the efficacy studies to make sure we learn as much as we can.
Break below VUI.
Vaccine to people.
What is your expectation of the criteria that regulators are looking for to make their first approvals, whether they're approvals or emergency use authorization? Will they be looking for how well the vaccine actually protects against people getting infected? Or, as some have suggested, will they be making those decisions potentially based on the antibody response from the vaccine?
Marty, quick pick. Quick pick. He's probably doing like 3 hours of research now for you guys. He's going to come back tomorrow morning with this pick.
All the discussions we have today with the regulators
calculations, engineering a model right now. They're 3D printing a model in the shop.
And there will be a lot of other markers which will be measured, and we want to do that.
Majin got wrecked on yellowing his Disney put 25K on the line. Oh my goodness.
But our objective is to do a clinical efficacy study with clinical endpoints. Can we prevent infection? Can we prevent disease? Maybe that could change in the future if data are very strong with other vaccines, but at the moment we don't count on that. We want to have clean efficacy and clean safety.
Well, you also mentioned you are pursuing the potential for giving a booster
Break
shot.
down.
What is your expectation of how long immunity
God, the
from
spy wants
a
to break
potential
so
vaccine,
bad.
potential vaccine?
In Ebola, that now we have data of 3-4 years. That was with a prime boost. In RSV, we are now doing studies with a single injection, and that's what we are learning now. So we might have a good chance to have a single dose injections to start with, but to get long-term protection.
Damn,
most
Cashew
probably
Nut's
we
on
need to take a
fire.
boost
We need Cashew
1,
Nut
2, or
to
3
stick
years
around.
later.
Tell us when you make
Speculation
plays,
at the
brother.
moment. We'll demonstrate that in clinical trial, and all of that will be part of the clinical trial program.
All right. Well, Dr. Stoffels, thank you for joining us. It is early days. You're reminding us, and we look forward to hearing more as you start the human clinical trials. Thanks again.
Oh, thank you very much.
All right, Scott, back over to you.
Meg, it sounds like encouraging news. I'm just looking over here at my screen of J&J shares, which are now at the highs of the day, up now more than
J&J.
2%. You see that move there. Meg, thank you for that. Have a feeling maybe I'll see you later on our special. Who knows? But that was a big interview, and it's moving shares of J&J. That's Meg Terrell with us. Carrie, you know, I don't think anybody on our panel owns J&J. You certainly know it from your many years running that fund.
How do you guys not own J&J? He was eating.
Yeah, I think it's a fantastic company, and I know about this vaccine effort because it's a collaboration with a lab at the Beth Israel Deaconess Medical Center in Boston, where I've been on the board for many years. And it's an interesting approach because it used fragments of the DNA, and it's
looking at BA for post-split waiting.
Virus, that's the vector that they use. And I think it's going to be fascinating to see whether its approach and Moderna's, which are similar but different. RNA is what Moderna is using, and DNA is what we're using in the J&J vaccine, to see the type of neutralizing antibody response, which is what you need to elicit. I think it's a fantastic program, and J&J is a great company. We don't own it right now, but of the healthcare stocks out there, I think it's one of the more interesting of the large caps.
This also goes to, again, highs of the day, 2 1/3% off Meg's interview there with the chief scientific officer of J&J, which says the company is ahead of its schedule in terms of trials. Doc, this goes right back to where we started. You go full circle, and why it's difficult to get overly negative on the market, even when we've had the run we've had. Because even those, whether it's Dr. Fauci, whether it's Dr. Gottlieb, and whether it is those people on the front lines of trying to develop a vaccine, they believe we're going to have a vaccine. Now, whether we have it by the very end of the year or the very first part of 2021, they do believe we're going to have a vaccine. It's hard to get overly negative if the time period has been pulled forward that much.
Exactly, Scott. And if you...
Stream Element says I linked a movie trailer. Very weird.
Every single vowel
I don't know.
has been uncovered, you're not going to make a great trade, because if you wait for basically until all of it is known, then there's no upside. You've always got to take a little risk with investing, and that's what people have been willing to do. So I applaud them for that, and I certainly am heartened by what J&J is doing and accelerating that test into July from that September timeframe.
Let's do a few questions.
He's stalling.
Guys, I know
He's like, how do I blind pick? I'm like, just tell me a ticker you like, just off the top of your head, not 2 hours of research.
Time to do that and to talk to you on the back side of it. But Joe, I have a question for you from Fred in Minnesota. Give me your thoughts on Best Buy.
2 p.m. Yeah, Soul Reaper,
So this
2
is really
p.m.
the opening stock that I would buy. Next week they're going to open 800 stores, 25% capacity.
He's stalling. I know Marty. He's stalling. Doing research right now. He's probably deep in the lab.
That you can own.
Okay, next up, Steve Weiss. Gordon wants to know about AMD. Hasn't done much since mid-April, he says, up 6% yesterday. A lot of things have been making big moves like that. What do you do now?
AMD is one that I like. It's not one I own. I own a bunch of other semis that are more geared towards 5G. But clearly they continue to innovate. I've been watching it. Great new products coming out. Nothing wrong with owning it here. It's not cheap, but none of them are.
Okay, John, Justin, Orange County, California. I'm 24 years old, BA in finance. Recently, I've watched 10 of my friends start investing on Robinhood. Boy, that goes full circle to the beginning of our show. Using their stimulus and unemployment checks. They're buying beaten down stocks like airlines and retail. What advice should I give them?
Well, just make sure it's money they can afford to lose, Scott, because that money was out there to help them get through the tough times. And I don't know if chasing some of the beaten down stocks is the best way to do that. But if they're successful at it, obviously they're going to...
Hello, John. Thank you for the follow. We appreciate it.
If that's money you can't afford to...
Jim Cramer needs to get that question. Maybe, I hope he's listening. I'm going to send it to him. I'm going to have Jim answer that question.
Best options weekly trader out there.
North Carolina, because Jim was speaking about that on Squawk on the Street right off the top of their show today. I've heard the barbell strategy mentioned a few times on the show.
New to the stock market here. Welcome, welcome.
Barbell means you own two types of stock. One is the momentum type, Facebook, Amazon, Apple, that has been working, and the
Hope
other
everyone's
group
doing
are
well.
stocks
You as
that
well,
have
John.
not yet begun to work. It could be airlines,
well.
energy, industrials, or financials.
All right, we'll take a quick break. We'll come back. We'll do final trades.
He said QSR. Marty says QSR. Restaurant Brands Inc. International Inc. QSR. Pays a dividend. What is in QSR? Popeyes and shit? Also, O. He also really likes O. You only get one pick. One pick, Marty. One pick. Everybody knows the rules. QSR is your pick. Virgin Galactic? I don't really get down to Virgin Galactic, to be honest. Yes, QSR was Marty's pick. Sure, Wonderwares, throw them out there. Why not? Hell yeah. Uh-oh, SPY continues to go up.
Welcome back. I hope you'll join me tonight for our CNBC special report, Crisis in America, 7 o'clock Eastern Time. Look forward to seeing everybody a little bit later. Teradata shares, they're outperforming the S&P 500 so far this month, and options traders think there could be more gains ahead. So says John Najarian. Doc, unusual activity.
Exactly, Scott. They're buying the 2250 calls in June. They're buying the 25 calls in June. They're buying the July 25 calls, Scott. A lot of buying in this one. I bought right along with them. There's rumors circulating that they may be exploring something, but no comment. I like the stock. Also, take a look at EWZ, Scott. This is the Brazil ETF. They're buying the June 30 puts with the stock, or the ETF basically at 32. Watch that one. I'm in those puts. Lastly, quick update on yesterday's Cloudera. We talked about that when the stock was $10.30, I think. It exploded through $12.40 on the news that they were indeed speaking with private equity firms and maybe in discussions to be purchased.
Okay, good stuff. Thank you, Doc. I've got 30 seconds, everybody, total.
We have an hour until the Fed, right?
Carrie, what do you have final trade?
CME Group, largest derivative.
We have an hour until the Fed.
Okay, Steve White.
Fighting the Dawn, thank you for the follow. Let's start looking up some of these biotechs that wonder worse likes here. SYN, 45 cents. What do they do? SNCA. Bio. Fighting the Dawn, how you doing today? Be the one! Be the one! Holy shit, this thing's crazy. IMN, PQ, these are all crazy. What do they even do? Do you know what all these even do? Government educated the development of therapeutics to preserve the microbiome, to protect and restore the health of patients. Its product portfolio includes SYN, which is written to reduce the impact of methane, producing organism in the gut microbe to treat an underlying cause of irritable bowel syndrome, constipation. Oh, okay. Good, made 5K, might jump back in the end of the day. Today has been funky, wasn't feeling it. Damn, that's what's up. You made 5K? I'm down $1,500. Hopefully we start to print now though. That's basically it, Rodney. He just knocks the competitor and people are like, yeah, you're right, I should buy that fucking Tesla stock. Trying to rally off VWAP again. SYN. What do they do? It's a long-term hold, not a trade. Okay. Interesting, interesting. You can certainly get a lot of shares of it. Wait, you own what? 1.5% of what? Like of your portfolio or the company? What do you mean? You own 1.5% of the company? How do you own 1.5% of the company? You own 1.5% of SYN. So you did all this buying. You basically did all this yourself. And now you're hoping somebody will find it. Oh my god. What? How do you even do that? How many shares do they have outstanding? I can't even get info on it. They're like, nah, dog, nah. Market cap 8.1 million. You do not own 1% of that. Hit the Discord, Wonderworst. Discord, we want proof. We want proof. We would like to see some proof here. He could. I just want the proof before you're fucking over here shelling it in the channel, you know? Spies like fuck you ran. Fuck you. I wanna reach that sky. Nobody gives a sky. I wish I reached that skyline. Skyline. I'm gonna reach that skyline. Skyline. Damn, spies raging. Can't stop, won't stop.
How do they support this economy through the period that Julia described without creating the wrong kind of dislocations?
So it's pretty clear that investor needs, investor desires, especially those that wanted to pick up distressed assets, that wanted the Federal Reserve to stand aside.
What are you seeing that makes you bearish, Randall? We've run up so far with all the issues, you know what I mean?
Ultimate goals are here. And that is restoring the economy to full potential, like you just.
We got fucking political shit going on and unrest. We've got viruses. A lot of shit's still shut down. People aren't going out.
That are impacted by COVID. Now, again, I think we're going to see a very strong snapback in the economy. It has already happened. We didn't lose 21 million jobs in the month of April because of the virus. We lost them because of the shutdown. And we can get a lot back from that. But Chairman Powell has to be very clear here that whatever the consequences in financial markets and the risks investors may want to take, their job here is to support restoring the economy to full potential, get the unemployment rate down.
I have a feeling I need to take my L,
and so probably forward guidance, some element of that, whether that's through dots or through communication, again, is what would be more likely to happen.
Yeah, Subhadra, it would make sense to me if they said we're not going to raise rates until the unemployment rate's below 3.5%, for instance, and that might not have the same consequences as capping bond yields or doing more QE, especially for financial markets. But I want to ask you, before we kind of get into all of that, Subhadra, what you think the expectations are for their announcement at 2 p.m., what we might hear that could upset the markets.
So I think I'm in agreement with Julia.
Sometimes you gotta learn lessons, fearmonger. This is what happens when you get too cocky. You know what I mean?
I I think it's a little too early for forward guidance, and it's definitely too premature for anything like yield curve control. So to me, what I'd be really surprised is if the Fed actually gives us specifics.
Maybe I got too cocky today after 2 weeks of fucking just gains and gains and gains and gains and gains.
Guidance, as well as give us a little bit more clarity on what they're thinking on monetary policy going forward. I think for the most part this is going to be a status quo meeting, because from my perspective I think the Fed is very focused on the Fed facilities. I mean, this week they introduced the Main Street lending program, allowing more small and medium-sized businesses to participate. They're also focused on the municipal liquidity facility. So that's really where their focus is on right now. I think it's too early to make any drastic changes in monetary policy.
Yeah, Steve, same question to you. What are the kind of code words or discussion points that would upset the markets here?
Well, I think clearly expressing any sort of overconfidence. You want the Federal Reserve Chairman ultimately in the press conference to be the most worried person in the world, yet again acknowledge that a good deal of what has happened here can
Seems
be
like a
reversed,
rally into the Fed. It's scaring the fuck out of me.
To ensure that we will have financial support, right? That the financial system, that financial conditions will not be standing in the way of recovery. I'd also just say on yield curve control that, again, if you wanted to ensure that we have low Treasury yields, the Federal Reserve, if it fails, again, will achieve low Treasury yields. And this is probably a very sort of policy that what you just heard again about specifically policy effectiveness for small businesses, why we have seen so few companies register and make it clear that they want the Federal Reserve to be a buyer, these sorts of stigma issues. They could perhaps work a little bit on this. Chairman Powell, in these times, we have a history of him occasionally upsetting markets in his press conference. And the message here, again, should be things can go well, but we're going to make sure that they go well.
A threat almost.
Did we get confirmation on that 1.5%? What are we talking about? What do we mean?
Steve pointed out the other day that the typical expectation for the Fed's balance sheet, which is already at $7 trillion, I believe,
probably
is
not.
That it goes to $10 trillion. I mean, we've never. This makes 0809 look like peanuts.
No proof.
Yes, it does. And I mean, so does the labor market for that matter. The shock is big, it's global.
They were like, somebody buy my shares. I've got this outstanding sell order. Somebody buy into it. Oh, fuck. Nobody's falling for that? I'm out of here.
Changing the structure of what we do and how we do it. So this is not child's play, and the Fed is not going to mess around. So I agree with Steve that the message is going to still be, we're going to do whatever it takes. And that includes lots of balance sheet expansion through both QE and these credit programs that Subhadra mentioned. They're very focused on that margin of policy, which is quite powerful. And I think that's what we're seeing in the markets. The Fed has successfully
Dude, Lock and Key Martin was at 200 a share 6 months ago. Now COVID hits, it's at 400 a share. What?
Financial crisis, and that's good news. I don't think the Fed is going to worry about that at all. In fact, I think they see that as success.
Yeah, for sure. Thank you all today. We appreciate it with some guidance before we get this big decision top of the hour. Julia Coronado, Steve Whiting, and Subhadra Rajappa. We'll take a quick break here. Coming up, the odds of a Phase 4 stimulus are, quote, very, very high. That's the message from the White House this week. But what would it look like, and is it necessary? We'll ask NEC Director Larry Kudlow in a First on CNBC interview next. Also, Starbucks.
No, I don't care either. For 90 days. For 90 days, your account is locked to only being able to sell trades.
Right here on the exchange.
You're only able to sell trades. It's really going to piss me off. It's going to be 90 days of a shitty stream. I'll have to use Robinhood again. I could put money on Robinhood.
On CNBC.
Or something. I don't know what I'm going to do. Yeah, I'm going to call. I don't care either. I'm going to call after stream. No. 320.40. I think that's why the market cap was like 4 million, but they have like 10 million in cash plus super technologies.
More stimulus coming from Washington keeps getting louder.
Did you post the thing in the Discord that you actually own 1% of it or whatever?
Are, quote, very, very high, and it could actually happen pretty soon. What would the deal include, and does it have bipartisan support? Joining me now is Larry Kudlow, Director of the National Economic Council.
It's a market cap of 8 million right now.
Hey, Kelly, appreciate it.
What's going to be in phase 4? And you know, one of the most interesting things that
total shares outstanding is
the PPP
18
program
million.
has really helped this economy recover, but a lot of businesses are saying, you know, we're worried about the other side of this. Would you guys consider letting small businesses go back to PPP if they need more funds?
Well, I don't want to rule anything in or out. I'm not going to negotiate here. The PPP is kind of, the loan demand seems to have peaked at about $500 billion. And I think that was an enormous help, as you suggested. I mean, really, the PPP, I think, led directly to the surprising, wonderful jobs number we had last Friday, where more or less 3 million people who were temporarily laid off or furloughed went back into work in the labor force and went down to 15 million, and that was the whole story, and that's a PPP story. And I just want to say, I want to brag on some of my friends, the Congressional Budget Office, nonpartisan Congressional Budget Office, their director, Mr. Swagel, he said the Trump team should get a lot of credit for the fast delivery of the coronavirus stimulus.
If you guys don't want to be tracked with the new Apple update, make sure you turn off COVID tracking.
Of the PPP,
unless you like to be tracked.
The SBA's delivery of the PPP. In a short period of time, you know, we got out in round numbers about 175 million checks. The assistance number is probably approaching $2 trillion. This is the liquidity cushion that we hoped would work. We got it done. I don't know that we're going to repeat it, but I'm just saying it worked. And now, with the reopenings, Kelly, I'm getting a little more optimistic. We've seen a lot of glimmers of growth in many different places, green shoots. Maybe we'll talk about that.
Yeah.
But I think we reopen in May and June. I think the next employment figures are going to be very, very good as the businesses reopen.
200K shares, my God.
And people have cash. So
good luck to you. How much is it?
Bottom way in
Jesus.
April. And we're headed towards a terrific recovery in the second half of the year.
You know, it's interesting that the market seems to be ignoring the prospect of any more shutdowns related to coronavirus.
You're saying you have $90,000 in this one stock.
Head of a Texas hospital system yesterday, and frankly, he couldn't even give us a clear answer as to why it was up. But their
you have
$90,000
in one
things are
stock.
headed absolutely the wrong direction. So this time around, no one seems concerned that we're going to do another shutdown. They've probably figured out there's more tactical ways to respond to this. But I guess my question, Larry, is, again, I'm putting myself in the shoes of a small business. Even someone like Tillman Fertitta, who has larger restaurants.
You must have a gigantic
his business
account.
is still down 60% year over year. You know, anytime
yeah, you
there's a
could.
little
That's what I'm
outbreak,
saying.
people
You
get
could
more
be
wary
a
about going back
multi-millionaire.
So it would seem to
I
me,
wish I could
Tillman
do
even
that.
said if there was money left over, maybe he'd want to tap it.
You're
but I hear
right.
from
You're
smaller
absolutely
businesses
right.
who say, Larry, that they're fine for
You
now.
could have
but
got
they're
in
really
down here
concerned about
25
this cliff that
cents
might be
for
coming for
45K.
PPP because, demand it's rebounding, but it's definitely not all the way back.
Well, don't forget, the legislation President Trump signed last Friday extends the PPP program, I believe, out to 24 weeks from 8 or 9 weeks. And it also provides more flexibility in terms of spending the loan money. You can now spend 60% on payroll and 40% on expenses. So the payroll numbers come down. That will help. Look, I want to go back to the numbers.
Matchy89, thank you for the follow.
What you'll see is in the aggregate nationwide, new cases have
Just
pretty
go to their
much
website.
flattened out. Many parts of the country coming
Synthetic
down. I mean, the growth rates
Biologics
for 1 day and
Inc.
7 day are about 0. And the same is true for the mortality. Fatality rates are down close to 0, between 0 and 1%. Now, certain areas, perhaps, I grant you, it's a good point. On the other hand, our health experts have said to me repeatedly, we have much more experience in dealing with hotspots. We have much better equipment, PPE, testing, and so forth, ventilators, and we will be able to fight some fires without closing down the economy. The president said himself, we're not going to close down the economy again. So, you can look at the glass half full or half empty. Right now, I think it's more than half full. And I think, you mentioned the stock market. You and I have talked about the stock market. Said it might be a buying opportunity for long-run investors, Kelly. Not a bad call. And frankly, I think the market is seeing the same number.
Let's watch a video.
Irritable bowel syndrome with constipation, or IBS-C, is a frustrating condition that affects up to 13 million people in the U.S. alone. Patients with IBS-C typically suffer abdominal pain, bloating, and constipation without an obvious cause such as inflammation
I want to start
or
investing in the stock
damage.
market, but I don't know what I'm doing. You have any tips, like how or
Clinical
where I should
studies
start?
conducted by collaborators
I
at
would
Cedar
start
Sinai Medical
looking
Center
into dividend
have shown
paying
that
stocks.
constipation in IBS-C is due to methane production by microbes in the
looking
intestine
into ETFs
called
like the SPY and the
Methanobrevibacter
QQQ,
smithii, or
and
M.
long-term
smithii.
savings first.
Methane production
Long-term
can be
savings,
measured by
buying
a
things that
simple
are safe,
methane breath test,
companies you
and
know,
high levels
and
of breath
slowly
methane
saving.
have been directly associated with constipation in IBS-C patients. In addition to causing constipation, elevated intestinal methane production causes pain and bloating as the intestine struggles to clear the stool mass. SYN010 is being developed as a treatment for irritable bowel syndrome with constipation, or IBS-C. SYN010 is a new oral formulation of the long-established cholesterol-lowering medicine, lovastatin. Lovastatin has been shown to inhibit methane production by M. smithii, and SYN010 is designed to be delivered to different locations in the intestine. It is expected that IBS-C patients will take one SYN010 dose each day to treat their constipation.
It's expected that you take one dose a day.
SYN010 is designed to pass through the stomach unchanged, then releases lovastatin in different parts of the intestinal tract. SYN010 is intended to reduce methane production by the M. smithii without impacting the overall balance of microbes and bacteria in the gut microbiome. Reduction and intended to relieve constipation and alleviate pain and bloating.
Ban IBS, what? Where's the other video? Is this the management team? What type of generic photo is this for the management team? They're on bicycles. What the fuck? It's a man and a woman. These are all men listed. Like, what? What is this? Same fucking background photo. Same stock photo. That's just the photo for their products, I guess. That just stays up there. Fair enough, fair enough. Where were those videos I just found? What about the other video? Download our poster. Fuck yeah, download our poster, chat.
Hospitalized patients are routinely given IV antibiotics that may be used to treat infections such as pneumonia or to prevent infections associated with surgery. Many antibiotics are partially excreted by the body through the bile and into the small intestine, where, as a result, they can upset the natural balance of healthy bacteria in the gastrointestinal tract. This imbalance in the GI tract can result in the proliferation of disease-causing bacteria such as Clostridium difficile, also known as C. diff, which in turn can lead to serious side effects including diarrhea, colitis, and in the worst cases, death. Diarrhea and colitis caused by antibiotic treatment is a serious hospital-acquired problem.
I've actually heard a lot of elderly die of C.
dollars in
diff
healthcare costs annually.
as their body starts
SYN004 is
shutting
being
down.
developed as an oral tablet to be co-administered with IV antibiotics. SYN004 is intended to remain within the intestine and to degrade certain IV antibiotics that have been excreted into the intestine. SYN004 as a preventative treatment is expected to protect the healthy microflora from the overgrowth of C. diff and its harmful effects on patients. The objective of administering SYN004 with the IV antibiotic is to allow the antibiotic to treat the infection, while SYN004 protects the gastrointestinal tract from the development of diarrhea and colitis.
I'm not against it. Treat age-related diseases, yeah. Yep. This is interesting. I go from shitting on you Wonderworst to thinking you might be a genius. You might be a genius out there. Alright, let's fucking read this fucking thing. Disease and area licensed intellectual property and technology. The use of alkaline phosphate to maintain GI and microbial health, diminish systemic inflammation, treat age-related diseases. If executed, the company plans to use this license to advancement and expand clinical development programs for SYN020, the company's proprietary recumbent version. Promise of MG8's research was described earlier this year in peer-reviewed journal JCI Insight. Team investigators read by Richard Hooded, MD, Chief of Massachusetts General Hospital, General Gastrointestinal Surgery, and Professor of Surgery. Harvard Medical School evaluated long-term supplementation of IAP, including SY020 on mice. Starting at 10 months of age, slowed the microbial changes, gut bacterial dysfunction, and gastrointestinal and systemic inflammation that normally accompany aging. Really? Under the terms of the agreement, exclusive rights to negotiate a worldwide license with MGH to commercially develop SYN020. Potential. And treat gastrointestinal diseases in areas of high unmet need. The company leads clinical candidates are SYN004. Blah, 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 blah. Interesting. This is interesting. Wonderworst, I appreciate it. I fought it, but I'm interested. I don't have money available right now. We need the SPY to tank. If the SPY tanks, you know what? When the SPY tanks, some of our money might be going. What was it called? SYN Biotech. What's another super promising one that we should look into, Wonderworst? This is interesting. You do have my attention now. You have my attention. How's ADMA doing, by the way? ADMA getting fucked? LK is good. Fuck LK. I think Fate is interesting. What the fuck is Fate? What the fuck is Fate Therapeutics? Jesus. What do they do? Just yesterday. SNCA? What the fuck is SNCA? Seneca Biopharma? I think I've actually heard of this. Companies focused on developing treatments for diseases, unmet medical needs. Oh my god, it was at a high of 970. No, what, dude, what? Bro, what are we doing here? Broheem, dude. Broheem. You're a millionaire. You got into SYC when it was fucking at... If you're not handing out dark matter propulsion SUVs, I'm not interested. Why are these things losing so much? Whoa. These are scary. This is scary stuff. Whoa. Whoa. Whoa, what are we doing here? Whoa. I'm out. I think I'm out. I think I'm gonna be out on that. That's gonna be a no for me, dog. Pull back, pull back, pull back.
It's also lower today. Now, to add insult to injury for these legacy automakers, Nikola, which is yet to deliver a single car, is nipping on the heels of both of those companies with a market cap now of $24 billion. And now to Sue Herrera for our CNBC News update. Hi, Sue.
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Texas reporting a third straight day of
People are
record
probably out there
coronavirus
buying this shit right
hospitalizations.
now.
It was one of the
Jesus.
first states to relax restrictions. For more on the resurgence, you can go to CNBC.com. President Trump will
Did you
address
see my DM? I
policing
did not.
reforms while visiting Dallas tomorrow. NBC News reports the president will likely announce new measures that can be implemented by executive order, with a broader legislative proposal coming in the next few days.
Yeah,
And the Justice Department's move to
scared.
dismiss charges against Michael Flynn should be denied, in part because it is a, quote, gross abuse of prosecutorial power and highly irregular conduct to benefit a political ally of the president, end quote. That is the recommendation of a retired judge brought in by the trial judge to help him decide whether to accept the government's motion, despite the former National Security Advisor's earlier admissions that he lied to the FBI. You are up to date. That's the news update this hour. Kelly, I'll see you in an hour.
All right, Sue, thanks very much. Sue Herrera there. Coming up, if you sell on its site, Amazon wants to be your lender, but it'll cost you a pretty penny. We have details on Amazon's
Amazon
new
wants
partnership
to
with
be
a
your
major
lender.
Wall Street bank. Plus, is the Fed's market support too limited? Is there more they could be doing? A former Fed official says yes, a lot more. He'll join us. Stay right here.
Why does Mikey Flynn still get the high and tight haircut? I don't even know who he is. I don't even know who he is. There was a big red line there for a second. He's retired. I prefer rocking the Jesus Christ look without just me. What? Come on, Spy. Break down, baby. Break down. We've had a monster run up. It's time for a little cool off for a week.
Boys and whirl around the still. I will take another round. Oh, another ride until we take off from the ground. I feel it inside. I wanna reach that. It's somewhere inside.
There we go. It starts to break now. It's gonna get ugly. Then we need the Fed to say some dumb shit on accident. Like, we don't like how high the market's got. We're gonna back off. I'll be like, Hi, King Cobra. Thank you for the follow. I appreciate it, bro. Beat Camp MVP in the Apache Relay. What? Hi, King Cobra. We're doing good. We're doing good. We're just chilling, waiting for the Fed to speak at 2 o'clock. We need them to be like, the stock market is disconnected from reality. There's a lot more help that's needed. We're scared of how high the stock market is run. What's the difference between this broker and Webull? You pay commissions here a little bit, but I get CNBC, better trading. I can trade after hours and pre-market. Probably better margin percentages and stuff like that. I'm just able to do a little bit more. No. In fact, I just locked my account today on accident. You have to have 20. That's a general rule. That's an FTC rule that all the brokers have to abide by. The day trader rule. Yeah, 90 days, Slapper. It'll get locked for 90 days. Still learning candles. Could you tell me how to read the other graphs if you do not mind? What do you mean? These are just different tickers and stuff. This is the volume. This is RSI right here. Above 70 is overbought, below 30 is oversold. This is the MACD trend lines. What do I look for in buy and sell? Overall market sentiment, you got to really know the companies you're buying, I feel like. I don't know. I've been swing trading and day trading like crazy just off of feel for the market. I'm new as well, Hiking Cobra. I'm new as well. We've made a lot of money, but I'm no pro. I'm no pro. There's a lot to it. I suggest if you really want to get educated, there's lots of good YouTube videos, but really TD Ameritrade, using their education system here, is a really good way to learn about stocks and how to trade. You look like a real Wall Street though. Oh, really? Well, that's cool. I don't think so. But I'm glad we got the look going. Pretty soon we'll be wearing 1K shorts and rocking the Gordon Gecko look. I see people with 6 monitors and stuff. I wish I had a couple more monitors, would be nice. Stocks only go up. We should have just sold all that American Airlines. I have 5 monitors. What the fuck? Bro, what's 5 monitors to 1 big screen TV? What are your thoughts on Tops? I don't know what Tops is. Somebody's coming here for an... Oh, Top Ships? No, I'm out. Super out. What is the Fed gonna say in 15 minutes? Didn't we have it up here? And like they're gonna release whatever at 2 o'clock. You're the only stock streamer who talks and has a cam, really? Well, we're here, baby. We're a real person. We're showing you our real trades. There's other good stock streamers out there. This isn't copyright free. I just don't give a fuck. Hi, King Cobra. I like good music, and it's like, fuck that shit. Come at me, brah.
Do the same old things. And what we're missing would be innovative changes, which we need now when we restructure the economy, and that's something that equity financing gets you.
Well, so Bill, let's stay on that point for a moment. Your concern here is that the Fed is going to undermine productivity in the long run. What do you mean by that?
Because one of the things about incentives for managers is that if the last thing that the lender wants to hear is, I'm going to be doing something new with your money and be innovative and try something new. They want their money back. Whereas an equity investor, all he wants to do is make a lot of money. So he's going to say, train better people, get whatever innovations you need in place, and let's make a lot of money and come back strong. And that's the kind of incentives we need right now, because the economy itself has to be restructured with all the stay-at-home, and we see
yes, hi King Cobra, yes.
Technologies are giving us. What we need are new technologies, and that's what you get with equity investment.
One more on this point to make sure I understand it. What would that look like, Bill, coming from the Fed?
Yeah, the key is the Fed has focused on credit markets, and we talk about buying loans and giving more easy loans. What the Fed should start to do would be buy equities the way the Hong Kong Monetary Authority did during the crisis. Buy a big ETF and support the equity market. Incentive and in the micro.
Why? Our markets are all at all-time highs. What are you talking about? Buy ETFs.
And perhaps buy
oh my
packages
God.
of IPOs in different sectors to encourage a newer, innovative investment.
I understand the point that you're making, but David, it's interesting because, first of all, right now we have markets basically back to all-time highs in this talk already. And by the way, it's amazing what the retail investor, investors writ large have done in order to get us here without the Fed doing, that kind of approach. What do you think about the possibility of them, getting more involved in equity markets in the future?
Well, it is true that other central banks around the world, the Japanese, for instance, do buy equities. The Fed's position has always been, we don't have the legal authority to do that. As Jay Powell has said over and over again, we lend, we don't spend. And I think there is a risk that we are putting too much burden on the Fed. I don't think the Federal Reserve is very well equipped to be a venture capitalist. There's a question about whether government can be a good venture capitalist to any guise, but I think it's asking the Fed too much. And I think that's one of the problems we're facing now is that the Congress is sort of hoping the Fed can get them out of this thing and they won't have to appropriate a lot more money. And most of the economists I respect say that's not going to work. And so now it's incumbent on Jay Powell and his colleagues on the Fed to forcefully argue to Congress and the president that we need to put
250K painting? How do you know that's a 250K painting?
Recovery once the virus recedes.
Last question, Bill. The question I've been thinking about as well is why couldn't the whole Fed Main Street program simply have been a congressional program? Why does this have to be? And again, the money comes from both sides, but why aren't we thinking of it as more of a congressional activity?
Well, actually, it is. In fact, the key to monetary policy is to ensure fiscal policy efficacy. We need to
I know art, sir. Oh yeah, what is it? What's that painting on his wall?
I'm not saying the Fed should be a venture capitalist. In fact, I
Dex, dude, 12. Thank you for the follow.
Which we already have way too much of toward equity financing.
New here, wondering if you could teach them exactly what this reverse stocks was that's happening to XSpot's going to do. I'm currently in at 108. Unsure if I need to exit, get out of XSpot. Fuck that stock. A reverse split means they're basically taking shares off the market so that the price of the stock artificially goes up, but the market cap will still be the same. You're not going to make or lose any money in the split. It's just because they probably can't go below $1 before they get removed from the stock exchange. It's not a good thing. When companies do reverse splits, this is not a good thing.
Thinking in many directions I was not prior to this discussion. Thank you so much again for joining us in the lead up to this decision. David Wessel and Bill Lee talking about some of the Fed's next options. We're about 5 minutes away from the decision, and I'll join Tyler Matheson for that, as well as for Fed Chair Jay Powell's news conference. It happens around 2:30
5
Eastern
minutes.
Time, all on Power Lunch right after
What's going to happen to the market? What's going to happen to the market? I'm fucking scared as shit. They started the split at 208 and I've been above it for a week now. That's why I'm trying to figure out what's happening. Marte statue I could sell for 25K right now. What are you talking about? What is his shit? What's his painting that you know it's 250K? What's his painting? The sky is falling. I need the sky to be falling. Please. Look up Irte. E-R-T-E, E-R-T-E, Irte. Irte. He's got that Irte. Dude, XBOS sucks. Have you ever seen an XBOS? Do you ever travel and go through the airport? XBOS fucking suck. They're not making any money. They're not making any fucking money. When's the last time you've been in an airport and seen an XBOS? They're not going to do that. That's fucking so fake, Dex, dude. When's the last time you've been in an airport, again, and seen an X-Spa? They're past security. They're not even good locations in the airport to do COVID testing. Like, not going to happen. TSA is going to do COVID testing as you go through security. That's fucking total hype.
Welcome back, everybody. This is Power Lunch. Welcome. We are just a few minutes away from the decision from the Federal Reserve after what has been months of unprecedented intervention from the United States.
Here we go. The market's going to tank, dude. Please.
As we welcome you in.
Please.
Just for the marker, here we are. The Dow and the S&P are both in the red. The Nasdaq motoring
down.
back a touch above 10,000.
Please
up
down.
0.5%. It is higher, another record high, and we welcome in now
Please
our
down.
Fed panel. As we always do, welcome back David Kelly, Chief
Waiting
Global
the Fed
Strategist.
decision. We're all on the edge of our seats.
Mona Mahajan is U.S. investment strategist at Allianz Global Investors.
We've run too far, dude. We've run too far. It's only prudent that they slow the market down. It's only prudent that they slow the market down.
What should I be looking for and listening for over the next hour?
Well, mostly tone. I think there's going to be a tone of empathy, of vigilance and reassurance. I think the Fed is going to say it feels the pain, but it's going to stick with the job. It's going to supply whatever the economy needs to get past this pandemic. And also some reassurance. I think there are better numbers. The employment numbers are better. I think some of the short-term indicators are looking a bit better. I think Jay Powell will grab onto whatever optimism he can find. But the main message is the Fed is going to keep money very easy, very available for as long as this pandemic is haunting the economy.
I guess, Mona, a lot of people will be looking to see what the Fed economic predictions are, because those were omitted at the last meeting in March because there was so much.
I don't know, Bucci's. I don't know.
Yeah, absolutely.
I don't even know.
There'll be a lot of interest around what the GDP projections look like, what the inflation and what the unemployment figures look like coming from the Fed. You know, when you look at consensus estimates for this year,
They're looking for GDP estimates and unemployment
really
estimates.
a plus 4% rebound in 2021, stabilizing at plus 3% for 2022.
To pump or not to
Really
pump the market.
interesting
To
see
pump
if
or
the
not to
Fed
pump
is
the
in
market.
line
Yeah,
with
seriously,
estimates
that's it.
or somehow below or above. So I think there'll be a lot of interest around that. You know, to David's point, that the Fed's dual mandate here is unemployment and inflation. Neither of those metrics are meeting their standards yet. You know, we saw the unemployment rate on Friday, either 13.3 or 16.4, depending on what metric you use, but still well above the natural rate of unemployment. Inflation just this morning, you know, core CPI only at 1.2%.
Oh my God, number must have come out. It must have been good. We got a huge green pop there. That's not good for me.
John, we may interrupt you as the decision comes down. A quick thought, 30 seconds on the possibility, or is it off the table, of negative interest rates?
So I don't think we're going to see
What the
negative
fuck is
interest rates,
going
but I
on
think the
here?
Fed is going to stay on the front foot with regard
Now
to
it goes
providing
down.
accommodative policy. As
Now we
Mona
go
said, they're
down.
very far
This is
from
good for
meeting
me.
either of their mandates.
This is good for me.
Straightforward
This
that
is
they
really
need to
good for
stay on
me.
the front foot. They
This
need
is
that
amazing for me.
accommodative message
Keep doing that.
and
No,
work
no,
with
no, no,
that
no, no,
one
no,
bond
no, no, no,
purchases
no, no,
at the
no, no,
moment
no,
rather
no.
than negative rates.
Keep doing that.
I think we can certainly
Keep doing what you're
expect those
doing.
kinds of accommodative musings from the Fed. Dow Industrials
Guys,
down
let me
about
just jump in
0.5%,
here. Tyler,
S&P about a fifth
let's
of a
go to
percent.
Steve Leisman for the Fed decision. Steve.
The Federal Reserve leaving interest rates unchanged at 0 to 0.25%.
Unchanged. No
saying it
more
will
help.
Maintain this target range until it's confident of a recovery.
No more help.
Of the Federal Reserve until the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals, using pretty much the same language from last time. Now, we have the projections. The Federal Reserve projecting near zero interest rates. That is a 0.13% average through 2022. It's interesting because it does see the economy.
What's going on? Are we going to go up or are we going to go down?
More on that in a second.
We're going to go back to Steve as soon as we sort out his audio. The main information is on your screen right there. The Fed funds rate unchanged. 10-0 was the vote in favor of this decision. And as Steve was just beginning to say, the Federal Reserve officials projected no plans to raise interest rates through 2022 and said they were committed to providing more support to the economy following shutdowns to contain the coronavirus. You're looking at the market reaction there on your screen. It's not huge. The Dow is still down about 150 points. We saw the 10-year Treasury yield kind of drifting towards the lows of the session before the decision hit. Steve, let me bring you back in here. I'm sorry, we'll go back to Steve in just a moment. Again, we're just running through there. The 10-year Treasury yield, now it's just a hair below 0.8%. Let's bring our market panel back in for more reaction here. John Bellows, you were speaking, so I'll go back to you. Do you already have the information you need, or is there more you'd like to hear from sort of the statement and in the press conference later?
You know, it does look like they've made a statement about continuing bond purchases at current levels. I think that's a pretty big deal. You know, the Fed had been tapering their bond purchases. There was some fear that they were going to continue to do that, and I think what they're signaling today is they're not going to continue to taper that. And I think importantly, that means they're looking for bond purchases to help keep yields low and support FCI, support financial conditions. This is part of the accommodative message. Again, I think they're on their front foot here, and from what I've seen so far, I think this is actually a little bit better than the market was expecting in terms of more accommodative. So I think front foot in terms of accommodative policy, that's appropriate given the big misses on their mandates, and I think that's my initial read right now.
Yeah, and often the market's first reaction is not the one that comes to dominate. Again, right now the Dow extending its decline somewhat, and the 10-year Treasury yield moving up somewhat. Again, emphasis on somewhat. Let's bring Steve Leisman back in here, Steve, as you continue to comb through their move.
Yes, apologies for that. I was picking up on what was just said there.
Close me out of it.
Rates are projecting that rates will remain near zero through 2022. It's going to boost its treasuries and mortgage holdings for market functioning purposes, as I've said in the past, and it's committed to using its full range of tools. One new note, it said financial conditions have improved, and that's in part because of the purchases the Fed has made. That's new in the statement. They say the crisis poses risk to the economic outlook over the medium term. Backing that up, the Fed is projecting a 6.5% GDP decline this year. That is the largest GDP decline the Federal Reserve has ever projected, far larger than it projected during the 2008 financial crisis. It says the public health crisis will
going in.
economic activity, both employment and inflation, and it's causing tremendous human and economic hardship. The virus shutdown, it says, induced sharp declines in economic activity. Now, after 2020, what's interesting here is the Fed projections see the economy running above trend, quite a bit above trend, in both 2021 and 22. We hopefully have a chart here that shows you the GDP outlook and the change. Notice that 2021, we already talked about the 6.5% decline expected this year. Okay, but in any event, 5% for 2021 is the GDP forecast.
You lost a lot of money today.
For 2022, both of those are above trend. So what you're going to have is this sharp
back down
decline.
to 14.3. That fucking hurts.
A sharp decline in 2020 and then above trend for 2021 and 22. All the while, the Fed is projecting it keeps a very low interest rate for the next, I guess we might as well say 2.5 years at this point. That's what the Fed is projecting at this point, Kelly.
And Steve, even as you're talking there, the market has kind of changed its mind. Now you have all of the three major averages rallying. So the Dow has turned positive by 26 points. The
Good thing we got out of there.
Nasdaq is now up 1%. And what in particular makes it strong to you, Steve, relative to the fact that a lot was already baked in terms of expectations?
You know, I don't want to kill a phrase here, but live by the dots and die by and die by the dots. In this case, the dots are giving life to animating. They're putting numbers around what the Fed believes. This combination of we see the economy improving, running above trend to get back there.
Wow.
But doing so with a very
I might
low
take the
funds
90-day
rate.
cool
And
off.
the language in here is pretty strong, I would say, in terms of its commitment to remaining low until, and I'll read that language one more time, which is the second time they've said this, maybe the third. The economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. I think there's a discussion to be had here, folks, about, you know, how far down does the Fed need to get the unemployment rate now?
I took an
3.5%,
L
is that the
today,
goal?
folks.
Is
I
it
took a
4? Is
fat
it
L
5?
today.
It sees the long run rate itself at 4%. Is that the goal where it wants to get to? If so,
Can't always win. You cannot always win.
Period of time of low interest rates, because remember, if we have that unemployment chart, I'll just go to it here. The Fed does not see unemployment getting back down to the trend rate of 4% through 2022. So now just think it through. If you're an investor here, if the Fed wants to get back to trend unemployment rate and doesn't see it getting there through even past until 2022, that means low rates for a very long time. And if I was in the market, I think that would be a reason to rally.
And indeed, that's what John Bellows just told us, Steve. Thanks. Go ahead, Ty.
So I was going to turn to David Kelly, and maybe Steve, you'll jump in here too. What is the track record of the Fed's projections are they
God,
good
we took a
predictors, or are they
fucking
not so good
L
predictors?
today, Chad. Such an
pretty
L.
good, I think, over the years. What they've tended to believe that that growth will be a little
Don't
stronger
bet
than it's
against the
actually turned out to
Fed.
be, but also that
Lesson
unemployment will
learned.
stay higher. So the unemployment rate has fallen more than they thought in the past, but economic growth has been slower than
Yeah,
they
because
thought.
they're like, we
It's
won't
not
let
bad,
Hertz
but
fail.
what I
That's
think,
why I went into
to
American
Steve's point, there
Airlines.
is a
They're
very
like, we're not
interesting
going to let
message
these
here.
companies
They
fail.
have the unemployment rate coming
They're
down
not going to
below
let Hertz
10%
fail.
in the fourth quarter of this year. So they have.
They're not going
I
to
would
let
argue,
American
a V-shaped
Airlines fail,
recovery
is
built
what they're
in
saying.
here. They've got the unemployment rate down at 5.5% by the end of 2022, but yet there's still only 2 members of the FOMC voting, of the FOMC participants, who actually see anything other than a 0 to 25 basis point funds rate by 2022. So they're saying that even if the economy is well along a strong recovery in 2022, they're still not going to move rates. So that means they think there's going to be strong growth, a strong rebound, but they're going to supply very ample liquidity anyway, and that's a dual message.
we
I think
exited.
will be very positive. The equity market.
Hell yeah, we exited
So
that
let
shit.
me pose the same question back to Steve and add one more, and the one more has to do with how. No, well, let me let you just answer the one on the Fed first and how good a predictor they are.
You know, they have times when they're really lousy at predicting.
Well, if the government bails them out.
Because shocks come along, in part because they just get stuff wrong. They're actually not very good at their own funds rate. But the reason I wanted to respond to this question, Tyler, is because whether or not they're good at predicting the future, what I think the information is what the Fed is thinking right now. That can change. They reserve the right to change these forecasts, and as any forecaster, they reserve the right to be wrong. But if you want to know what the Fed is thinking right now, I don't know that I'd make a bet on 2 years of 0 interest rates. I'm not sure I'd make that bet, but I might make one now for 6 months. I might make one for a year right now. Certainly, if you don't get the inflation to come along, the Fed is putting a number
This is going to be interesting.
behind the commitment here. And then the next question that I think is probably going to be asked in the press conference.
I mean, who knows, Lovell? That's just what people are betting on.
How it handles this, which is, okay, what's the number that would cause you to move on employment or unemployment? If we get down to 7 or 6, or if the unemployment rate comes down faster,
now I've got a million day trades on the account. They're like, what?
For the Fed funds forecast.
They're gonna be like,
Let me
dude,
make
you're
this a
locked
jump
for
ball,
90 days.
if I
Like,
might,
leave us
Kelly,
alone.
just let me indulge me one more.
You're fucking
I
locked.
found myself thinking when they said we're going to keep rates low until 2022, and anybody can jump in here. I found myself thinking and wondering whether the criticism that the Fed got when it accelerated and put rates back up higher was raising rates. Criticism across the political spectrum, most notably from the White House. I wonder if that plays into their thinking that, well, we're going to signal here that we're going to keep these rates doggone low for a doggone long time. I wonder if that's part of it. Mona, do you want to jump in on that?
Yeah, sure. You know, Tyler, look, I think Jerome Powell's been consistent in saying he is not at all swayed by what the president or any external party really says. I do really think he's looking at the economy here, seeing the potential softness and keeping rates low because of that.
We took
you know,
a
what is
lick
interesting
today.
and what's
We
been
got
noted
fucking
already,
licked.
a 5% rebound in GDP growth with rates still close to 0%. That's a pretty good backdrop for risk assets. And so I think you know, you can see a scenario where you are pushed out the risk spectrum, where there is no alternative. The Tina effect comes back into play. And so that's something to think about as we move forward as well, if indeed the Fed and some of these consensus forecasts come to fruition. I will say that thus far we've gotten one strong jobs report, and keep in mind one data point does not make a trend. But if we get 2 or 3 similar reports, I think we have an interesting case to be made. So something to keep in mind as we go forward.
You know, if I could, I think there's a little bit more of a positive kind of spin on this. So the Fed noted that financial conditions have improved. That's certainly true with the performance of the equity market. But they've also said they're going to continue their bond purchases at the current level in order to support financial conditions. What they're saying is, yes, financial conditions have improved, but we want them to keep improving. We want to keep going here. We do not want to withdraw support. And we're not waiting for 2022 to kind of keep interest rates low. We're going to stay at it right now by keeping our bond purchases going at the current level. I think that's slightly ahead of what the market was expecting here. And I think the signal's pretty clear. You know, the Fed's not waiting for 2022 to provide support. They're doing it now. and they're doing it now through continued bond purchases. So I think that is on the front foot here, and I just want to highlight the bond purchases. I think are a little bit ahead of consensus in terms of being on the front foot.
But I think that's a very dangerous game to play with regard to the rest of Washington, because the problem is we already have massive fiscal stimulus right now.
Gold is surging.
This monetary policy is the most expansionary monetary policy we've ever seen, because fast as Steve Mnuchin can print the bonds, the Fed is buying them. But if they're saying that they're going to continue to do that, then what's to stop Washington passing other bills for relief or for stimulus or for infrastructure or for tax cuts or for whatever, even as the economy is improving? And if the Fed keeps on saying we're going to try to keep long rates low, maintain financial stability by buying up the bonds, I mean,
stock will be zero next week.
Already. Now, this is debt monetization in an extraordinary recession, so maybe that's not as harmful. But if you're in a recovery and you're following the same rules, eventually this thing, I do worry that eventually this could end in disaster if we continue this once the economy is healthy again.
Yeah. Could I just say, I think that's actually a little bit inflation. Well, if I could just say, I think that's a little bit by design. I think a few weeks ago, Jerome Powell was worried about medium-term risks and thought that the medium-term risks warranted another fiscal package. Well, the way you get another fiscal package is you keep interest rates low, just as David said, which encourages more fiscal spending. So Jerome Powell's never going to say it that explicitly, but I do think that's in the back of their mind here. The Fed wants more fiscal support for the economy, and they're going to do their part by keeping interest rates low. So it's not going to be made explicit, but I do think that's part of the design, and that's part of the intent, and it all goes in the same direction, which is the Fed understands they're very far from their mandates, and they're trying to provide more support.
Yep.
We have to
Tyler,
wrap it here, but David, I want to let you. Oh, you would agree with that? Okay, good. David,
Yeah,
back to you. You said this could end disastrously. What does it? What do you mean by that? Quick thought, please.
Well, just in the long run, we need to maintain Fed independence.
Damn, we got
and
wrecked
if you go
today.
for years and years and years of the Federal Reserve building up its balance sheet, and supporting massive budget deficits, eventually you end up with some sort of financial crisis or some sort of inflation problem. I'm not talking about the next year or two, but down the road, that is where you're headed. There is no free lunch, but right now the Fed is paying for everybody's lunch.
Power lunch that they're paying for right there. Folks, thank you very much. Sorry we had to end the conversation there. Mona, thank you. John and David and Steve.
Absolutely.
We're glad we were able to resolve the audio problems there. Let's get to Bob Pisani now for more on the market reaction to the Fed's decision, and it is a positive reaction generally, Bob.
Yes, Tyler, initially it was not, but the market still believes the Fed's still very much in whatever it takes mode. That phrase, considerable risk to the economic outlook, and considering to keep rates low through 2022, that's a signal to the market they're going to be aggressive. Just look at the S&P 500. Initially, actually the reaction was the other way. We dropped about 10 points, but as you often see in these things, it reverses. So within 5 minutes, we had started moving in the upside. Now we're about 20 points above where we were just prior to 2 p.m. Eastern time. Rate-sensitive stocks, they're liking keeping rates low through 2022. They're particularly liking it. Real estate was notably negative. It's gotten a little bit better off of that. But home builders in particular have rallied here late in the day. As you can see, they were down notably earlier in the day. Banks, not so much, and you can think about that. Rates low through 2022.
We need it to come
maybe
back.
That's not so great for the bank stocks. They really haven't done much this morning. They've been weak the last couple of days. Remember, the yield curve had been helping recently, but the 10-year yield had been a little bit weaker in the last couple of days, and is down again today here. So the bank stock's not doing much. If you take a look at what the banks have been doing in the last month, the yield curve is a little steeper than it was a month ago, so that's helped the banks overall, and they've had a nice little rally. They're up 18% in the last month. That's the KBE, but they're still way off their 52-week highs, 27% off. S&P's only 5%. And we've had that yield curve, but potential of loan losses and very weak loan growth outside of helping with government-backed loans for the long time. That's been weighing them down. I think the important thing right now is near rates low through 2022. I also see they said they're going to keep buying bonds at least at the current pace. I thought they might would have maybe formalized the pace of how they're buying. They haven't exactly defined that, but it's been pretty big overall. So market reacting to the Fed continuing to say we'll do whatever.
They do whatever it takes.
Back to you.
All right, Bob, thanks so much. Let's go over to Rick Santelli now for more on the reaction across the bond market. Rick?
Well, the bond market's had some good reaction. We'll get to that in a minute, but I'd like to draw your attention to the dog of June, and that's the dollar index. You know, the dollar index was close to 99 at the beginning of the month. It now violated, it's now what, under 96. It's dropped a third of a cent just since the announcement at 2 Eastern. It's been down about 9 out of the last 12 sessions. And if for the month so far, it's down darn close to 3%. So that's something you want to pay attention to. As for Jay Powell and company, listen, I'm an old floor guy. I just call it the way I see it. I don't think the Fed dot plots or anything that I would put my retirement account on co-piloting, and I think that their current assessments are a little bit on the pessimistic side. So it is not at all shocking to me to see stocks do better. And as you look down the yield curve, look at 2-year notes, they popped a bit for back to where they were at 18. You look at 10s, first impulse was, 76, so we kind of made a new low by half a basis point, popped up to 80.
Cranking.
Started
We should have calls.
77. The yield
How do
curve
we
10s
suck?
minus 2s, Bob's right.
How do we suck
it's
that
hovering
much?
around 60 basis points. On the Friday jobs number, it spiked up
I
to
feel like I
72
deserve the
basis points,
90-day
which was
slap on the wrist.
steepest it's been since February of 2018. 30-year bonds, they've been the best in terms of buoyant yield. They continue to continually
Make
come
myself
back.
fire
And of
up the
course,
Robin
if you
Hood
look at
portfolio.
What the Fed may do with regard to its purchases, they keep saying they don't want to really control where rates are. They just want to keep things moving in a liquid fashion, and I think that's a key as we get into the press conference. Tyler, back to you.
Mr. Santelli, thank you very much. Good to hear from you. Coming up, we got much more on the Fed decision, the economy, and what needs to be done specifically to create more economic opportunity for African Americans as we rebound from the coronavirus. And we await the press conference, of course, of the Fed Chair, Jerome Powell. It's about 12 minutes away right now. Stay with us. We'll turn to that. It is a virtual press conference. We'll turn to that as soon as it starts. Stay with us.
Everything is up right now. We should have just put our money in the ETFs. Maybe we have a lesson learned at our $14,000. Huge L. Huge fucking L. Jay Powell does not let it go down. Look at MTUM surging. Should buy 9 more shares of MTUM and let it roll. Lesson learned. Today was a lesson learning day. We got wrecked. 2 days in a row we got wrecked. Perma Bulls get fucked by Bears 2 days in a row.
All right, so the Fed All right, so the Fed just announced that it will keep rates low over the next 2 years, 2.5 really, to make sure the economy recovers and the job market rebounds. Right now, the unemployment rate sits at more than 13%. And for African Americans, it has jumped from historic lows just a couple of months ago to its highest level in more than a decade at 16.8%. As we await Fed Chair Powell's news conference, we want to look at what the Fed might be able to do to help those hardest hit by the pandemic. And here to discuss is Bill Rogers, professor of public policy and chief economist at Rutgers University. He's also former chief economist for the U.S. Labor Department. Bill, good to see you again. We read the distressing numbers that you provided in your note. There's a wonderful story in this morning's, depressing story in this morning's New York Times by Ron Lieber, talking about the disparities in income between African American households and white or non-African American households. Even more alarming, I think, is the disparity in wealth, net worth. What specifically could the Fed do to address or redress these discrepancies?
Yeah, so the most obvious is how they conduct monetary policy. And so today, when I was listening to the announcement of what they're going to do and their forecast,
we got
for the
wrecked.
future, basically what I'm hearing is, from their standpoint,
2Gs
this is what they're
2G
setting
day.
the speed limit of the
2G
economy
day.
to be. And so on one hand, it was
Horrible
positive
day
to hear
for us.
that they're aiming to keep rates low, in that 0 to 0.25%, through 2022, and and that will allow communities that need to rebuild, that were, let's say, hit by looting, that they can hopefully get borrow at cheaper rates. It also just allows the economy to run for a longer pace, because focusing on the unemployment rate is great, but we also have to remember we have to focus on the employment population ratio. That's fallen below 50% for women, women of color, even white
Look
women.
at it drop back down now. Like, if you would have just
So,
waited, the
so
SPY
letting
was
the
going to go
economy
down.
run
That
with
was
these
a
low
horrible
interest rates,
thing.
and while being data dependent and looking for signs
Nice.
of
All
inflation,
coupon
the
codes
longer we
remain.
can do that, the longer we can. That's what the Fed can do to help to ensure a balanced recovery, a recovery that all Americans experience, and a recovery where blacks don't have to wait 10 years before their incomes retouch their incomes at the peak or the start of the Great Recession. And then the second thing that they can do is on the lending market. Right?
I'm still in it, so I hope so.
Providing lower cost loans and opportunities for HBCUs or even land grant institutions, states that need to.
I think I'm going to take the 90-day lockup and chill.
Push back.
3-month chill.
So it's it's the monetary policy.
Just add money to the account.
What that speed's going to be, and if you look at that 4% unemployment rate, the 8% unemployment rate forecast, if you go by the sort of rules,
it's probably good for me to do that.
Black unemployment rate typically is in around 2-to-1 ratio. You're looking at then possibly 8% unemployment rate, a 10, 12, 11% unemployment rate for African Americans going forward as the economy recovers. But again, though, let's focus on that employment population ratio. We got to get people back to work.
Bill, it's Kelly here. I have a quick question, because you have a really interesting point about how holding off on rate hikes late in the cycle helps people like the black community, who are often first to be fired in these situations and last to be hired. The very effect that you're describing.
ETFs you can
But
only
often
buy
when you get
like
late in those cycles.
you can only use your options
thinks,
money.
The Fed's helping the 1% and they're just helping Wall Street. How do you change that narrative so that people say, hey, maybe the Fed is trying to help these hardest hit minority communities?
Well, it starts with research. Myself and Seth Carpenter, former Fed economist, back in the late 1990s, we actually looked at and then did a study that was published in peer-reviewed journals and quality peer-reviewed journals, and showed that when the Fed begins to tighten, it actually has these disparate impacts on the unemployment rates of African Americans and even young people and less educated. So it's not just a race.
Don't let the Fed beat you down. Don't bet against them.
So we had this great.
We learned never to bet against the Fed.
1990s when I was working
with
Secretary Herman, where the unemployment rate
heard
fell
loud
to
and clear.
Points that we're seeing
loud
today.
and motherfucking clear.
But the Fed was data dependent, was cautious, and let things settle for 12 to 24 months. And so some work I did with Richard Freeman, a colleague from Harvard, we found that actually that if you let that economy run as long as you can without inflation, you end up seeing that the people who had the biggest gains in percentage terms, because they're coming from lower bases, but were young African American men. And then the other thing that has to happen now, along with the Fed now setting the speed limit, we need the folks up in the Capitol and in the White House, that they've got to do more than just talking about more trickle-down economics.
Dude, down 13% today.
In an earlier interview of providing tax incentives, he said nothing about making
Can't do that all the time. Jesus.
For consumers and for workers, by making sure they have the PPE, making sure that they have the training and the guidelines on how to prevent the virus from coming into the workplaces and creating another wave or round of infections, which could then slow the economy down.
Let me turn to the question of the minimum wage, which came up yesterday as we were talking to Tillman Fertitta, the restaurant and gambling impresario. Let me play the sound that he had yesterday, and then I'll ask a question.
It needs to be raised, but you don't take it from where the federal minimum wage is up to almost $20 an hour. And you say, well, help the worker. The worker's going back to work, okay? That's the best thing we can do, is put everybody back to work. But we can't have an inflation in retail and restaurants because of the labor cost that nobody's going to be able to afford to go buy anything in a retail store, or nobody's going to go be able to eat in a restaurant.
He was citing there a wage hike to $20 or thereabouts in Berkeley, California, and he made the point that you have a federal minimum wage which he thinks is too low, but then you also have state and local governments acting as though they were countries setting their own minimum wage.
I think I'd take my 90-day slap on the wrist, man. I deserve it.
Down on this, and his point is an interesting one, and that is,
I deserve it. I lost 10% of my account in a day. 90-day slap on the wrist.
Because the prices
right?
go up.
Yeah, I mean, I'm sympathetic with him on the if you think that you're going to make the minimum wage jump from $8.25 or $9, $10 an hour up to 20, all in one fell swoop. Yeah, that's not what I advocated, and that's not what I think many economists have advocated. That they've advocated movements to 15.
To the Robin Hood timeout corner. I might come join you over there.
That you don't get the job.
I think I might.
That he's thinking that you get. And then also right now, I think the way we provide wages and provide support to people on Main Street who filed for unemployment.
I think I'm going to take the 90-day timeout.
I think the way that we help them out is...
It's only fair. It's only fair. Time myself out. Put the money in the ETFs. Let's see what they do for 90 days.
And that is
on their own.
Unemployment insurance with triggers, so that you start to lower benefits or pull back on it once we see the economy recovering. A second check of $1,200 or $2,400 depending on your household size, and then also one particular group that needs some help, make them eligible
for fun. Exactly, if you're a mother, exactly. That's what we did.
High school graduates who are going to have difficulty. So I think once the economy gets back together and we have faster growth and stronger growth, yeah, I think getting back to minimum wages is one way to help to have a prosperity that is shared.
We may have to interrupt you as we await Chairman Powell, but let me give a quick,
all in. Show me your aid.
Does there
Sevens,
need to be
no good.
yet
We
another
had kings.
stimulus
Thanks
package?
for all of your big blinds.
Well, I think it indicated in my answer
for all of them.
Yeah. The other, along with what I mentioned in terms of unemployment insurance, I think we also need to help out state and local governments. I'm working with Governor Murphy here in New Jersey on his Restart Commission, and we had a budget briefing the other day. If we don't see assistance, we're going to see a second wave.
Don't mean to jump in to this conversation. Fed Chair Jay Powell has just taken the podium. Let's listen in.
Challenging time, as the pandemic is causing tremendous hardship here in the United States and around the world. People have lost loved ones. Many millions have lost their jobs. There is great uncertainty about the future. At the Federal Reserve, we are strongly committed to using our tools to do whatever we can, and for as long as it takes, to provide some relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. The most important response to this crisis has come from our healthcare workers. And on behalf of the Federal Reserve, let me express our sincere gratitude to those dedicated individuals who put themselves at risk day after day in service to others and to our nation. Let me also thank the many other essential workers across the country who have helped meet our basic needs for goods and services in these difficult times. The virus
Money
and the
printer go
forceful measures
brr.
taken to control its spread have induced a sharp decline in economic activity and a surge in job losses. Indicators of spending and production plummeted in April, and the decline in real GDP in the current quarter is likely to be the most severe on record. Even after the unexpectedly positive May employment report, nearly 20 million jobs have been lost on net since February, and the unemployment rate has risen about 10 percentage points to 13.3%. As was highlighted by the Bureau of Labor Statistics, this figure likely understates the extent of unemployment, accounting for the unusually large number of workers who reported themselves as employed but absent from their jobs would raise the unemployment rate by about 3 percentage points. The downturn has not fallen equally on all Americans, and those least able to shoulder the burden have
Yeah,
been the
we're
most
waiting for
affected.
the new headphones to come
In
in.
particular, the rise in joblessness
God, maybe
has been
it's here.
especially severe for lower wage
Should go check
workers, for
outside,
women,
actually.
and for African Americans and Hispanics. In recent weeks, some indicators suggest a stabilization or even a modest rebound in some segments of
Delivered.
the economy,
It is outside.
such
Let
as
me go get
retail
it.
merchandise and motor vehicle sales. Employment rose in many sectors of the economy in May, and the unemployment edged down as some workers returned to their jobs from temporary layoffs. With the easing of social distancing restrictions across the country, people are increasingly moving about, and many businesses are resuming operations to varying degrees. At the same time, many households have been receiving stimulus payments and unemployment benefits, which are supporting incomes and spending. Activity in many parts of the economy has yet to pick up, however, and overall output is far below earlier levels. Moreover, despite the improvement seen in the May jobs report, unemployment remains historically high. Weak demand, especially in sectors most affected by the pandemic, is holding down consumer prices. As a result, inflation has fallen well below our symmetric 2% objective. Indicators of longer-term inflation expectations
Boom,
have been
chat.
fairly steady.
We got it.
The extent of the downturn and the pace of recovery remain extraordinarily uncertain and will depend in large part on
What? Why doesn't this work? What? What is happening right now? Now the sound doesn't work at all, right? What is going on here? Does this have to be like a special one? What the fuck is going on here? Dude, I've ordered headphones. Like, what the fuck, man? These fucking suck balls. It has to use their thing? That is so fucking dumb, yo. Now, how can I do this? Why doesn't this go in here? Why can't I just use any that size thing? Is this different size? Are these a different size? This one does look slightly bigger. Is this too big? Why can't I hear anything either? What? What the fuck, man? Why isn't this working now? Everything is going wrong today. I need to just go back to bed.
Present a committee view. Rather, FOMC participants write down their individual views of the most likely path for the economy, conditioned on each participant's view of appropriate monetary policy. We tabulate those submissions and we publish them as the SEP. Given the unusually high level of uncertainty about the outlook, many participants noted that they see a number of reasonably likely paths for the economy, and that it's not possible to identify with confidence a single path as the most likely one. Nonetheless, we believe that regular publication of the SEP provides a useful perspective on the way FOMC participants are assessing the path ahead. What the June SEP shows is a general expectation of an economic recovery beginning in the second half of this year and lasting over the next couple of years, supported by interest rates that remain at their current level near zero.
Motherfucker.
Of course, my colleagues and I will continue to base our policy decisions on the full range of plausible outcomes and not on a particular forecast. The risk management approach, is the best way we can promote our maximum employment and price stability goals in these unusually uncertain circumstances. Finally, I want to acknowledge the tragic events that have again put a spotlight on the pain of racial injustice in this country. The Federal Reserve serves the entire nation. We operate in and are part of many of the communities across the country where Americans are grappling with and expressing themselves on issues of racial equality. I speak for my colleagues throughout the Federal Reserve System when I say that there is no place at the Federal Reserve for racism, and there should be no place for it in our society. Everyone deserves the opportunity to participate fully in our society and in our economy. These principles guide us in all we do, from monetary policy to our focus on diversity and inclusion in our workplace, and to our work to ensure fair access to credit across the country. We will take this opportunity to renew our steadfast commitment to these principles. We understand that the work of the Fed touches communities, families,
I'm glad I'm in the ETFs. Who cares? I'm in a bunch of ETFs now. Who fucking cares?
Using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to our questions. I look forward to our questions.
Alright, so I have to be like fucking tied to my desk.
First question, Nick Emerald.
Dude, this is like super tethered.
Yes, hi. Thanks, Chair Powell. Nick Timrose at the Wall Street Journal. I want to ask about the economic projections.
Under
and
the
I realize
table,
these are more
possibly.
educated guess at this point. But they suggest the committee sees quite a large output gap over the next 2 years. And yet the committee did not take any steps today to reinforce your forward guidance.
Fuck,
so
I
my
just hit my
questions
head,
are, first,
dude.
what are you hoping to learn?
This is the worst
by
day
weighing
ever
in?
for me.
Second, how might that change your response? And third, how close is the committee to reaching a decision on a more concrete forward guidance and whether yield caps might reinforce that guidance?
So,
I gotta like pull on this thing.
first,
now?
I would say that we think that monetary policy today is currently
Stretch it
well-positioned
out
to support
now.
the economy in this challenging time.
Stretch it out.
If we didn't think that, of course, we would change our policy now. As you know, we lowered our policy rate very quickly than others, to the effect of lower bound. And we said that we'll keep it there until the economy has weathered the effects of the virus and is on track to achieve our goals. You can see that in the dot plot, as I think you pointed out, that overwhelmingly FOMC participants expect, as their baseline expectation, no rate increase at least through 2022. And if you look at surveys of more forecasters and market participants,
There should be
financial
audio.
prices, et
You
cetera,
guys are getting audio?
Those also appropriately reflect a long spell with rates at the effective lower bound. So the first thing is monetary policy is in a good place, and that's well understood in the markets.
Stretch this motherfucker
Secondly, we've
out.
also taken strong measures to support the flow of credit in the economy, as I mentioned. And third, we're continuing asset prices in coming months at a relatively high level. So for all those reasons, we feel like
Then snap, no audio.
policy
Oh,
is
I'd be
now in
fucking
place.
pissed.
So as we look ahead, we see
Maybe
the
so it
path
is.
ahead for the economy is highly uncertain and continues to depend to a really significant degree on the path of the
I think we
pandemic.
got some good length
So
on it now.
at this meeting, what we did was, as I mentioned, we looked in some depth at forward guidance and asset purchases and looked carefully at those. We also received a briefing on the historical experience with yield curve control. And we'll continue those discussions in upcoming meetings.
Why are you pulling your
evaluate
cord
our
on stream? I
stance
thought
and
Twitch banned
communications
that.
As more information about the trajectory of the economy becomes available. I would just say, in terms of what we're looking for, we expect to get a better understanding of the economy's trajectory, and particularly how we should best deploy those tools to achieve those goals. So that's really what we're looking to achieve, and as you can see, we're actively at work on that. We're actively at work on that.
Next, Gina.
Hi, Chair Powell. Thank you so much for taking our question. I'm curious about your inflation forecasts, which are pretty low across the forecast horizon. I guess just given how low you see inflation being over the coming years, why is policy appropriate now, and why not just kind of throw everything you can, everything in the kitchen sink at it currently? And I guess if you could just talk a little bit about what urgency you see in returning it back to that 2% target.
Current policy stance is appropriate, and remember, we're using our emergency or 13.3 lending tools to an unprecedented extent. We have asset purchases, and we've now said that we won't go any lower than this, but that we're prepared to adjust as appropriate. And rates are at the effective lower bound. So we have all of our tools in use in a strong way. And so what we're waiting for is to learn more. I think actually, if you look at the May employment report, it's a pretty good. Probably the biggest data surprise that anybody can remember. It's a pretty good illustration of just how uncertain these times are. The economy's reopening. We're going to learn a whole lot about the path of the economy in the next incoming months. So that's really what we're looking for. In terms of inflation, you'll know that we had a 128-month expansion, and we never did quite get inflation back to 2% on a symmetric, sustained basis. We got close for the last couple of years, but we never did quite get there. So I think we have to be humble about our ability to move inflation up, and particularly when unemployment is is going to be above most estimates of the natural rate for certainly above the median in our SEP well through past the end of 2022. So I think we're in the right place now. We are looking carefully at as we learn more and better understand the path of the economy, we will be assessing what's the best way to deploy all of our tools to achieve our goals in the best possible way. And I'll just say again that we are the May employment report, of course, was a welcome surprise. Very pleased. We hope we get many more like it. But I think we have to be honest that it's a long road. It's depending on how you count it.
Fair enough.
More than
It is a
20
long
million people
road.
displaced in the labor market. It's going to take some time, and we are going to be deploying our tools, all of our tools, to their full extent, in pursuit of those goals, however long it takes. However long it takes.
Okay, Steve Leeson.
Thank you, Mr. Chairman. I think I understand how the Fed might react in the event things come out worse than expected. I think I don't understand how you might react if things come out better than expected. Kind of a variant on these other questions. How firm is the commitment to lower interest rates? And if things end up better, do you stick with these low interest rates as you projected them? Or is it specific points that you have in mind, for example, unemployment or inflation that is animating where you might go? What are those numbers that you're looking for that might cause you to change about the policy as it now is projected?
Well, I think we just had a period of unemployment, as you know, that was well below 4%, hanging around 3.5%, that lasted 2 years. And during that period of time, we saw a lot of great things happening in the labor market, things that we'd love to get back to. We didn't see any problems with price inflation. Price inflation didn't really react much. So I would say, we'd be looking to get inflation back up, and we'd be prepared to tolerate pretty low, welcome, in fact, not tolerate, but welcome very low readings on unemployment, just based on what we saw in the last expansion. So, we're not thinking about raising rates. We're not even thinking about raising rates. So what we're thinking about is providing
we are getting destroyed
support
today.
for this economy. We do think this is going to take some time. I think most forecasters believe that. It would be great if we got a whole bunch more months of job creation like that. Notwithstanding that, as I mentioned, there are just a lot of people that are unemployed, and it seems quite likely that there'll be a significant group at the end of even after a lot of strong job growth that'll still be struggling to find jobs, and we'll still be providing strong accommodation for that. Strong accommodation for that.
Jane?
Thanks very much, Chair Powell. There have been plenty of comparisons with the Great Depression of the 1930s the crisis began. Is that scenario sort of that more dire scenario now comes out and we're looking at a more traditional and sudden recession? And are you at all concerned that the strong performance of the stock market in the last few weeks is disconnected from the economic reality?
BTC on the move today.
I think that
They're like the
Great
Fed is
Depression is a good example or a likely outcome or a model for what's happening here at all. I really don't. And there are just so many fundamental differences. First, the government response has been so fast and so forceful. The origin was quite different. This was an economy that was in a healthy place. Of course, every economy has longer run challenges. That includes our economy. Notwithstanding that, 50-year low in unemployment and the longest expansion in our history, and every reason to think it could continue. So that's different from what was happening around the time that the Depression started. The financial system this time was in very good shape, much better capitalized. So, it's just not the right model. I would say we're learning. Every month that passes, we're seeing more, we're learning more, and I think particularly the next few months will be very important in learning what the real story will be, because we'll see the significant incoming data about the opening of the economy, the reopening of the economy. You know, and I would say, assuming that the disease remains or becomes pretty much under control, I think that what you see is a very weak second quarter, historically weak, and then an expansion that builds momentum over time. People will adjust probably a little bit gradually to some of the activities that involve getting together in large groups in close quarters. Those will be the harder parts of the economy.
Is he wrecking the market
but
right
ultimately,
now?
we do see a full recovery over time, and that's really what what I think I'm personally seeing. And you could see significant job growth in coming months as people return to their jobs, but you're still going to face probably an extended period where it will be difficult for many people to find work, and that's what you see in really many forecasts at this point. That doesn't mean it's right, but that's sort of a broad expectation. Certainly not the depression forecast.
I mean, that makes sense. What's up? What? You're the best. Lunch delivery from DD Chat? Ramens. Hey, we lost money today. We deserve ramen. That's all we deserve today.
You have,
A lot.
You didn't change
A lot.
policymakers didn't change the forecast for long run.
Everything. It's
So that
all
suggests
gone.
that you-
It's all
you know,
gone.
That all of you so far don't see necessarily prospects for long-term
Couple
damage. But
Gs.
still, what kind of data are you looking
It's
at
not good.
here to gauge, the potential
Get my
for
shit
longer-term hits to the economy, even as we have something like the May jobs report? You could still have, at the same time, people return from temporary layoffs. There could still be permanent job losses. So, what kind of data are you looking at to gauge that potential impact, and what is it
This is a
telling
really
us so far?
important risk, and I think it's not the risk for the next few months, but it's the risk over time of lasting damage to these to the productive capacity of the United States, typically in two forms. One, through extended periods of unemployment. People lose contact with the labor force. They get out of touch with the skills that they need.
Dang it.
And they have a hard time getting
Should have
back
kept
in.
those
And
puts.
That it's very damaging to people's lives and their working lives. And it also just lowers, in a way, it can increase the unemployment rate, but it can also lower the labor force participation rate, which is almost worse in a way, to have people dropping out of the labor force where we need them in the labor force working. The other piece of it is just businesses. A shock like this that just comes in, it's like a natural disaster. You wouldn't want a lot of perfectly good businesses,
Hedge the
particularly
streamer.
smaller and medium-sized
Well
businesses
done,
that
well
may not
done.
have a lot of resources to sustain them, to go out of business permanently in a situation like this, where really there was no reason for it.
I'm going to
Of
mute
course,
up so you don't have to hear me.
businesses are
eat
going to go
ramen
in and out of,
noodles.
they're going to fail all the time, and that's a healthy thing in capitalism. That's something that has to happen. But this is different. This is a way, potentially. So those are the things we've been worried about. We didn't change. You're right, though. We didn't change our longer run estimate of potential growth or of the unemployment rate. And that's, I would say, in my thinking, the reason I didn't change mine is that I think we can avoid that, or avoid much of that, most of that even. And we do that with measures that keep people in their homes, that support hiring, that support growth, that avoid unnecessary, avoidable business insolvencies. And that's all the things that we're trying to do. Basically, if you look at what's happened, as I mentioned, there's somewhere short of 25 million people have been displaced, even after the good May employment report.
Getting destroyed.
What we're trying to do is create an environment in which they have the best chance either to go back to their old job or to get a new job. That's kind of the most important part of this
Our
exercise.
puts would have been
And
printing right now.
Maybe it's probably hopeful at this point to say that we won't have longer run damage to the economy and these numbers won't change. But I think it's way too early to be changing longer run. See, these are not meant to be short run numbers. They're longer run assessments. So I have not changed mine, and I'm hopeful that I won't have to change it. Hopeful that I won't have to change it.
Heather?
Hi, good afternoon, Chair Powell. I'm struggling with two things that I'm hoping you can provide some clarity on. It's the ongoing bond buying program. You say that it's needed to continue the smooth functioning of markets, but I guess most of us aren't really seeing a lot of instability in markets right now. So if you could kind of give us some clarity of what you're seeing that needs to continue to be smooth at that level and that pace. Second is, you were just talking about Fed concerns about small and medium-sized companies going out of business during this. And I guess, the Main Street lending program still isn't running yet. When do you expect loans to start happening? And do you think the 2-month delay has hurt the chances of some companies surviving?
There have been gains in market function, although not fully back to where you would say they were, for example, in February before the pandemic arrived. We don't take those gains for granted, though. This is a highly fluid situation, and we're not taking those for granted. In addition, as I pointed out in my statement, those purchases are clearly also supporting highly accommodative financial conditions, and that's a good thing. So that's why we're doing that. Turning quickly to Main Street. So I would say that what we've done on Main Street, I think to a greater degree, is we've listened to feedback. So we've been out repeatedly for feedback in trying to create a much more difficult product than really the other facilities. And I think this last set of changes we made have actually been very positive for the facility. I think it's going to be better able to achieve its goals. And so we've used the time well, I think. And now we are now in the final run-up to starting the facility. What we did, as you saw earlier, I guess it's early this week or late, whenever we did it, in the last few days, was we lowered the minimum loan size and we increased the maximum loan size. But I think even more importantly, we lengthened the maturity and we stretched out the repayment schedule significantly. So borrowers will get a 2-year delay until they have to make any principal payments, repayments, and a 1-year delay on interest. So we had been hearing from both borrowers and lenders that these would be very helpful. We made the changes. We're putting them through the facility. The next step will be to register lenders. At that time, loans can begin to be made. Shortly after that, the facility itself will be up, and those loans can be sold to 95% of the loans.
Can we survive in the long run?
Now in the Main Street facility can be sold. So all of that should happen quickly now. And I do think this has been a challenging project, but I think we've come to a better place. And by the way, we're going to be prepared to adapt further if we need to, and that's true of all of our facilities. These are unique.
God, we ate shit
There's no playbook here. You have to draw this up and then try it out, and we've been very willing to adapt, and we'll continue to be.
We ate shit today.
Willing to adapt, and we'll.
Okay, Matt from Bloomberg.
Hello, Chair Powell. This is Matthew Bosler with Bloomberg News. I wanted to ask you about regulatory forbearance. There were some piecemeal forbearance measures put into place in various jurisdictions and also to a slice of the mortgage market to prevent banks from foreclosing on such debts amid the widespread financial hardships caused by the pandemic. And with many of those set to expire soon and many businesses and households still in dire financial straits, I'm wondering if any consideration is being given at the Fed to more comprehensive regulatory forbearance measures or other regulatory measures to prevent businesses from going under just because they can't meet those payments. There have, of course, been some tweaks to the Paycheck Protection Program on the fiscal side to address this, but I wanted to ask you about things you might be able to do on the regulatory side as well. Thank you.
We can make changes to bank regulation and supervision. I don't know that we have the ability to make changes, for example, in mortgage payments, if that's your thing, or credit card payments. That's something that could be legislative, or it could just be what the banks themselves are doing. There's been a tremendous amount of forbearance on the part of the banks, and I guess our role there would be to encourage it. But those are not decisions that we hold any legal authority to make. And by the way, we have encouraged those decisions. I hope that's responsive to your question.
Scott Horsley, NPR.
Thank you, Mr. Chairman. I know you're loath to weigh in too heavily on fiscal policy, but given your forecast for elevated unemployment rates, do you think it's important that Congress extend the $600 per week extra unemployment benefit.
I think we try to keep our comments on fiscal policy at a high level, and I'll come to your specific question, but I would just say this. This is the biggest economic shock in the U.S. and in the world, really, in living memory. We went from the lowest level of unemployment in 50 years to the highest level in close to 90 years, and we did it in 2 months. Extraordinary. And appropriately, the response from fiscal authorities has been large, forceful, and very quick by the standards of these things. Roughly $3 trillion Congress has authorized, and that's benefiting households, laid-off workers, small, medium, and large businesses, hospitals, state and local governments. 14% of GDP. It's in a class by itself in terms of both the size and the speed of it, and it's also pretty innovative. You know, both the PPP and the unemployment insurance are quite innovative in the American context, and there were difficulties in implementing it, but that's really a function of
God, if we would have kept
novelty,
our
I think. Those programs, by the way, let me add, the Fed also, we both innovated and acted forcefully, progressively, proactively, and aggressively as well. You put those together, all of that is making a difference now. You look at the income data, the expanded unemployment insurance and also the stimulus checks have gone a long way to replacing lost income from job loss. I think you're seeing it in the job market data. Many are giving the PPP credit on that front, and in keeping small businesses going. So it's so far, it's a good response, and it's having a big effect. You get to the question is, it's big. Everyone can see that it's big. Is it going to be big enough? And that is a question. And the question the question that I've been concerned about really is this issue of longer run damage to the economy. We're doing a fair job of getting through these first few months, more than a fair job. The question, though, is that group of people who won't be able to go back to work quickly, what about them? And that could be many millions of people, you know, who worked in parts of the economy that will be the slow ones to recover. And, you know, we want those people back in the labor force. We want them getting jobs. So, and they're going to need, probably will need further support. So I would just say this. It's possible that we will need to do more, and it's possible that Congress will need to do more. In terms of the $600 unemployment insurance, I wouldn't try to give Congress advice on the specifics of that. I know they're looking at, I know from both talking to people and
11 contracts now, damn near my whole account.
They're looking at a whole bunch of different possible approaches going forward, and some of those seem kind of promising. So, you know, we're happy to give advice if people ask for it, but probably not publicly.
Thank you. David Gura.
Thank you, Chair Powell. I'm going to pick up on what Scott Horsley was asking just a moment ago.
I got one just to get one. My God, I'm racking up the day trades before they lock up the account. They're going to lock the account up like a motherfucker.
Not giving advice to Congress, but indicating that there's likely to be a need for more fiscal stimulus or additional policy in the future. So I'm going to try a hypothetical here, and you can rebuff it if you want. But if you were to find yourself in a senator's office suite, he held up that May unemployment report, which you've described as unexpectedly positive and a welcome surprise. And if he or she said to you, look, this is an indication that we can put on the brakes, I wonder what you would say. Your message throughout this crisis has been one of how unprecedented it is, about how much urgency there is in dealing with this. Indeed, we've seen that from the Federal Reserve. I wonder if you worry that sense of urgency isn't being matched and what the consequences of that might be. If there's a fear that the Fed could be seen as a Cassandra here as we look at that unemployment report and then through the summer, and you have more and more politicians inclined just to wait and see what happens here in subsequent reports. And a quick second question, if I could. You've talked a lot about your fear about a second wave of this disease, and it strikes me there's a difficulty here with definition. You've talked about us weathering this crisis and getting through this storm. It seems to me, as I listen to the chatter coming from the White House and from politicians and epidemiologists, that there isn't agreement on what getting through this means. And you have an administration now
it's the wrong. It's the wrong
if not
thing.
direct, be content with states opening up their economies perhaps too early. How problematic is that from a policy perspective? Not having agreement on what it means to have.
Stop it. Lock your account and be done for the day. I'm fucking done for the day.
I'm not going to give your. I want to be clear about the picture, one way to look at the picture, really, and that is this: if you can get at this by looking at the widest measure of unemployment, of labor market slack, if you will.
Yeah, fuck yeah, I
is the
did. I'm
U6
fucking
measure.
done for the day.
And
I'm done.
The one
Lock the
we talk
account.
about all the time is called U3.
Lock the
by
fucking
economists.
account
And
up.
The one that has a much broader measurement of slack in the economy is U6. So in U6, the U6 level of unemployment has tripled from 7% to 21%. That amounts to 22 million additional people who are who've lost work in the economy, either by going to part-time or something like that. So that's in the low 20s, and that's post the May employment report. You can get at it a different way. You can look at just the regular unemployment rate. You can take the 21 people who were listed as unemployment now. You can add more on for the ones who are miscoded. You can also take those people who are suddenly out of the labor force. You put those together, and that has gone up by about 24 million. So those are two different measures of what's happened. So the question is 22, 24 million people. Got to get them back to work. Somehow we got to all, as a country, get those people back to work. They didn't do anything wrong. This was a natural disaster. And I do think the responses so far have been great. So that's
What a
the way I would
fucking
think of it.
day.
And if you think, I would just, in terms of the May employment report, it's so nice to see. I mean, I think what people were thinking was that you'd start to get those back to work kind of numbers in June and July and August. Very few people saw them in May. I mean, almost no one saw that happening as early as mid-May, but it did. And so, and we don't know fully what that means, whether it's just a timing change or whether it will prove to be much more than that. Well, we're going to have to wait and see. It is, as I mentioned earlier, it is clear evidence of just how uncertain things are and how humble we have to be about our ability to really have confident predictions as opposed to just predictions. So, bottom line, I would just say that is the key thing people need to understand, is that there's just a lot of work to do in the labor market. We're going to stick with this and support that until the work is done. That that is something we're going to do with all of our tools, and I think it may require Congress to help as well. It may, but that's going to be their decision. On you also asked about the second wave. So we have major responsibilities and powerful tools, but the decision about when to reopen the economy is one for elected officials at the state and local.
I let
and
myself
federal
get
level.
here.
And
We should have stopped trading a long time ago.
We don't have any
Can't just
particular
trade all
expertise
day
here
long.
at the Fed in
You're not going to make it.
pandemics or coronaviruses or anything like that. We talk to experts, but
Better off to
so
just
we don't have
slowly
anything
add to the
special
ETF.
add on that. I would just say it's it's kind of self-evident. I think that if it happens,
Sell covered calls
the
and
issue
shit.
would be, first of all, people's health, but secondly, you could see a public loss of confidence in parts of the economy that will be already slow to recover. So it could hurt the recovery, even if you don't have a national level pandemic. Just a series of local ones, of local spikes could have the effect of confidence in traveling, in
Look at how
restaurants,
all
in
over this was today.
entertainment, anything that involves getting to people together in small groups.
And I was on the
feeding them
wrong
or
side of
flying
it
them
every
around.
time.
Those things could be hurt. So it would not be a
The
positive
wrong side
development, and,
every time today.
I'll just leave it at that.
Thank you. Edward Lawrence.
Thank you, Chairman Powell, for the question. On the Main Street lending facility, in May we saw at least 55 companies file for bankruptcy. Do you think that it is too late? First of all. Second of all, the future of these facilities, is this a one-year impact to the economy through these facilities, or is this a multiple year? If so, how many years?
4%. I wish I only
have,
lost 4% today.
Significant interest, we think. And also remember, lots and lots of companies are getting financed too. The banks are lending, the markets are open. You have a much better lending climate than certainly than we had in February and March. We don't think it's too late though. We do expect it to be up quite soon. In terms of the timing of these things, so we'll leave them open. We'll leave them open for new loans.
Never again.
As long as they need to. That'll be a decision we make, of course, with our colleagues at the Treasury Department.
Never again.
And at a certain point, there won't be a need for further loans, and then the assets will be there. And so if that's, I don't know if that's part of your question too, but I would just say that at that point, you know, the useful role of the Federal Reserve is probably close to an end at that point. We don't have any expertise in managing pools of credit assets, loans, if you will, or bonds. And we don't want to be made. We don't really want to be part of the decisions that have to be made to manage such a portfolio. So we'd be looking to have that done.
It's going to take me years to make that back in the SPY.
You know, by a third party or at the Treasury Department or something. And we're working on ideas for that. But you know, our real focus now is getting these facilities going and getting them to do the job that they need to do.
Thank you. Donnell with Reuters.
Thank you, Chair. So I have two quick questions. One is if we have hit bottom for the economy, and the second question is regarding the way that the pandemic has exacerbated racial inequality. I wanted to ask, to what extent do you think you can factor in those disparities when you're thinking about maximum employment?
I would say that many forecasters had been expecting a bottom for the economy around the middle of the year, with a huge range of uncertainty. I think the labor market, the evidence of one jobs report is that the labor market may have hit bottom in May. We don't know that. We're going to see. And you know, many forecasters widely expect a recovery over the second half of the year. So it is possible, but you know, the thing is, we're not going to overreact to a single data point. We're going to be very careful about reaching any conclusions about good data or bad data. So I think, you know, we're going to be here with our tools supporting this economy for as long as it's needed. So, but I think there's a possibility that the bottom has come in the labor market, but we don't know that yet. We'll know more as we go forward. So, in terms of the effect of the pandemic on inequality, what you see, the pandemic, of course, hits everybody, but in an economic sense, it hits those industries that involve groups of people in tight groups, either in places where it's the travel, leisure, restaurant, bars, those kinds of service economy jobs. And so a lot of the lost jobs were from people who work in the service economy dealing with the public, for example, and relatively, compared to other jobs, relatively low wages. So if you just look at what that is, unemployment has gone up more for Hispanics, more for African Americans, and women have borne an extraordinary, a notable share of the burden beyond their percentage in the workforce. So that's really really unfortunate, because if you just go back 2 months, where we had effectively the first tight labor market in a quarter century, and for the last couple of years before the pandemic hit, you were seeing wages go up the most for people at the lower end of the wage spectrum, and that was great. And you know, we were meeting with people from low and moderate income communities all over the country and hearing, don't change this.
I'm interested to see what'll happen in the future
now. This is
now.
the best labor market we've seen. And we had every expectation, every reason to expect that this would continue. And then this comes. So it's heartbreaking. And, you know, we want to get it back. So we really want to get it back. And so I think we learned a number of things over the course of the last few years. One of them is that, you know, you can have 3.5% unemployment for a couple of years, and really you see modest moves in wages and relatively almost invisible moves in inflation. So that was not anybody's understanding of the structure of the economy, I think, or most people's anyway. So we can use our tools to support the labor market and support the economy. We can use them until we do fully recover, and that's what we're planning to do. You know, we don't target different groups. What we are cognizant of the fact, though, that late in the last cycle, late in the last expansion, the benefits really do go more to people at the lower end of the wage spectrum for the first time in many years when labor markets are tight, when unemployment is low. And so we would really like to get back to that place.
Let's get back to that place.
Victoria, Politico.
Hi, Victoria Guido with Politico. I just wanted to follow up on a couple of things that have already been asked. First of all, on fiscal policy, you all obviously put out your summary of economic projections today, and I'm curious to what extent future fiscal policy is factored in or not factored in to those projections, and how more or less fiscal policy might affect those projections. And then my other question is on Main Street. You've mentioned multiple times that the Fed and Treasury are willing to expand the program further. So my question is, what's the threshold for those types of changes? Is it just making sure that borrowers that want to borrow through the program are able to do that?
In terms of the way we do forecasts is we don't tend to incorporate things we're highly uncertain about. So I think the forecast would not have included substantial additional, big additional fiscal support for the economy. Maybe a modest amount, something that looks like a low-end guess on what might come out of the current negotiations. That's basically what would be in the baseline. So of course, if there were more fiscal support, you'd see better results sooner. But that's a question for Congress. We're spending a lot, and that's really what they get to decide.
Volatility
in terms
trades
of Main
today,
Street and
red
our
triangle,
willingness
sell
to expand
short,
it further, I
lose,
think
cover.
one thing we're looking at,
You gotta
very
DM it to me,
strongly
yeah.
looking at, is nonprofits, and is there a way to incorporate them into that facility or a similar facility? So that's another dimension. If we had a great idea for changing Main Street, we would have done it, and we have done some things that I think are really very positive lately.
Streamer girl, you're up 3% today. I'm fucking down so much
in
today.
terms of size, it could be in terms of lots of different things. But I think we have a good product to go to market with now. And
I give
it'll
up.
Get,
ETF
we'll get
it.
out there soon, and we'll see, and we'll be willing to continue to adapt.
Thank you. Don Lee.
As you know, the vast majority of people who have been laid off are expecting to be recalled by their employers. At this point, what is your expectation of how much of these job losses will be permanent?
Reliable estimate of that. Clearly, not everyone will go back. But I would say many will go back. But what's going to be the remainder when when we reach sort of what is the new normal? It's so uncertain. But it could be a good number of millions of people. I think in many estimates. But these, I'd say, you're so early in the process. For example, people are going back and looking at other significant changes in the economy, and they've seen how many people go back when, for example, there's technological change and things like that. You may have seen some of this research, and you come up with an estimate. It's just going to be very hard to say. My assumption is that there will be a significant chunk well into the millions. I don't want to give you a number because it's going to be a guess, but well into the millions of people who
we traded on
don't
emotion
get to go
today,
back
and it
to
was
their
so
old
stupid.
job, and in
So
fact,
dumb
there
to
isn't
trade on emotion
there may not be a job in that industry for them for some time. There will eventually be, but it could be some years before we get back to those people finding jobs. I mean, when people lose a job,
so dumb.
if they can find a job in their own industry, that's usually the fastest way. Is they know other people in that industry, different kinds of jobs. That's usually the fastest. If you have to go to a different industry and start over again, it's much harder, and that's where you start to lose people.
They all did all
who
right.
just fall out of the labor force, and
they did
and,
nowhere
it's
near
very
as
tough
bad
on their
as my
lives.
personal trading.
We all know people to whom that happened in the
No,
global
they're not
financial
all
crisis.
up, but we just bought, so
And hence our desire
I'm not
to
worried about that.
to
We'll add later.
do what we can to support this and
QQQ's up.
Support this recovery with the tools that we
P&G's
have.
up. Johnson & Johnson's up. Momentum's up.
Like Nancy
D
Marshall
grows
said,
down, SPHD's down, VSDA's down.
Marketplace.
American Airlines is wrecking
the
me.
issue of inequality, and I'm wondering what more could the Fed do economic inequality in this country? I mean, I know that you said you don't target certain groups, but is there a way that you could use, for example, the black unemployment rate as
Maximum
some kind of
pain
a
today.
benchmark to something you want to meet or something that
Maximum pain is being inflicted today.
Unemployment by all kinds, as you know, all kinds of different demographics, including particularly the African American unemployment rate, which reached an all-time low since the data started being kept in the modern era. Of course, it's still close to twice the white unemployment. It is twice the unemployment rate, or it was back then. It's certainly much higher now. You know, the best thing we can do with our monetary policy tools is to look at you know, the evidence of what we saw with our own eyes so recently, which is that the economy can have very low unemployment, very low unemployment. It could have been lower than we were. It could be lower than 3.5% without seeing financial imbalances, without seeing inflation getting out of control. We frankly didn't even get inflation back up to target, without seeing wages getting out of touch with where they should be. So that's the biggest thing we can do. You know, inequality is something that's been with us increasingly for more than 4 decades, and it's not really related to monetary policy. It's more related to, there are a lot of theories on what causes it, but it's been something that's more or less been going up consistently for more than 4 decades, and there are a lot of different theories. One of which just is that globalization and technology call for rising levels of skills and aptitudes in education, and that U.S. educational attainment kind of flattened out, certainly relative to our peers, flattened out over that period. And
shitting on American education.
If you're on the right side of those trends, then those things are good for you. If you're not, then your wages are going to stagnate. And wages for the bottom, 10% really haven't gone up in real terms in a very long time, and over a long period of time. Whereas wages for the people at the top,
who knows? Their long-term holds for me. I'm not worried about
taxes, after taxes, after transfers, all of those. Any way you cut it, compensation has gone up a whole lot for people at the top, and it really hasn't gone up for people at the bottom.
Okay, we're all
if you look more in the middle, then it has gone up for most other groups, but at the bottom, not so much in real terms, inflation terms. So, we call it out as an important factor in the economy, and we will use our tools to support maximum employment and take that definition to heart.
Where did I start that?
But obviously that's something that's going to require all of society, all of government response.
Started with 76 big bonds. We have 73. That worked well.
We'll go to Michael McKee.
Mr. Chairman, Michael McKee, Bloomberg Television and Radio. I came across a statistic the other day that amazed me. Since your March 23rd emergency announcement, every single stock in the S&P 500 has delivered a positive return. And I'm wondering, given the levels of the market right now, whether you or your colleagues feel there is a possible bubble blowing that could pop and set back the recovery significantly, or that we might see capital misallocation that will leave us worse off when this is over. And second, inequality is not just about wages, it's also about wealth. And a number of studies have suggested that by keeping rates low for so long and targeting the markets after the great financial crisis, that the Fed did contribute to wealth inequality in this country. And I'm wondering if you think there is some tweak or some message you could give that would affect that.
What we've targeted is broader financial conditions. If you go back to the end of February and early March, you had basically the world markets realized at just about the same time, I remember that Monday, that there was going to be a global pandemic, and that this possibility that it would be contained in one province in China for all practical purposes was not going to happen. It was Iran, Italy, Korea, and then it became clear in markets.
Get more momentum while I can.
Investors everywhere in the world, for a period of weeks, wanted to sell everything that wasn't cash, or a short-term treasury instrument. They didn't want it to have any risk at all. And so what happened is markets stopped working. They stopped working, and companies couldn't borrow. They couldn't roll over their debt. People couldn't borrow. So that's the kind of situation.
And then we're just loading up cash now. For 90 days, we're just going to load cash up.
Turbulence and malfunction. A financial system that's not working can greatly amplify the negative effects of what was clearly going to be a major economic shock. So what our tools were put to work to do was to restore the markets to function. And I think, some of that has really happened, as I mentioned in my opening remarks, and that's a good thing. So we're not looking to achieve a particular level of any asset price. What we want is investors to be pricing in risk like markets are supposed to do. Borrowers are borrowing, lenders are lending. We want the markets to be working. And we're not looking to a particular level. I think our principal focus, though, is on the state of the economy and on the labor market and on inflation. Now, inflation, of course, is low, and we think it's very likely to remain low for some time, below our target. So really, it's about getting the labor market back and getting it in shape. That's been our major focus. And I would say, if we were to hold back, because we would never do this, but the idea that just the concept that we would hold back because we think asset prices are too high. Others may not think so, but we just decided that that's the case. What would happen to those people? What would happen to the people that we're actually legally supposed to be serving? We're supposed to be pursuing maximum employment and stable prices, and that's what we're pursuing. We're also pursuing financial stability, but there you have a banking system that is so much better capitalized, so much stronger, better aware of its risks, better at managing its risks, more highly liquid. You have all of those things, and they've been lending, they've been taking in deposits, they've been a source of strength in this situation. So I would say that we're tightly focused on our real economy goals, and again, we're not focused on moving asset prices in a particular direction at all. It's just we want markets to be working. And I think partly as a result of what we've done there.
All the ETFs are doing good.
We hope that continues.
We just need to pile in ETFs.
Thank you very much.
Fed Chair Jay Powell continuing his crisis firefighting and making it clear he is in it for the long haul, that he will continue to support the economy through bond purchases that he says will continue and not raise interest rates from their rock bottom zero level until at least through 2022. Welcome, everyone, to Closing Bell. I'm Sarah Eisen here with Wilfred Frost. Wilfred, stocks have been sort of all over the place after and during this news conference. It looks like we're back on around the flat line, and the general takeaway is Fed Chair Powell still remains concerned about the outlook. He mentioned that it's uncertain a number of times, not to be too reassured by the better jobs report, which he said was welcome news, but that there's still at least 20 million Americans unemployed, and that the Fed is going to continue to support this economy in any way they possibly can. That was the message. How stocks are interpreting it? We were down, we were higher after the statement.
We were up, we were down, we were left, we were right. Nobody fucking knows.
About the volatility in markets, if we have the Dow intraday chart, you'll see that we briefly went positive on the session just at the start of his press conference. We were up 83 points on the Dow at the high. We then declined over 300, and as you can see, we're recovered back to being down now. Only 100 banks in particular suffering as a commitment to low rates for longer meant they're now down. KBW Bank's index down about 5% or so. Let's bring in our panel to discuss further. Mike Santoli, as always, is with us, along with David Zervos, Chief Market Strategist at Jefferies, Michelle Mayer, Head of U.S. Economics at Bank of America Global Research.
Apple's still going up,
President of Capital Markets, and our own Steve Leisman is with us too. Mike, first to you, just quickly on this market reaction. Clearly, clear commitment to keeping rates low for quite some time, but perhaps a slightly less constructive tone on whether or not we're going to see the economy continue to recover compared to the general gist from market commentators over the last couple of weeks.
Yeah, certainly Chair Powell emphasizing risk management, downside risk, the fact that it's going to be a long road, as he said at one point, back to a well-functioning economy. I do think that might have been just a little bit of a reminder. Also, you have to mention that the market often kind of goes to sleep during the press conference, figures out what a proper response is. Even the next day, there's sometimes a rethink. So you don't want to necessarily say the verdict is in on this, but what's happening? Bonds are rallying, meaning yields are going down. Bond-like stocks, mega cap growth, long duration stocks are up, and the rest of the market, the value stocks, those tied to the cycle, are down. But that was already in effect for 2 days. So I don't think the market saw too much in Jay Powell's remarks to change what it was doing, which is kind of sorting out whether this rally just needs to be digested for a little while and reassessed in terms of likely growth rates.
A few other headlines to mention. The Federal Reserve expects the economy to shrink 6.5% this year, and for it then to rebound 5% next year, 3.5% the year after. Expects the unemployment rate at the end of the year to still be elevated at 9.3%. David Zervos, what is the appropriate investor takeaway from Chair Powell?
Sorry about that, Sarah. I was on mute. I think the appropriate takeaway is really twofold. You have, and you guys sort of said this in the beginning,
ADMA is popping.
A message which is pretty bleak on the economy, and frankly, an SEP, which you just described the numbers of, which is quite bleak. At the end of 2022, we still have an unemployment rate, according to the Fed, of 5.5%, which is well above their NIRU estimate. So this is a pretty unfriendly economic forecast. But then you have a Fed chair that's telling you, hey, I got you. I got your back. I'm going to do more if you need to. I'll do whatever it takes. And so I think the market's got to tussle with those two things. I came away from the press conference, though, feeling pretty good, even with the very downbeat forecast, which may or may not be correct. As Jay said, we should all feel pretty humble when thinking about making these forecasts, and also humble about the ability of the Fed to create inflation, which is something that they're very concerned about and we're concerned about going into this. So I think the overwhelming story is not the economic outlook. It's that the Fed is there with programs, with everything that it's put in this to make sure that if we do have a second wave or another bout of weakness,
why do some of these ETFs? I have no idea. Levi the Gazelle.
Sarah,
I fucking really, lost a fat chunk today. Don't listen to me.
Move back up, not huge, but it definitely seemed to react to it. On the last question was when someone tried to ask him about, do you care about stocks all being up since the lows, since that March date? And he said, we don't really care. We're not here to sort of call a bubble or not a bubble. We're here to make sure there's maximum employment price stability. So really not sort of
I thought it was a little defensive, actually.
I agree with you. I thought that was a pretty strong comment for the stock market. Like, don't kind of give us a whole bunch of flack for sort of doing our job, which is trying to get jobs back and get inflation back to target. And, we're not really going to get worried about some nebulous concept of financial stability as it relates to where the equity market is.
Steve Leisman, you were in the virtual room, as it were. What was your main takeaway?
So I'm a little bit more strident than your suggestion there, Wilf, when you use the great British phrase slightly less.
What are you talking about, options new?
On the economy. I feel like Powell was kind of trying to take the market a little bit by the lapel and shake it and say, what are you guys thinking? And there's this outlook here that everything's going to be fine and we're going to get right back to where we were and get back quickly. And Powell was given, I don't know what you want to call it, a half a dozen chances to provide a rosier outlook, and he did not embrace it. In fact, he went, I thought, further than he had in the past in saying, look, even when we bring people back, there's going to be many, many millions of people who still don't have jobs and for whom there won't be jobs for. So the essential, I think, dichotomy that's out there in the market right now is this. Can you embrace the Fed's low rate forecast and yet not embrace the idea that for 2 years, at least from now, there will be a large output gap in the economy, elevated employment, and you're not getting back to where you were for at least 2 or 2.5 years? That's the Fed thing together. Now, I think that's been a profitable trade. I just don't know how long it remains profitable if the numbers start to undermine this idea that, hey, we're going to come back quickly and everything's going to be, hunky-dory in a couple months.
I want to buy stock. Don't know where to
Michelle
start.
Meyer,
How do I start?
How do you react to that? The
You
disconnect
start
between
by
the economy and the markets, and the fact that
finding us on
Powell
Twitch. You're going to want to
remained pretty
open
downbeat, as Steve
an
laid
account
out
with a
on the
broker. You're going to
economy
want to pick a
in
broker,
number of
whether that
ways.
be Robinhood to start or TD Ameritrade like this. And you're going to want to buy
so
a
I
dividend
think Steve is
stock
spot
that
on.
you
I mean,
understand.
Fed Chair Powell made it very
Look
clear
up
that there are a
dividend
lot
paying
of
stock.
challenges
Oh my
ahead
God.
for the economy.
What was that?
The
The stock guy is now hosting me?
Look, we could have
Dude, brother,
but then,
thank you so
certainly
much.
There could be problems thereafter.
Oh my God.
Michelle, I wanted to ask
The
what you
stock
thought the
guy
chances
is
were
rating.
that inflation could surprise to the upside. I
Dude,
mean,
thank you
clearly
so
they're
much. I
committed,
appreciate
or
it.
in their forecast at the moment to
Let's
low
fucking
rates
go,
for a long
chat.
time.
My
But,
God.
you look at the money supply growth over the last couple of months. Is it possible inflation?
You guys are awesome, man. Thank you, the stock guy. I need to get back to you. I did get your email. I will get back to you
really
shortly, brother.
Interesting. That was
I'd
one
love
of
to
the
work
key
with you, get some
takeaways
stuff
to
in your
me
hands
from
to
the
play
Fed
with.
today is
Thank
that
you guys
the
for
Fed
stopping
is
out.
very
I'm a
convinced
horrible day
that there's
trader.
going to be a
I lost a ton
disinflationary
of money
environment
today.
for some time. I mean, look at the
We're just
SEC
chilling. We're
forecasts
here every
below
day. We're playing a
2%
little poker
through
to
the
finish the
forecast
day.
horizon. The way
Yesterday
that
we
Chair
won an
Powell
$8
talked
tournament
about
that
the
gets us
inflation
into a $1
backdrop.
million tournament that's later this week on Sunday. So we'll be playing a $1 million guaranteed tournament that has a $265 buy-in. Yo, did you know the stock guy is sponsored by Beauty Rest? What? That's dope. Endo, what's good, Endo? Man, I really appreciate that raid. That's what's up, dude. Thank you so much. Thank you so much, the stock guy. I hope all's well out there, brother. Twitch is messing up. Hit the follow button if you're new here or something. It doesn't say we have any new. It doesn't say we're still at 29 viewers. Like what? We get a raid from the stock guy? I know there's thousands of people behind that. And thank you for the biddies. Crest Love, thank you for the follow. I appreciate it so much. There we go. So there are people out there. It is real. That's what's up, guys.
Because ultimately, we're in a situation where you can't have people thinking that it's going to be rosy down the road. I mean, there's a reason why interest rates, he said, will be kept low. And not only that,
Probably rigged it like marbles.
Thinking about raising rates. So that should tell you something. So as investors, I think right now you have to have a view. And this is the stock market, and you have to decide, okay, am I willing to lose? And if I'm not willing to lose, should I be playing? And, you know, we're seeing a lot of retail investors now getting involved. We've seen the spike in whether it's the E-Trades of the world. And
I was in the stock. It seemed like it rated somewhere else. I came here on my own. Oh, dang it. QRS Love. We appreciate it. We appreciate it. Well, no worries. We love it. We love the love in the chat. That's all that matters, dude. The stock guy's a good dude.
Institutional investors that know what they're doing.
Viewers are good people.
Protect are people that are out there right now that are saying, oh, the stock market does nothing but go up, because we all know that that's not true. And so, you know, I thought it was very prudent of Fed Chairman Powell to outline the potential risks and potential problems that we may see as we move forward here.
Endo came on his own.
21 states with COVID now.
You guys are awesome. I appreciate
spiking
it.
again. I mean, you cannot
I hope everybody had a much better day than I did. No
No
mattress coupon required.
Is in a nutshell.
Hey, I'd love to be able to give you a mattress coupon.
With it, remain diversified, and understand your risk tolerance.
Courtney Gibson, Michelle Meyer, David Zervas, Steve Leisman, thank you all for your take on Powell. Joining us with more reaction by phone right now, Mohamed El-Erian, Allianz Chief Economic Advisor, former PIMCO CEO. I saw you tweeting, Mohamed. I said, get him on the show. He sounds a little bit critical of Fed Chair Powell. What's your reaction?
So I think a couple of things, Sarah. First,
nothing but positive vibes, positive vibes. Even if we got wrecked today.
The key issues that the market is thinking about. And you saw that in the reaction of the market. While I agree with Mike Santoli that the final verdict is not in, you saw the market go up on the statement and go down during the press conference. And that's because the marketplace wished for more information. The second thing he sidestepped was the disconnect between the real economy and the financial markets. And that's important, not if you're buying assets that are covered by the Fed.
We just need to pour in the momentum.
But if you're buying assets that are not covered by the Fed.
You promised yesterday we're going to be green days.
It opens it to criticism.
I was hard wrong.
That has been fueled by how
Way
slow
wrong.
how long it has taken them to get the Main Street
Super
lending
fucking
program
wrong.
there. So that's why I was more hesitant than others about
fucking wrong.
The statements that were made during the press conference.
Mohammed, I wonder what your take on the
Massively
US dollar is
wrong.
at this stage. I mean, clearly we've had unbelievably low rates.
We're
and
going down
negative
together.
rates,
No
in
more.
Europe
ETF
and
buying
Japan
only.
For many, many
I'm
years.
not playing
But
that game
is
every
this
day.
sort of
I'm not
change
doing
in
that.
tune
No
from
way.
the Fed more of a surprise and going to have more of an impact on its currency if we do now see rates incredibly low for the next 2 or 3 years?
So I think three things.
We're going to buy 100 shares of ETFs and sell covered calls. What's the cheapest one we own?
And the Fed is not ruling out negative rates, which is interesting. Neither is it ruling out yield curve control. So that's one. Two is that while Europe looks at a more negative outlook for this year, there's concern that the U.S. may get stuck in a low-growth equilibrium for longer.
VSDA.
And
What
that
if
is
we?
also
What
happening.
if we take
And that
VSDA
has an impact on it. And third,
get it to 100
people
shares?
are also looking at the likely flow
doesn't
of foreign direct
have
investment. So all that is coming
options.
in, and,
Okay,
and I
what's the
think
next
that
one?
that's why you're seeing the dollar under pressure.
SPHD.
Mohammed, thanks so much for joining us.
Options.
Thank you.
Up next, the airlines take a dive. Grubhub looks towards Europe, and Starbucks warns of a multi-billion-dollar revenue hit.
Very
Those stories
little,
and much more when we take you inside the market zone. We have just 18 minutes left of the session, and we're currently flat on the S&P 500.
There's very little options to really play on them. Which is why you want the SPY, because you can sell these crazy ass options. No, I'm saying selling options. Like, I need to get 100 shares of the SPY and then just sell options to generate revenue. And see you on this, you're like, oh my god! No, my trading is done. Buying one more share of the SPY. We need to get that to 100. That's our goal now. Is to get SPY and QQQ to 100. I guess QQQ first, right? QQQ first.
15 minutes left in the trading day. We are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Ritholtz Wealth Management CEO Josh Brown here as well on a Fed day. Let's kick it off with the broader market. Stocks volatile after the Federal Reserve projected no interest rate increases through 2022. Fed Chair Jay Powell highlighting the level of uncertainty that the Fed has about the economic outlook during his monthly news conference today. Listen.
Indicators of longer-term inflation expectations have been fairly steady. The extent of the downturn and the pace of recovery remain extraordinarily uncertain and will depend in large
does look like it's going to dump into this last hour.
The virus. We all want to get back to normal, but a full recovery is unlikely to occur until people are confident that it is safe to re-engage in a broad range of activities. The severity of the downturn will also depend on the policy actions taken at all levels of government to provide relief and to support the recovery when the public health crisis passes.
Jay Powell then telling Steve Leisman, we're not even thinking about raising interest rates. Josh Brown, as an investor,
too bad after hours doesn't get us tomorrow. Seriously,
we know this market really likes low rates and QE and stimulus.
Well, as a trader, what that tells you is to be long gold. And it's no surprise that gold is one of the better looking places to be, both the equities and the metal. As an investor, I think it's a more difficult question because one of the things that has coincided throughout this era of low rates is underperforming segments of the market that are either cyclical or value oriented. And if you look at Fed forecasts out a few years, which nobody believes in, but just hypothetically, let's act like they matter. There's really no rate hike in sight, even like into 2022. So if that's the mindset now that, you know, Powell's a student of history, he knows things started to tighten up too quickly in the 30s. Nobody wants to repeat that when you also have a pandemic hanging around. Then what you're saying to yourself is, okay, well, what's been working throughout the low rate environment? Look at Apple and Microsoft today. These are massive upside breakouts in stocks that had already been going up, just absolutely massive. And part of me thinks it's not even about the fundamentals of these companies. This is about fund flows and just massive reallocation into large cap growth, because when growth is scarce, people pay up for anything that has growth. And we know these two names are exemplars of that. The last thing I want to point out, we seem to have had one of these reversals again for the lower price stock group, the speculator stock group, the Robinhood names, the most beaten down sectors that had this huge comeback. Those are now back out of favor, at least today. I don't know how long that will last. We did a scan. We looked at the 60 stocks in the S&P 500 that are still down 30% year to date. Only 3 of those 60 names are in the green today. So I think it's a little bit of a sentiment shift. People coming out of some of that downtrodden long trade and going back to what they know has been tried and true. And that's, you know, large cap tech. XLK looks phenomenal in general.
Mike, to what extent do the markets welcome the level of rates being low versus being surprised by the extent of dovishness from the central bank, which I guess is going to be hard to surprise to the downside in the years ahead?
XLK, that's what Streamer Girl said.
The bond futures markets were already telling you that it was going to be zero out there. I don't think that was too much of a surprise. Yes, Powell was definitely vociferous in emphasizing the downside risk and how it's going to be a hard slog. But by the way, rates were at zero for 7 years the last cycle. Okay, we didn't get to 6.5% unemployment, which is the Fed's projection for the end of next year, for 4 years after the unemployment peak last. And my point is that stuff doesn't necessarily, like, the stock market doesn't mark to market how much of a struggle we're getting in the improvement of the economic conditions for every tick. If it's improving, the market can find a way. And those bond stocks, basically, Microsoft and Apple, they're bonds. They're long duration cash flows. Bonds are rallying, so they're rallying. And so, yes, it is a little bit of a spillback from that value trade, from that laggard trade. We'll see if it lasts. The market was already overbought, a little bit stretched. Too many stocks had gone too far too fast, and we've been reconciling that for a couple days. So we'll see if this is just a kind of a stealth correction, or if in fact it's unstable underneath and has to have more of an index retreat as well.
Now, as Josh said, that recent rally in some of the underperforming stocks has paused, and airline stocks therefore taking a leg lower today after JP Morgan's top analyst, Jamie Baker, said the recent run-up can't last much longer, downgrading JetBlue to underweight, United Airlines to neutral. Baker also lowered revenue forecasts for the major airlines for the second half of the year. Delta, meanwhile, expects second quarter revenue to decline 90% year over year, with capacity down 85%. However, Fundstrat's Tom Lee highlighting in his note that TSA passenger traffic numbers are trending towards hitting pre-COVID levels by August. Josh, I guess with the airlines, maybe they started to answer.
No way. No.
Let me make my
point. There's no way.
And then I'll get to my question, even though you've already answered it. But I guess they started to answer the short-term question of whether they'd survive 2020. But there's still huge long-term questions about the impact of things like work from home, on business class travel, and the rest of it.
I saw the same chart Tom saw. It was in the Wall Street Journal's sober look, daily chart fest. And what they basically did was they took the bounce that we've seen over the last 2 weeks and they extrapolated it out, 12 months. And if we go in a straight line in the recent bounce, then yes, you'll get back to pre-COVID levels by August. I would say take that magical creation and throw it out. I don't like those type of extrapolatory charts. So it would be nice if that were true. It's very, very hard on the ground to imagine that being realistic. So
why is ADMA
not
getting
necessarily
wrecked?
A call on the airlines. I would point out the Jets ETF is where all the action is happening. We talked about Robinhood traders and people that just said, "Oh, I've heard of Delta. I can't believe it's down 80%. I'll take a shot on it." That trade worked. You can laugh at it if you want, but I don't know that there's enough leg to that trade to continue on. So the fact that they're rolling over, look, I didn't buy them at the bottom, so it's not like I was all over that bounce, but I've been skeptical of it, and I remain so.
We're getting some news here, guys, on a potential treatment option against COVID-19 from Eli Lilly. Meg Terrell with the story. Meg.
Hey, Sarah. Well, we know that Eli Lilly started human trials of 2 of its potential antibody drugs for COVID-19. This is an entirely new approach to treating the disease. The first drug's actually designed to do that. They started human clinical trials last week with 2 of those. The chief scientific officer of Lilly telling Reuters in a story that if all goes well, these drugs could potentially get regulatory approval by the early fall. So we'd have to see how those studies go, but they say if they are seeing that by late August, for example, they're preventing hospitalizations and more severe disease, that this could be enough to potentially get them regulatory approval, which would be ahead potentially of the timelines we're talking about for vaccines. And we know that after talking with Regeneron's chief scientific officer on Friday, they are also planning on starting their human clinical trials.
I think
of their
so,
drug this
Efficient.
week. So an important class of medicines that could advance quickly
I got
if they
wrecked
do well
today.
in human clinical trials, guys.
Super wrecked.
Yeah, a lot of people hoping these antibody therapies can help bridge us to the vaccine. Meg, thank you. Meg Terrell. Want to hit Starbucks under pressure today after reporting it expects to lose more than $3 billion in revenue during its latest quarter. Kate Rogers with the details. Kate.
Hi, Sarah. That's right. In that 8K this morning, Starbucks projecting that loss of about $3 billion for Q3. Also projecting adjusted EPS loss of between 55 and 70 cents a share in the quarter due to the impacts of COVID-19. Other business updates here. In the U.S., 91% of stores were open at the end of May. Comp store sales have improved from being down 63% in April to down 43% in May. In Q3, the company expects comps to decline between 40 and 45%. The company also saying it'll open 300 new stores in fiscal 2020. That's down from the original projection of 600. The vision for each large city in the U.S. is to have some mix of traditional cafes and pickup locations. The strategy here really aligns with the rapidly evolving consumer landscape and preferences that we've seen emerge as a result of the pandemic. They've kind of sped up their plans to make these changes, and they originally were projecting them to happen over the course of 3 years. Now they've shortened that to about just 18 months, guys. Back over to you.
Okay, thanks so much for that. I want to touch on Wells Fargo. Shares sharply lower, about 9% lower after forecasting higher loan loss provisions in the current quarter. At an investor conference, the Morgan Stanley conference earlier today, CFO John Shrewsbury noted net interest income will decline more than 11%. The point about general outlook is in contrast to some more optimistic tones from some other bank executives at this conference over the course of the week, including Morgan Stanley's James Gorman, of course, who joined us yesterday. Clearly, all the banks took an extra leg lower, Mike, during the Fed meeting on the prospect of lower rates for longer and the impact that'll have on net interest income.
Everything is
Wells
fucked
Fargo,
here.
though, down 8.6% today, down 45% or so year to date, compares to the KBW Banks Index down 6% today and 27% year to date. Continues to suffer disproportionately. And does sort of stand out, whether we're talking today from the CFO or 10 days ago from Charlie Scharf at a different conference, on a different tone from the rest of the banks that I do think have been striking a more constructive tone on the economy compared to what we heard from Jay Powell today.
Yeah, it seems as if Wells has just not been able to sidestep whatever challenges that has been thrown at the industry. They get their full helping of it without having a lot of the offsets in some of the faster growing parts of the business. So it seems like the market's punishing it on a day, by the way, where the overall regional banks index is down, 6% or more. So it does seem as if people finding an extra reason not to like Wells on a day when it was already not looking great.
But still, for the month, Josh Brown, I mean, the banks, the financials have had a nice comeback, up about 8%. Definitely taking a step back today and over the last few sessions. Where do you stand? You haven't been a fan.
Where do you stand, Josh? Well,
yeah,
you're
I
fucked.
own JP Morgan. I'm much more interested in like the payment space and fintech and credit cards than I am in traditional banking. I think they can be okay though, because by taking these loan loss reserves and putting pressure on earnings in the near term, they're doing what they should be doing in an environment like this. We all know that a lot of the extraordinary stimulus that the Treasury and the Fed were able to advance to the American consumer, it's not forever, right? So you have a lot of things coming up in July that just won't be the case anymore. And when you see the spending drop off that directly is a result of that, you say, well, is Congress going to come back and do more? Because these are households that spend every dollar they get. So when you give them stimulus, they go out and spend more. It makes the rebound for credit card and debit card spending look better than it would ordinarily be. So what is
Why
the real
is
level
ADMA
of consumer
tanking?
demand X these programs? Well, unfortunately, we might find out this summer. So you have not seen a wave of personal bankruptcies. You just haven't. And I hope we don't. But I don't know that 3 months of direct deposits and stimulus and then having that go away, like I don't know that we really know what the real amount of spending is in the economy. And the banks they're the first in line to get either the benefit or the hit. It's just the reality of their business. So any bank that issues credit cards is going to have to face the same questions. What happened? I thought we were rebounding.
It's getting destroyed.
We are just about 2 minutes left until the close. Dow's down 230 points. Mike Santoli, what are you seeing in the internals?
A lot of softness, Sarah. It was all day was the case before and after the Fed. 2 days in a row, you saw the average stock down significantly, and therefore Brent being decidedly negative. You see here something like 5-to-1 downside volume in the New York Stock Exchange. Similar story if you look at the equal weighted index of Russell 1000 stocks. That's pretty much all big cap stocks equal weighted over the last 2 days against the QQQ. So that's mega cap growth, the NASDAQ 100's rotation back into growth. The volatility index, interestingly, or maybe understandably, after the Fed meeting has gone lower. That often does happen. The Fed's a known possible volatility event. Plus, you have a lot of offsetting currents keeping the S&P dead flat. That is a formula for the CBOE volatility index to give up a little bit of that premium.
We've got just over 1 minute left of the session. We are selling off as we approach the close. The Dow is now down 250 points. The low of the session, though, you can see during the middle of Jay Powell's press conference was down about 334. We rallied briefly, but selling off, as I said, into the close. That means down nearly 1% on the Dow. The S&P's down about 0.4%. The NASDAQ Composite still holding on to significant gains, 0.75 of 1%, 30 points or so above the 10,000 level. Set for another record close. On the S&P 500, only one sector high. That is technology.
Horrible day.
8%. Otherwise, the other 10 sectors.
Biggest losing day I've ever had right there.
Near the bottom. Banks also right
Biggest
down there.
losing day I've ever had right
down
there.
some 6%. Not enjoying Fed Chair Jay Powell's commitment to lower rates for longer. Lower rates, of course, also hurting the dollar. That's down 0.4%. The DXY below 96 with a 95 handle for the first time in a little while. Oil is flat, but gold enjoying a nice rally during the press conference and since is up 1.5% for obvious
Dude, seriously.
At the close, we are down a 4% on the Dow, 280 points.
Rand's account. Oh my god. Bye-bye, soldier. What a rough day. Rough fucking day, dude. Alright, chat. That was a rough one. Do you play Tarkov, Efficient? Do you play Tarkov? No. Knowledge. 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 Thinking about what I want to do with the evening. I think Dee Dee has school this evening. I kind of want to play some Tarkov. Where the fuck is Poker Chef Jeff? On such a bad day. I can't play Tarkov without somebody though, because I don't know what I'm doing. But he made me download the shit. So I'm interested. Oh, look at it dropping, dude. We should have just kept our put. Could we had 10 puts, dude? We would have been fucking rich tomorrow if we would have kept our puts. God. Locked up our account. It's a rough one, chat. It's a rough one.
The other projections we've seen out there lately, and with that you have a recovery in the labor market of more or less about 30 months. That's average. So it shouldn't be too surprising
Should have just kept my puts.
We have a 30-month recovery in the labor market. I think that the softness in the cyclical sectors has just a little bit to do with how far they had run in the hope that we were going to bounce back quickly. But I would have some exposure there because in the end, the direction of travel is upward.
Josh Brown,
what the fuck is BVN?
What are you buying and selling these days after the already incredible run we've had for the market?
So nothing specifically. You know,
the SPY does trade after hours.
We have this sense that
SPY trades 24/5
in a bull trend, just purely on technicals.
Look at the SPY tanking
which is not a
in
call on the
hours.
economy. But when you look at longer-term moving averages, you look at the S&P, you look at the Nasdaq. It's undeniable that they're in uptrends just purely on math. Now you can say, well, here's an asterisk for this because
Peruvian
they're
gold miner.
Here's an asterisk for that. All they've done is regain what they've lost. That's the stuff that's good for commentary, but it's not really important. What is important is
Trading View after hours, you know, like locks it in. Like, see, it's locked in at 319 up here.
Clearly, people are no longer discounting that there's going to be an ongoing emergency. So now the question is, well, how much of the economic recovery has already been discounted? And I know we've seen wild moves in the economically sensitive sectors, but these are wild moves from almost bankruptcy level valuations in some cases. So I don't think that we've really got the entire recovery priced in just yet. And by the way, big recovery in small caps, they're still not in an uptrend, technically speaking. Mid caps, just barely getting there. But then you look at some areas that happen to have massive market caps. Semis are pennies away from all-time highs. Some of these are very big stocks. I'm in Nvidia, for example. It looks ridiculously good right now. It's an enormous company by market cap, and it's so much bigger than airlines and retailers and all of the things that we give equal time to. So it's like, do we have this market-wide recovery? And does it have to continue every day? Not really. The big stocks with the big
no
market caps
options stop.
soldier
Options
higher.
stop trading.
Big picture, that's what's important.
Options stop trading. So now you have to wait till tomorrow.
Now, over the past week, before today at least, we've seen a massive run-up in cheap stocks like Hertz, Whiting Petroleum, and Chesapeake Energy, despite Hertz and Whiting declaring bankruptcy during the pandemic, and rumors that Chesapeake is looking to file for bankruptcy as well. Mike, you've been taking a look at the rush into some of those low-cost stocks since the major trading platforms went to zero commissions.
Yeah, exactly. Low-priced, not really cheap necessarily on a value basis. If you look at this chart from Bespoke, it shows that back in October is when Schwab went to zero commissions. Basically, the whole industry went to zero commissions. The first bar for each decile of price, the first yellow bar is the performance of the prior year of the stocks, and then the second bar is what they did since October through yesterday. So obviously, you see this just massive move in the very, very lowest price stocks. So clearly, there's this relationship between zero-cost trading. You have small accounts that can all of a sudden just start flipping penny stocks or quasi-penny stocks, and that has been something that built into this this little sideshow of a lot of these speculative names, bankruptcy or not, that have worked very well. Now, they've come off the boil the last 2 days. I still think it's a bit more of a sideshow than it is the story of what's happening in this market, but it's related to this idea that so many stocks were basically pummeled down to, the brink of survival in March and have come back. And I think in the course of sorting out which ones will live on from here, there's been a little bit of misunderstanding at times. By the way, the very highest price stocks still continue to perform.
It will go up again.
Bang and big cap growth.
Horrible, don't talk in caps. Horrible.
It's a fascinating chart and bit of analysis there. I guess the other angle on all of this is the huge amount of account openings that we've seen from.
I'm going to send us off to pardon my take, guys. Get hype in the fucking chat here, yo. Get hype, please, for me. Please.
It seems so far to be playing out.
Get hype as fuck in the chat.
See their margins come down
I did meet a thing called Spy Puss and got fucked, and American Airlines fucked me, and Oxy fucked me. Please, chat. Please get hype in the chat here. Alright? Please. We're going to do this again tomorrow. I'll see you guys there. It's been fucking fun.
And most directly,
please go wild when I click this raid button.
Interest off of them.
Please.
That's a mechanism to do that as well.
We also